Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, December 24th, 8:46 a.m. Eastern Standard Time. Merry Christmas Eve to everyone out there that celebrates Christmas, and happy holidays. We are basically getting to the end of the year. We've got a couple days left of this trading year. Today's going to be a half day, so we will have no market close, just the market open. And I think the day ends out at about 1 p.m. later today. And I think everyone is like ready for the day to for just like the year to end. I think everyone is super ready for this year officially to come to a close. I can even feel it, dude. It's just like even like there's not a lot of stuff going on in the market. Everyone's tired. It's Christmas Eve. And I think people are ready. It's been a very strong year. It's been a lot of this year. I had to deal with a lot of volatility, but nonetheless, I think now everyone just wants to end this out. It is kind of crazy that we're 6 days away from the end of the year. Like just that concept alone, being so close to the end of the year, it's wild. But we are here. So we've got today. Tomorrow is obviously Christmas, so we are going to have markets that are closed. Then we will have the 26th, the 27th. The 29th, and that's it. So we got 3 trading days left after today. So not too much time for a ton to happen in the markets, but we got these 3 days left. And this is typically when you see a Santa Claus rally. We talked about some stats yesterday, 1.48% on average in this 5-day stretch towards the end of the year. And so hopefully we're going to see if that ends up happening. Thank you, everybody, for being here. Good morning to everybody. Let's start off with this. Where are you watching from? Put it in the chat. We'll do that today before we get started and get through some of the news. Nothing too crazy happening in the markets. Some stuff here. There's some headlines, but overall, it's the end of the year. I think people are tired, and we're ready to close out the markets. So, yeah, let's see where everyone's watching from here today. And then we'll keep going from there. We got Denmark in the house. Beaver from Denmark. We got Vegas. We got Utah, Louisiana. Mike from Louisiana. Arthur from South Tampa. Grant from Scotland. I love it. Pedro from Portugal. Kevin from Maine. Jen from Florida. Rhode Island. Chad from Riverside, Cali. Mahir from my couch. The best. Who's watching it on TV? How many people watch the market open on TV? There's some things on YouTube I watch on TV, but a lot of it's like my phone and my laptop. But TV is always a fun experience. You just get to sit back and let the TV play. We got Portland, Oregon in the house. We got Missy from Saskatchewan. I love that. I love Saskatchewan, dude. Just saying that. It sounds like Deutsche Bank. It's one of those words that are fun to say. Saskatchewan, Deutsche Bank. So I love that. Missy, thank you for being here. Antonio from Portugal. We got Andy from London, England. We got some people saying they watch on the TV. I love it. That's awesome. TV's awesome. Yup. Piscataway, New Jersey. Gene has me on his TV. I love it. Dennis, South Korea. I'm studying the law for my exam while listening to you. Are you in law school? Dude, law school is a different level of preparation and energy. You got it. Yeah, law school is wild, bro. The amount of case law you have to understand for law school. I haven't spent time studying for anything since college, and that was more than 5 years ago at this point. So the idea of sitting down and studying and then just like I guess I study about markets, but it's not like the sort of memorization type of studying. You have this anxiety to do a test tomorrow. My anxiety is I guess I have to talk in front of a lot of people about a certain subject, but it's not the same type of anxiety. But for the actual studying of like a book and like trying to pass a test, it's been so long since I did that. My daughter goes to Stanford Law School. Wow, your daughter's probably very smart. That's not easy to get into Stanford Law School. That's amazing. We got Sweden in the house. I mean, you study the market daily, correct? It's just, dude, I don't think I was a good test taker growing up. I wasn't the best test taker. Because I feel like I don't know. I think I was decent at studying, but a lot of it was just memorization and regurgitation, especially in the classes that I had. So sometimes when I actually have to take the test, I don't think I executed that well. I guess my test every day is talking, and that I have way more fun doing than actually preparing and writing stuff down. But it's been a while since we just spent a ton of time studying. Sweden, North Carolina, of course, we got Massachusetts in the house. All right, there you go. We got the entire world or people from across the entire world watching here today. All right, so let's get started on the open itself. See if Carp needs any law interns the next time you see him. Dude, it was funny. Carp hired someone on the spot when I was at AIPCon. This a random girl walked up and he went for a walk with her. And then she came back and I was like, what'd you guys talk about? And he was like, he tried to like make me quit. She was like, he tried to make me quit Stanford. She also went to Stanford a year early to work at Palantir because she's like, you know, she's like she's super cool, right? And she's like good at her craft and all the stuff. And Palantir doesn't care if you graduate college. They just want the best of the best. So it was kind of funny. He is constantly recruiting. And you never know. You might just be walking through an event and then he asks you, you know, do you want to work here? And then you get the whole thing started. All right, cool. So I think we'll get into the market open right here. In terms of top line headlines, there's nothing that crazy. Let's go into the pre-market and see what we're working with. I think let's start off with Palantir. We're holding 80, which is pretty exciting. It's pretty exciting right here. So Tesla's at 430. That's up about 1.3%. That's amazing. You got Bitcoin, 95,675. Bitcoin up 1.49%. Nice little green candle. Kind of happening in the past 10 minutes. We got this green candle. So really recent. I think we were at 94 pretty much all of this morning. So that's super bullish for Bitcoin. Palantir right here is basically flat to $80.69. We actually closed at $80.69 last Friday. So 2 consecutive days of closing above $80, which is great for Palantir. And literally closing at the exact same price, which is $80.69. Again, we've got 3 days left of the year in terms of trading. Does Palantir fall below 80? It's very possible. But could Palantir normalize staying above 80 in the next 3 days? Yeah, I think that's possible as well. I mean, we did it 2 days in a row. The media coverage, we have got more media coverage on Palantir in the past 2 days than we have seen in all of 2022. It's kind of insane. I was talking with Chad about this yesterday. I was like, dude, like 3 years ago, this was like everyone on Twitter is talking about Palantir. There's all these random accounts giving their opinions on Palantir. Robinhood right here up 2% as well in the pre-markets. And in 2022, there was just none of this, bro. It was like no one cared. And I guess for good reason they didn't care, right? There was nothing to really care about unless you were super into it. But it is just crazy the amount of media attention that is compounding. And obviously that's very, very bullish for Palantir. So you got Palantir above $80 right there. Rocket Lab's up about 0.5%. Grabs up a little bit in the pre-markets. NVIDIA, 140, baby. 140 above the pre-markets. When does the market close today? I believe 1 p.m. 1 p.m. the market should be closing. Maybe it might close like 3 or 4 p.m. in terms of after hours, but the actual market closes at 1 p.m. Meta right there up above 1%, 604 in the pre-markets. Costco's up a little bit. The Qs trying to get back to those all-time highs, 524 in the Qs. S&P 500 is green, 595. If we can get to 6,000, that would be incredible. You got Amazon that's up a little bit. Mercado Libre's up a little bit. Nubank's up a little bit. Carnival Cruise is up a little bit. Entire market's relatively up. Archer's up about 1%. Nothing too crazy. Not a ton of red that I'm seeing. MicroStrategy, we'll talk about them. We've got some updates on them. They're up 3.54%, and that's really because Bitcoin is up, and that's helping MicroStrategy. Then you got Tesla right here up 1.3%. Oh, SoFi. I think SoFi's at 1570. SoFi's at 1569. There you go. SoFi up 0.38% as well. So SoFi not having too bad of a day. 1 p.m. Eastern, 1:15 for indice options. Okay, so 1 p.m. Yeah, 1 p.m. is when the market closes here today, Eastern. AMD, yeah, let's check on AMD as well. AMD was up 5% yesterday. Wow, another 2.4% on an AMD. There you go. Yeah, look, this is what tends to happen towards the end of the year. A lot of these stocks that hopefully put in a bottom should get some more capital coming into them. We did see money market funds last week lose $20 billion, which is important because money that hopefully left those money market funds went into compounding assets instead of, fart coin. I think they hopefully went into AMD. And that's just more money coming into equities, which is good. And it's likely overall bullish for the broader markets. Good morning from Florida. Neville, good morning. Thank you for being here today. Peter, Merry Christmas Eve to all. Merry Christmas to you, Peter, as well. And thank you for all being here today. Andreas as well. Merry Christmas and Merry Christmas Eve. Merry Christmas Eve to you as well. Today, I actually want to watch a Christmas movie. You know what I want to do today? I want to watch a Christmas movie. I actually am catching something in my throat. I don't know if you guys, I didn't want to say anything, but I think you guys can hear it in my throat. Last night, right before Robinhood Weekly, dude, I almost knocked out before Robinhood Weekly. I was sleepy, dude. And then I randomly woke up and I had like 20 minutes left before the show. And as soon as I woke up, I could feel it in my throat. I was like, oh man, this is either I'm catching something or it's definitely maybe a little infection. So I'm kind of hoping to sleep it off today, relax it off today. I haven't been sick in a while, and now that I'm saying it, I'm probably gonna be sick. But like, I really haven't been sick in a while. It's been like almost a year and a half since I've like had a fever. So I am hoping to avoid that. But I want to relax this Christmas Eve, and I hope everyone else takes some time to relax this Christmas Eve as well, and just chill and not stress a little bit too much. The Grindr jokes are hilarious, but it has nothing to do with Grindr. It has to do with, by the way, dude, yesterday after hours, Grindr was at like $18.50, but it was a bug. And I was like, what? You're at $18.50? Where are we at right now? We are at $17.81. We're up 0.5%. We're trying to see, you had that wick up to $18.56, which was not bad yesterday. So hopefully we're getting into the 18s. But no, I don't know. There was a friend that I was with on dinner on Saturday at my mom's dinner party that also was like really sick right now. And I was sitting right next to him. So that might be the reason. Or the reason is just it turned super cold in New Jersey and it kind of hit us out of nowhere because it's like, dude, it's snow. I woke up this morning, it looked like a winter wonderland outside my house. It's snowing. Like my Tesla has snow for the first time. We'll cover it on top of it. Like everything here is getting a lot colder now. Just Paul says, good timing with Squid Game coming out and potentially being sick of it. I would love to take Saturday off, or not Saturday, the 26th off and just watch Squid Game and not do anything. But I love the market open more and the market close. So we will be live no matter what, and we will have our shows. But I'm excited for Squid Game. I'm excited. I don't get excited. I really hope it lives up to expectations, dude. You guys know me. I'm excited, especially about shows or movies. This is the one that I'm looking forward to. So I hope we get something there. I really, really hope. And if it sucks, I'm gonna be honest about it. But I hope it doesn't suck. Okay, let's get an update on Apple. So I didn't go through this headline yesterday, but it is a real headline. Apple is, Ring, the bell on your house to like record everything. Apple's working on a smart version of that. So this is Apple's next frontier into product innovation. So let's get an update on that and analyze if that makes any sense.
Know someone with the detail?
I got a guy. I got a guy who can do your smart.
Got a guy who knows a guy.
Yeah, exactly. But look, let me tell you what's going on here with Apple. They're trying again with the smart home after failing to make a meaningful dent in that space over the last 6 years or so since it started dabbling around there. Apple already supports some smart appliances right now through its HomeKit platform, but that's kind of a sideshow to its main businesses like iPhone and services. HomePod is there right now for voice control, of course, playing music, and then iPhone and iPad and various other apps for just controlling from your other devices. And reports now say, though, Apple's going to take another crack at this space just as the smart home market is due to grow again next year. According to research from IDC back in September, they said they're expecting over 930 million smart home appliances to be sold next year. That would represent more than 4% growth of what's expected this year. And Apple is expected to play a big part in that, according to some recent Bloomberg reports. It's going to start with a smart home hub, which kind of sounds like an iPad that you stick to your wall. And it had some limited use cases, letting you control your appliances, do some FaceTime calls, things like that. Apple also reportedly working on a new version of the HomePod for voice controls. Ming-Chi Kuo, he's the analyst over at TF International Securities. He said this fall, Apple's also working on a smart security camera that would compete from those like from Google and Amazon's Ring brand. Bloomberg also reporting Apple's working on a doorbell that would unlock your door automatically as you approach, using that same facial recognition technology you're used to using to unlock your phone. Those latter two gadgets, by the way, sound a bit further off, but the point of the smart home platform is to work with appliances from all manufacturers, not just within Apple's own ecosystem. And Apple, by the way, has been laying the groundwork for that ahead of this new smart home push. Back in 2022, it partnered with Google, Amazon, and a couple other big tech companies to work on something called Matter. That's a common standard all these smart gadgets are going to use to talk to each other. But still, guys, this is not going to be a big business for Apple, at least not in 2025. iPhone sales are still the biggest thing we're looking at, still showing lackluster growth expected here in the December quarter. But services, that's growing like crazy. One option here for Apple, though, using this smart home push to leverage more iCloud subscriptions for storing things like security video on top of all its hardware sales, guys.
You know who I'm going to get the smart hub for?
Who?
2 people.
Okay.
One, Joe Kernan, because I think he would enjoy it.
I don't know.
And the other
I don't like people listening to me.
is Donald Trump. Because Donald Trump,
Why?
Me and
down in
Trump.
Mar-a-Lago,
That's kind of cool.
To automate everything?
no, he loves to sit with his iPad. You've never seen him?
Okay.
He sits at Mar-a-Lago with the iPad and plays different songs.
Oh, so
Music in Mar-a-Lago
Okay.
from his iPad.
So he's got his Spotify hooked up to it.
Totally. So
Okay.
I think this guy, I think the president
But
in
why-
the White House should have a smart hub on his desk in the Oval,
Sure.
and they can play music.
Hook up get that White House garage door opened and
All
things
of
like that. Yeah. I just don't see the point other than a regular iPad can already do all this kind of stuff.
Well,
it's
so that was what I was
interesting.
gonna ask.
How do they
How-
position this?
How is it going to be that different? Is
Right.
it going to be cheaper? Because I do think
I
you're
would
gonna not
presume
wanna-
it'd be cheaper. You would
But then
presume-
the secondary effect is if you can't charge a massive premium for it, I always thought that kind of hardware is a low margin business.
It probably is. I mean, they can use a lower end processor. They can do a number.
It's a weird one. It's a weird idea right here. So again, Apple's developing a smart doorbell with advanced facial recognition to unlock doors via Face ID. I actually think Thomas's comment in the chat is not that crazy. If Apple were to partner vertically with home builders, potentially even making the homes themselves, again, it's a little bit of a stretch, but like an Apple home, I mean, we have an Apple phone, an Apple TV, an iPad, a MacBook, yada, yada. Apple's looking for their next thing to brand. Maybe an Apple robot will be in the works, and we've seen reports about that. Obviously, an Apple Car didn't end up happening. An Apple Home, I think, as crazy as it sounds, if it was yeah. Have you guys ever seen that movie Smart House on Disney Channel? Is that what it's called? Smart House movie, 1999. Oh, see, this is where I get to show off a little bit of my movie skills, right? This is when I get to actually Smart House 1999. The only reason I watched it because it was on Disney Channel, and I watched Disney Channel growing up. But Smart House, you guys remember it, right? This movie, it was a single dad with two kids, and the entire house was like decked out. And then I think the nanny or the maid ends up like falling in love, I think, with the father or something. But the point is, the house is like super, super decked out. It was 1997. It was technology that shouldn't have been around for like a long time, and it was super cool. It was super cool, right? And could you imagine if Apple actually could deck out your house and you could walk into a room and Siri's integrated and you can just talk in the air and stuff happens? Again, the vision's not really fleshed out and I'm just brainstorming right here, but we're looking for Apple's next leg of growth. And I think Apple's looking for Apple's next leg of growth. And right now, no one really knows what it is. Having said that, Apple's hitting new all-time highs, Tesla at 437, by the way, in the pre-markets, because it's freaking Apple. And, as much as I don't love the valuation, people are going to buy this over like thousands of other companies because it's more safer to have their money inside of a universal brand that has $100 billion in cash that's buying back their stock, yada, yada, right? So all the arguments for why to be bullish on Apple, they continue to persist. But I think Apple knows they need to find that next thing they're going to grow into. And I don't think they fully even understand what that could be. Yeah, some of you guys did watch the show, right? Mark says, so you watched another shitty movie. Be proud. Dude, Disney movies were not shitty. Like maybe they're shitty compared to the movies that you guys like. But these are OG classics of my childhood. I love Disney Channel growing up, dude. I love these movies. But the point is, a smart house, I think, would be kind of cool. Jared says, I have an Android, so it's a problem. Yeah, that you can't really buy an Apple house if you have an Android. So I don't know, dude. And one thing is, as much as sometimes we all like to poke fun at Apple for their lack of innovation, I've made this argument since January that I don't think it's fair to poke at Apple for the lack of innovation because the products have become so good, and it's kind of an argument about late stage capitalism that they are like being forced. That the Vision Pro was Apple being forced to come up with an idea to sell to the market when they didn't have a good idea, but they needed to get some idea because the market needed a reason for their stock to go up. And Apple is just so universal, so big at this point, it's really hard to keep innovating. And I don't blame them. I really don't blame Tim Cook for that. I know a lot of people think Tim Cook's not the best CEO. And yeah, he has some flaws here and there, but I think he's executed flawlessly, not flawlessly, but in a pretty incredible way, even with the flaws. I mean, I think he's 8x Apple or something since Steve Jobs passed away. But to get even more innovation through the door, it's just tough when the phone is already so perfect. You got to really have a decade of R&D on something, and we thought it would be the car, but Tesla kind of ran away with that, and it would be crazy if they tried to compete with Tesla. Foldable screens, yeah, I don't think that's going to be the best idea. But we're going to see going into 2025 kind of what Apple can do. I think the upgrade cycle is going to be their best source of, again, I was talking about this with someone last night. When all your calendar data is imported into Siri, right, on your iPhone, and you have to go to California because you've got to do a meeting at 6 p.m. and then be back in New York by 10 p.m. And Siri can automatically book you a flight under a certain price point because it knows, your financial situation. It can schedule the Uber to come to the airport as soon as you land at the airport, and then it can schedule the flight coming back, yada, yada, your train coming back home to your office. When an AI agent can do all of that without you even having to ask, like instead of saying, hey, Siri, book me a flight, Siri just knows that you need a flight to be booked. And then when you go to your phone, you're not even worried if the flight is there. Your AI agent got it done, and you're just like looking at what time the flight is. That's when I think the phone is going to become the interface that we interact with the world through autonomous agents in one of the most interesting ways. And then you end up in Canada, correct? And then you end up in Canada. But I don't think we're there yet. AI is not there yet. And that's why I'm also bullish NVIDIA, because we got a lot of time to go before AI gets to the point where these agents can execute tasks so autonomously. There's AI agents in the enterprise that can do a lot of cool stuff. And we're seeing that with Palantir. But once AI agents can do stuff that we don't like doing on our phones, in our daily lives, through our emails, right? I think that gets very exciting, and it has to get done very appropriately because you have all your personal data with these AI agents. But that's where I think Apple's going to get exciting, because then the Apple iPhone becomes even more powerful, and maybe there's an argument to upgrade. By the way, my battery on the phone, it's officially dead. I'm realizing, you get to that point where you're like, oh, the battery's dead on the phone. You charge it and then 10 minutes later it's dead. We're getting to that point. It's not literally 10 minutes later, but it's getting to the point where my iPhone, Bitcoin right there, 96,000. My iPhone it's struggling to hold battery. And it's annoying because now I hate having a crappy battery on my phone. I'm probably gonna have to upgrade, even though there's zero reason to upgrade. Or I'm just gonna have to buy another 2 cases of chargers that I can switch in and out wirelessly. But that is another reason why Apple continues to get more and more upgrades, and people come and use it. Ty says Meta's glasses will eventually replace the phone. Well, we do have some news on that. Let's go to this headline right there. So speaking of new wearables or hardware devices, Meta says 2025, they are rolling out the next generation Ray-Ban smart glasses. They already have them out there, but they're coming for the next generation. They're going to have built-in displays by late 2025. The glasses will show notifications and interact with Meta's virtual assistant, aka an AI agent, offering users a step closer to augmented reality. This move follows strong sales of Meta's latest Ray-Ban models launched in 2023. The prototype of Orion, which is the one that Jensen was testing out at Meta's event 3 months ago, is still in development and years away from launch, but these updated Ray-Bans represent a practical first step towards mainstream augmented reality. I think Meta has a good shot to beat Apple in this industry. I mean, I know Apple's working on their second generation of Vision Pro. They really got to get that rollout correct because the first one just didn't work out. So it's going to be Meta versus Apple. I think Zucks is desperately afraid to lose because he already lost the platform wars, and then Apple got to control all of the access that Facebook had to advertising and the way in which Facebook would allow advertisers to use Apple products. And I don't think Zucks wants to lose the next generation of hardware that we're seeing right now. So that's going to be a big fight for Zucks and Apple, but 2025, I think that's going to be super, super important. My Chinese phone charges from 0 to 90% in under 2 minutes, beast battery. Well, I have a Chinese phone too. Apple's make this thing in China, right? So I wish my Chinese phone would charge that quickly. I mean, the charge is not that bad. It charges pretty quick. The problem is I was in New York the other day and I noticed this thing is running out of battery quick. And it's really sad once you notice that because you know it's over at that point. But that creates more upgrades for iPhones. Thomas says Palantir should release an AIP store on Android for consumer-focused AIP built applications built by themselves in the builder community. One thing I can say is I've been talking to Chad, and we were going to do that AIP workshop on my channel the other day, but like scheduling means that we have to do it in January. They are trying to figure out how to get more people to build on AIP. And there's a lot of unique ideas they have to get people, because I think what Palantir needs is to get someone to build a product on AIP, someone like you or me, and have that product go viral. Meaning it doesn't have to be like the next, billion user consumer product, but it has to be a product that is relevant to some niche of people, and that people actually care about using, hopefully on a daily basis or weekly basis. And it's in the consumer space. and it's built on Help a Founder and AIP, because Palantir now needs people that are building stuff using AIP now, build with AIP, and then the products themselves are marketing the back-end infrastructure that's powering all of that, which is AIP. So I think they're trying to find a lot of ways to get people to get more excited about that stuff, because if they can do that, then you're just gonna have a lot more people wondering what is AIP and where the value is coming from it. Bitcoin right here, 96,275. Let's get into a little bit about some of the proxies around Bitcoin. I'm using Webull for those that are asking. Webull is the platform I'm using right now to track stocks. It's free. You should be able to use it. And yeah, it's one of the best platforms to actually create a watch list for stocks. Okay, so MicroStrategy. Let's talk about MicroStrategy. MicroStrategy announced something last night, and it was pretty wild what they announced. I did not expect them to announce this. I mean, to be honest, I think everyone should have expected them to announce this, but the scope and magnitude by which they announced what they announced yesterday was kind of insane. So Bitcoin, first of all, MicroStrategy bought Bitcoin, 106,000, right? They bought 5,000 coins at 106,000, and a lot of people are, I mean, you got shareholders that are upset about that because Michael Saylor is spending money by diluting shareholders, offering money to the market to then buy the Bitcoin. He's not doing it through convertible debt. Okay, that's fine. And Saylor's been diluting shareholders for the past 3 weeks based on the strategy, whatever. Well, last night, they announced a special plan, if special is the right word. It's a special meeting for shareholders. I don't know if special is the right word, though. And they want people to vote, shareholders to vote on key proposals designed to accelerate the plan and adoption strategy that MicroStrategy has for buying Bitcoin. These are the three things that they want people to vote yes on. Amending the 2023 equity incentive plan to provide automatic equity awards for new directors joining the board. So free equity to new directors. 2, increase the authorized preferred shares from 5 million to 1 billion to expand financing options. And then, and this one was insanity. Increasing authorized Class A shares from 330 million, which is a relatively normal float for a public company, to 10.33 billion to support future capital raising. AKA, Saylor wants to do a shelf offering to allow himself to dump 10 billion shares of MicroStrategy stock. It won't happen all at once. It'll probably happen over a decade. But the fact is that at any moment when you have that many extra shares outstanding on the shelf, you can take it off the shelf, dump it on the market, and there's your money to buy Bitcoin. The problem is if you own MicroStrategy stock, your percentage of ownership will fundamentally decrease as the shares outstanding will go up. If they did it all at once, that'd be wild. Could you imagine just 10 billion all at once? That'd be insane. So look, I think this is just... I think if you believe in the MicroStrategy thesis, then believe in the Bitcoin thesis. And I think we've been relatively fair on the show. I've covered MicroStrategy, covered his thesis. I've listened to a lot of Saylor. I've tried to get in his head to try to understand how he's thinking about this. I think there is alpha attached to MicroStrategy, and I think the options market is valuable when it comes to the asset class that can give you leverage against Bitcoin. However, I do think he is really levered against it. And the funny thing about Bitcoin is that all of us know that there are these 4-year cycles, and maybe the 4-year cycle is going to be gone. Maybe this time we don't have a 4-year cycle and we just keep going higher, or we don't have this epic crash at the end of the 4-year cycle. But if we do, and we do have a ton of volatility to the downside, people are saying, well, what if the new floor is 70K or 80K and the floor is not 10K? That's fine. But if we go to 300 and come back to 70, that's going to be pretty aggressive in terms of the drop that MicroStrategy stock will experience. And the whole time that we're coming down, Saylor is going to be buying the dip. I mean, so he will be consistently diluting shareholders, even if we go from the cycle top to the cycle bottom, which this cycle bottom might be 10x larger than last cycle's bottom, which is great, but it still will be a massive decline in the share price and obviously in the asset class itself of Bitcoin. So either the cycles are gone and Saylor can keep buying Bitcoin forever and diluting shareholders, which if Bitcoin keeps going up, this is not a bad idea. If Bitcoin keeps going up, this is not a bad idea because Bitcoin will just continue to gain some more momentum. The problem is if Bitcoin doesn't keep going up, then yeah, you got someone that's pretty over levered towards it like Saylor, and he's gonna have to figure out what happens. So I don't know, dude. It's just a lot of aggressiveness that he's applying to this. Amit, did you see the Honey PayPal scam? Yeah, I don't even think PayPal is down on that news. It is a headline, but I don't think that affects PayPal. Yeah, PayPal's green. I would not put too much weight into the Honey PayPal scandal. You know those charts where you see like how a company makes their revenue? PayPal doesn't even show Honey as like one of the graphics on how they make the revenue. So I really wouldn't be too concerned about Honey. Some bad headlines, but I don't think it really affects the overall business. Having said that, MicroStrategy right here is up 3.5% because Bitcoin is up right now. So GE says amid countries, Wall Street, BlackRock are all in. They won't let it fail. I agree. I don't think Bitcoin's failing. I don't think Bitcoin's going anywhere. I think Bitcoin's probably going higher. It is just the amount of leverage that you are set to have to experience against the alpha of Bitcoin. That is the problem. And again, when he's going to dump 10 billion shares eventually, I don't know, dude. It's just, it's one of those things of like, how is that going to affect the underlying? Now, again, the way to strategically do it is as Bitcoin goes higher and the Bitcoin yield, which is the metric that Saylor kind of touts a lot, goes higher. If he can keep buying Bitcoin, even with shareholder money, but Bitcoin still substantially goes up, like we're talking about 10,000 every month or whatever, they're going to get people that come into MicroStrategy stock and they're going to keep buying it. Like it's just, there's some people that say, well, MicroStrategy won't go up if Bitcoin goes up. I disagree. The miners won't go up if Bitcoin goes up, because we've seen that the miners have been a shit show the entire year. And anyone defending the miners, I feel like is just like not really understanding how the miner thesis has played out. But I think MicroStrategy will have enough alpha if people buy Bitcoin, because people will just be excited to buy Bitcoin and excited to get exposure through MicroStrategy. It's just the rate of increase in Bitcoin has to outpace the rate of dilution that he does. And that's important as well. Marathon right here up 2.75% in the pre-markets. Where is CleanSpark? CleanSpark 3.5%, 1062. CleanSpark's up a little bit right here. Coinbase, that should be up a little bit right now. Coinbase up 2.37%. Bitcoin above 96 is definitely helpful for some of these crypto names. Maybe we can reclaim 100 before the end of the year. But again, 10 billion shares, that's a lot. Now, someone talked about it on Twitter yesterday, one of the big MicroStrategy bulls, and they were basically defending it. There's like a really big MicroStrategy following on X, and like they're like all day they talk about MicroStrategy, and their argument was, well, the biggest companies in the world, Nvidia, Apple, etc., they all have tens of billions of shares outstanding. So if Saylor is going up against them in terms of capital reformation, then this is the right thing to do, because he needs billions of shares to be able to execute the strategy. I think that is a comparison. I don't know if that's the best comparison. Obviously, Nvidia, Tesla, these guys, they've split their shares multiple times. They have real products and services, so it's like a different understanding of why they have so many shares outstanding. Saylor just wants a lot of shares outstanding to get a lot of shareholders to raise a lot of money to buy Bitcoin, which again, if Bitcoin goes up substantially, which I think it will, then he's going to be right on this. If it doesn't, or if it takes a lot of time for that to happen, it's just going to be really flat. And the leveraged ETFs against MicroStrategy are also going to be flat or down. And that's the downside that everyone kind of has to think about as well. So we got to figure it out. In 2025, we will have a better understanding of how this plays out. CleanSpark sounds like a detergent. Oh my God, that's hilarious. It's actually so true. CleanSpark sounds like a detergent. Let me ask this question to you guys. I'm curious about this because we were having a little bit of a debate that we had yesterday on Hood Weekly. How many people here, or let's do this. Put a 1 in the chat if you actually care about the fundamentals of Bitcoin as a theory. Put a 2 in the chat, and please be honest about this. Put a 2 in the chat if you just care about it continuing to go up and you want to make money from either the asset going up or the proxy that you're invested in going up. I'm curious. I'm genuinely curious. Put a 1 if you really care about the concept of Bitcoin, and then put a 2 if you just think of it as a vehicle to be able to make money off of it, and you don't really care if it goes up or down as long as you make some money out of it. I think it's kind of 50-50. I'm seeing a bunch of 2s, but I'm seeing some 1s as well. Seeing a decent amount of 2s, which I expected, but I'm seeing some 1s. There's definitely people that care about Bitcoin in and of itself. Yeah, let's do a poll on this. Let's do a poll. I think it might be 50-50. I am curious how many people genuinely care about Bitcoin. How many people just care about it for making money. So Bitcoin, I care about the asset. I just care about making money from it. I do think There are some people that say they care about the asset, but in reality, like if Bitcoin was at $10,000, no one. I mean, look, I'd probably be the same. If Bitcoin was at 10,000 and it wasn't that exciting, I probably wouldn't care that much. The trading potential I can make from it. But then there are, OGs that legit just care about the asset class. But I think there's a lot of people also that are just like, hey, how can I make money off this? Can I invest in Robinhood because Robinhood's going to get a shit ton of trading volumes, then I can invest in them. Like how do I make money off of it more so than do I believe in the death of fiat currencies, etc. Wow, 74%. I just care about making money. Holy crap. This is the little bit of a debate we were having on Robinhood Weekly last night because we were talking. So the question was, should Robinhood put Bitcoin on the balance sheet? And we listened to an interview of Vlad for about 2 minutes talking about it. And Vlad basically, you could tell he was hesitant. He was just like, yeah, we're already really correlated to Bitcoin and we don't need to do this. And we kind of don't want to do this. That's, if you read between the lines, that's what we got from Vlad. And it was funny because it prompted the question of just like, is Bitcoin really valuable to put on the balance sheet? It is when it's going up. And if you're Microsoft and you have 100 billion in cash and you put 500 million to $1 billion and you could lose that money and your shareholders really won't care, then yeah, it's okay. Robinhood is a small $30 billion company at $6 billion in cash. I personally don't want them wasting any of their money I'd rather them buy another startup, acquire them, build new products and services, spend that money on marketing to get more gold subscribers, etc. Because Bitcoin goes up and Bitcoin goes down, their business is already exposed to it. And having that on the balance sheet, I think, would be a little bit too aggressive as well. Yeah, 72% of you say I just care about making money. 28% of you guys say I care about the asset itself. Someone says, is Bitcoin greater fool theory? Yeah, but a lot of things are greater fool theory. I think there's an argument that Bitcoin's greater fool theory because you're just buying it because someone else will buy it higher. Now, I know people say that about stocks. The only difference is stocks have actual earnings that you can analyze nonetheless. Sometimes those earnings don't really reflect why people buy equities. But to me, it's not about the greater fool theory. To me, it's just more so, I think the sentiment right now about Bitcoin's price is that it's up, therefore people are excited, including myself. I'm going to be very clear. Including myself. I'm excited about Bitcoin. If Bitcoin was at 10,000 right now, I just don't know how much we would be talking about. And so it's one of those things where, now granted, if Palantir was at $25, I still think we would be talking about it because there would be updates every day. We would still be going through it, even if the stock wasn't reflecting it. Bitcoin is one of those things where it's like, you kind of need momentum to really get the majority of people more excited about it in general. 28% is lying. There are some OGs that genuinely just care about Bitcoin. But there's other people that are just like, how can I make money? That's big. Okay, let's get an update from some of the suits on what they think is going to happen in 2025. Let's hear from Belly Fund's John Belton, and then we'll keep going from there on the market open.
Acceleration, that's against the backdrop of decelerating GDP growth. So I think there is quite a bit built into expectations. Valuation also seems a little on the full side. Right. 22 and a half times forward earnings. It's kind of a top decile type valuation. We're coming off an 80th percentile year for stock return. So definitely a lot built in for good reason. I think there's pretty good economic fundamentals. There's excitement about this new administration, some of the policies around deregulation, spending cuts, extension of tax cuts. So hope for some productivity enhancements coming with that. Artificial intelligence, also a productivity dynamic, which I think will persist. But I think we're just kind of entering the year cognizant of the fact that there is a lot built into expectations. Some of it is for good reason, but we're taking a slightly more measured approach as we enter 2025.
Would you be happy?
I didn't see this headline. I'm reading it right now. American Airlines grounds all flights nationwide due to a tech issue. Holy crap, that's a big headline. I did not see that today. Did anyone know about that this morning? American Airlines stock is down 1% on that news. That's, dude, on Christmas Eve to ground your flights is a lot of, that must be something bad. Oh, they just lifted the nationwide ground stop 2 hours ago. Okay, that's probably why people aren't talking about it anymore. So I guess 4 hours ago, there was a technical issue, and now they lifted it. Okay, that's not horrible. But system's back on running. All right, that's good. Is anyone flying? Is anyone traveling? I would imagine a lot of people should be traveling over the next couple of days, but I didn't know about that. All right, that's good. Not too much of an impact then on AAL.
If multiples just stayed where they are.
Absolutely.
Because they're not going to, I can't imagine they expand,
because the rate cuts, maybe we still get some with a weaker economy, but not 4 or 5. Maybe, who knows though? But is 2 enough to keep us at 22 times earnings?
Well,
and then 13% earnings growth. That's give me, we'll take it if we stay at 22.
Absolutely. I think it's hard to bet on multiple expansion from here. But I do think, yeah, if companies can deliver on these earnings growth expectations and we do get a teens type index level earnings growth, there's going to be winners in there. And I think it could actually set up okay.
Is it possible that you could see GDP, not go to single, like 1 or less than 1%, but go down 2 or below, and companies could still flourish at 13% growth? Can they do that?
Yeah, I mean, I think so. The expectation, I think, is that real GDP in the U.S. goes from about 2.7% this year to about 2.1% next year. I think in that type of environment, you've got nominal GDP growing, somewhere around 4%. Revenue growth for S&P 500 companies could be kind of mid-single digits, layer on some margin expansion, some capital allocation policies. You can get to that teens earnings growth. As always, there's going to be winners and losers. But yeah, I think it is possible to deliver that sort of low.
That could be a sweet spot. I think you could still get some rate cuts too. Right?
You should have, I think, markets pricing in kind of 1.5, maybe just under 2 cuts for this year. That to me now seems, fingers crossed, a little bit more de-risked. I do think we could get.
And look, even though we're only pricing in 1 to 2 cuts, I personally think we're going to get more than 1 to 2 cuts. And it's just a question of shelter inflation actually showing us that we're going to get to that level. We're not there yet, but eventually when shelter inflation comes down, I think we'll have more than 1 to 2 cuts. And that's not going to be the worst thing in the world. We got our boy Paper Games, Jason. We had Technical Monday yesterday. He just published a pretty aggressive post around Michael Saylor right here. So for those that are just joining, we saw that last night Saylor said that he's going to try to issue 10 billion shares eventually. He wants shareholders to vote yes on it. By the way, I think shareholders are going to vote yes. So he'll have the ability to dilute by 10 billion shares. Paper says, I've been a blockchain enthusiast and crypto holder for nearly 2 decades, and I forgot to say Michael Saylor's recent moves with MicroStrategy are making me question my commitment to this space. Here's my warning. Saylor's amassing Bitcoin like it's his personal piggy bank, turning what was meant to be a decentralized dream into his own little empire. If you're not careful, you're handing over the keys of your crypto kingdom to someone whose strategy is at odds with Bitcoin's ethos. Bitcoin was supposed to be about needing trust, but now I see people practically worshiping Saylor like he's some kind of crypto deity. If his strategy goes south, it could shake Bitcoin's market to its core. Are you ready for that? If you're diving into MSTR, better understand the game. Saylor's latest SEC move is all about diluting your shares to fund his Bitcoin spree. Bitcoin's about holding your own keys, not putting your faith in one man's financial game theory. And then he says, let's call it what it is. If Saylor misplaces his cards, I foresee a rug pull that would make even the shadiest altcoin blush. With credit stipulations in play, one wrong move could force a sell-off so fast, you'll taste the dirt from those shit coins you love so much. The MicroStrategy bros are going to come after him for this post, especially on Christmas Eve. So I'm curious to see what people say about this. But he absolutely woke up and chose violence when it comes to Michael Saylor. And Jason's interesting. Jason actually loves Bitcoin. Jason's been in Bitcoin for a long time. But he is not a fan of MSTR or what Saylor's doing. Granted, look, if Bitcoin goes up, I think it'll work. It'll work long term. It's just a question of, will it continue to go up? And 2025, we're going to see kind of how the strategy ultimately plays out. Bitcoin trying to get back up to 97, which is not too bad. All right, here we go, folks. Christmas Eve. Thank you, everybody, for being here. Tuesday, December 24th, 9:30 a.m. The stock market is now open. Wake your ass up. Palantir 8140 on the open. Up a 1% on Palantir. Volume of 2 million shares. Not bad. Not bad with that volume. 8135. Palantir is green, baby. Coinbase up 1.82%. CleanSpark's up about 4%. Marathon's up 4.3%. PayPal 86.94. Apple's at 256. Grinders at 17.87. That's up about 1%. SoFi opens red, so SoFi's down. Rumble is down 3% after being up 90% yesterday. Robinhood 37.85. That's up about 1%. AMD's at 125.67. That has a little bit of a red candle from pre-markets. That's up 1%. It was up about 2%. Tesla's up 435, maybe getting its way back to 440. That's up 1.13%, which is not too bad. MicroStrategy 344. That's up 3.55%. Bitcoin trying to make its way back to 97. We are at 96,474. Currently, right now, MicroStrategy is up 3%. Rocket Lab's up about 0.5%. Walmart's up 0.5%. Walmart was down about 3% yesterday. SMH, the semiconductor ETFs, is at 250. That's green for a second consecutive day. Google, 196. Google's green. Netflix, 914. Netflix is green as well. I imagine Netflix will be getting a lot of watchers this weekend over the holidays. Oh my God, Palantir, 81.70. Holy crap. Tesla looking like it wants to get 140. Yeah, there you go. 440. 440 on Tesla. That's up 2%. God, look at that green candle. Pre-market was at 435, 440 within the first minute. And then Palantir, we hit 81.99, got rejected at 81.99, trying to get back to 82. But we're green. Coinbase, 1.7%. We are green. Apple, 256. We are green. AMD, 125.73. We are green. We're seeing a ton of green. Maybe Santa Claus is officially in town and maybe he's getting ready to drop some presents here. I mean, we're pretty damn green today. Where's the Qs? Qs are green as well. Qs are green. Where's Nvidia? Are we over 140? Nvidia's over 140. Nvidia and Tesla leading the way for the Max 7. Meta is well above 600. Meta is green as well. And then the S&P trying to get its way back to 6,000. S&P is green. Palantir is 82. Are we there? Oh my gosh. Whoa. What a freaking candle. Holy guacamole. 82.30 just busted through that. Like it was nothing, bro. It's been 2 minutes since the market opened. And you can't say we're low volume today on Christmas Eve. I mean, 5 million shares is not necessarily low volume. Robin as well, trying to make its way to $38. Yeah, there you go. Robinhood's at 38. Grabs down a little bit. Tesla's at 441. And Palantir's at 82.20. All-time high is 82.70. All-time high, 82.70. That's the one that we got to beat. 82.70 is the one that we got to beat. 82.66. Oh, are we about to beat it? Oh, we did. 82.74. We beat it. We beat it already. There you go. 82.74. Uh-oh. 83. Are you on the way? 83. Oh, wait. Let me check resistance. Holy crap, dude. Who woke up and decided to just buy Palantir at these levels? Either it was a toot or it's a fund manager that's buying and then they're going on vacation for the next couple of days. 83 has 43,649 shares. 43,649 shares. Robin at 37.96. Coinbase 272. CleanSpark $10.47. 82.91 is where we hit on Palantir so far. SoFi 15.68. Tesla 442. Maybe 445 in the tables for Tesla right here, up from 435. That's a nice 2.7% gain on the day for Tessie. Hood at 38. That's not bad for Hood. Palantir, we were just 4 cents away from 83. There we go. 83. 83. 83 is here. Bell's going to be a little muted, but we got to ring the bell for that. Dude, this is like, I mean, if the rest of the market's not having a big Santa rally, Palantir definitely is. Palantir is not struggling with a Santa Claus rally. Goodness gracious, 83, and it's not stopping, dude. Holy crap. Whoa, that's a big move. That'll wake you up in the morning, bro. That will wake you up in the morning. 83.15. 83.15. Tesla's at, oh, no, it's not at 445 yet. It's at 442. It almost got to 444. But there you're at 443 right there on Tesla. It looks like it wants 445. Phil, thanks for the super chat. Amid calls the open like it's the Kentucky Derby. That's what makes it exciting every morning, dude. That's what we got to do that every morning. It makes it fun. Also, I can't speak slow, dude. I don't just like, I've seen other market opens where they're just like speaking slow and I just can't do it, bro. It's just, first of all, I feel like I'm wasting your time. Second of all, I feel like we're not getting through enough stuff. So that's why I speak really fast. But most of you guys have got used to it. And I'm very grateful for that because it would be really hard for me to slow down. And most of you guys have pretty much adapted. So I appreciate that. Victor, thank you for the $20 super chat. Appreciate it, Victor. Thank you for the $19.99 Really appreciate it. Thank you for being part of the show, and thank you for that super chat. 83.25. We hit 83.68. 84. Let's check resistance on 84. We're getting rejected right there at 83, but let's see how much it would take for 84. 84 has 24,618 shares. So 84 is not going to be crazy if the buyers come in. It's not going to be crazy. Coinbase at 274, CleanSpark up 1.95%, Marathon up 2.65, PayPal. The honey thing, again, I really don't think it's a big deal. I don't know if Kris still thinks it's a big deal. We couldn't call him yesterday because he didn't have service, but if he still thinks it's a big deal, I disagree with Kris. I agree with Kris on a lot of things, but if he really thinks PayPal is a short because of honey, I would disagree. I don't think that's the case. I don't think the honey headline is that serious. But we'll get him on the show hopefully in the next couple of days and try to get his thesis if he does think it's a short. SoFi at 1570, Tesla 443, MicroStrategy's up 3.7%. Bro, how is Reddit 170? Reddit's covered call premiums are insanity. And I think I might be buying Reddit next year just for the covered call premiums. Now, is Reddit expensive? Kind of. It's also kind of not expensive when you look at their growth and their profitability. This would be a name I wouldn't be afraid to DCA into. They became profitable 3 quarters before everyone expected. And they IPO'd at such a cheap valuation. I messed up on the IPO. They IPO'd at a $6 billion valuation. That should have been a screaming buy. Instead, I was like, the narrative of Reddit like got to me, and I was just like, I really didn't look at the numbers. Palantir back above 83. I think Reddit could do well next year as long as they continue to maintain profitability. But they're up a lot, so I could see people selling them to take profits next year and officially begin the process of taking some profits on their portfolio, even though they'll have to pay taxes on it next year. But the covered call premiums are insane. I've never seen covered call premiums on a stock like Reddit. That's like a normal company that doesn't have a ton of Bitcoin. Robin at 37.77, Palantir 83.45. Reddit has a huge following. Yeah, but I thought the huge following would go against Reddit. I thought people would short Reddit because that's the mistake I made. I thought Reddit would there would be a downside to that big following. It ended up being really positive for them. So if you got into Reddit, congrats. You've had a great year. And next year, I think they can continue as long as they execute against profitability and building out their AI moat with all the data that they have. 83.50 on Palantir, Hood 37.81. Palantir's not giving up 83 that easily. We dipped to 82 for like 10 minutes, maybe. Not even 10 minutes, 10 seconds. So like we dipped there at 9:36. It's 9:38, so 2 minutes. Back at 83. And 84, I think, is in play. I think it has a shot. Bitcoin 97, well, there you go. That's also helping. Bitcoin 97 is helping. Bitcoin 97 is helping. We are not doing a market close today. We're just running this probably till like 11 a.m. or 12 p.m. So this will be the only stream for the day. But it's basically going to be till the end of the day at this point. So yeah, no market close today, but the market will close probably at 1 p.m. Bitcoin 97. All right, so Bitcoin's moving. Boeing's moving a little bit. Grab is flat. Rocket Lab's up a third of a percent. Robinhood's up 1%. Palantir 83.45. It's up 3.4%. There's a ton of volume. Someone woke up and decided to buy Palantir. Someone did it. Now, who is it? I don't know. This is basically $7 billion of market cap added today in the past 9 minutes. So $7 billion came from somewhere. Either it came from retail or it came from the toots. NVIDIA above 141. That's amazing. NVIDIA showing some amazing strength from last week. And then Tesla, 445 on Tesla. Someone's waking up and they bought Palantir, Tesla, and NVIDIA. That's what's happening right here. That is what's happening. Does Palantir go to 85 today? I have no clue, but it definitely looks like it wants to try 84. We're at 83.70. Steve's going to love this. Steve's got to love this. Arnie, shout out to Arnie in the chat. My first 10 bagger, Arnie. Shout out to you, Arnie, an amazing member of this community. Again, he posted the UBS note on his Twitter, so you guys can check out. I'm uploading my video on that later. But he uploaded the screenshot of the first page of it, and that price target, me and him were talking about it, and it was just one of the most impressive price target upgrades we've seen in a while. And that price target said, hey, look, it's expensive, but $80, we think that's what it can get to. 83.90, we are 10 cents away, 5 cents away from 84. Holy crap, it's about to happen. Oh my God, 84. Whoa. Holy crap, 84 on Palantir. Yo, who's waking up and buying $10 billion worth of Palantir stock? It's not retail. You think retail's really buying $10 billion of Palantir on Christmas Eve? I don't think so. Maybe I'm wrong, but I don't think so. I think this is someone loading up before the break, and now we're actually above 84. We didn't just touch it. 84.15. This is Arnie, bro. Arnie's loading up even more. Arnie's doubling down at this point. This has to be Arnie. This is crazy, dude. Holy crap. Even Arnie's like, oh shit, what's going on? That's kind of crazy. We've had some crazy days this year. This is at like on a Christmas Eve. I did not expect up 4.3%. I did not expect that on Christmas Eve. 84.24 right now. Jose says Santa loading up before he starts work. He wants to retire from this hard gig. Dude, this is aggressive. This is very aggressive. Robinhood above 38, S&P 596. I think it's a little bit of a Santa Claus rally, folks. Where's the red? You got a little bit of American Airlines that's red. Tessie's above 445. Ulta Beauty's flat. CVS, that's red. Grab's a little red. Bitcoin 97. TSM's a little red. Everything else is green. Costco's red. Joby's red. Again, slightly red. Everything else pretty damn green. Amazon's green. Mercado Libre is green. Affirm's green. Archer is green. Archer's up 2%. Enphase was up a little bit last week, so Enphase makes sense that Enphase taking a little breather right here. But everything else pretty much green. Palantir 84.40, Robinhood 38.18. That's up 1.81%. Also, by the way, NVIDIA did invest in Elon's XAI. They officially announced that they raised $6 billion of funding. This is very bullish for Elon and NVIDIA. Why is it bullish for Elon? A, because he gets $6 billion to do what he needs to do to compete with OpenAI. B, it's bullish for NVIDIA because NVIDIA needs to prop up Elon's XAI, just like they need to prop up OpenAI, Gemini, etc., so that these guys can keep buying GPUs. So NVIDIA keeps XAI alive. XAI competes with Gemini, Claude, GPT. NVIDIA comes out with new GPUs. Elon buys more GPUs to stay competitive with GPT, Gemini, and Claude, etc. And it's an ongoing cycle that continues to give Elon the capital to build the best models and give Jensen the money to show shareholders more revenue every quarter. So very bullish for NVIDIA. That did happen yesterday. And maybe one of the reasons why NVIDIA right here is up about 1.04%. Palantir 84.40, up 4.6, getting into that new all-time, well, basically in a new all-time high, 84.53 we touched today. Robinhood 38.25, Coinbase 274, S&P 596, Reddit 172. That's up another 2%. And then the Q's at 525 currently right now. It was Alex Karp's Christmas message. Yes, they posted it on YouTube yesterday. So his Christmas message did it. Dude, if we hit 85 today, the day we see triple digits on Palantir, I don't know what we're going to do. I don't know what we're going to do. I really have no idea. I think, I don't know, dude. That's going to be a wild day. To see $100 on Palantir, 2025, I think it is very possible. If we see that, that will be insane. Tesla 447. Dude, Tesla and Palantir is the first beneficiaries of this Santa Claus rally. Tesla and Palantir, almost 448 on Tesla. Someone woke up. I don't think this is all of retail and a coordinated effort. There you go, 448 on Tesla on Christmas Eve. I mean, most people are out spending time with their families. They're not really looking at the market. So there is someone who's buying or some institution that's buying both of these names in a pretty aggressive rate. Or, to be honest, it could also just be algos. It also just be algos towards the end of the year. That could be an easier explanation of it. But they're algorithms that are, I guess, biased towards Tesla and Palantir today, at least. It's my uncle. Yeah, it's my uncle. Dude, my uncle, he loves Palantir. And he's not I don't think he owns Tesla, but he's been buying Palantir since like $30. So he's been on the Palantir train for a while. But this is an incredible run, dude. Up 4% right here. MSTR also up 5%. That makes sense because Bitcoin is at 97. So MSTR should be up 5.6%. That's important. Also, the QQQ inflows, that could be a reason for why Palantir is getting some momentum here as well. $100 for New Year's would be insane. Yeah, that would be wild. I think that's more so a 2025 story, but it would be pretty incredible. The Alex Karp video made the street excited. There were some bears on Twitter posting the Alex Karp video, and they said, they were saying their traditional bearish things or like, who could trust this type of CEO, yada, yada. I'm like, you guys don't get it. The reason we like him is because he makes videos where he's out there skiing and he doesn't care what anyone thinks. Like this, I don't know if people are just like against creativity or something, but he's a creative guy. He's a CEO of a multi-$100 billion company. Like you've got to be incredibly creative to go from dorm room to a $200 billion company. And you got to be a little eccentric and you got to be a little different. And like, I like that. I think shareholders like seeing him in his element, being like that. And the rest of the world doesn't understand it. And that's fair. Same like a lot of people don't understand Elon and his eccentricities, but nonetheless, he's Elon. He gets things done and he has his own way of doing it. So look, I don't think the Christmas message is why Palantir is up right now, but it's one of the reasons why shareholders love Alex Karp and they actually care about him. Almost 450 on Tesla. Palantir 83.88, just below 84. Tesla right here 447. That's up 4%. That's a big move for Tesla. Apple as well, pushing all-time highs at 256.48. Why's up 5% on no news? Yeah, I don't know why Palantir's up. It feels like Santa Claus more than anything. I don't think there's any fundamental news, at least not today. Square's up a little bit. Marvell's up a third of a percent. Airbnb's flat. Netflix 912. Google 196. What are some other big movers? Do we have anything else? Mag 7. All the Mag 7 is green, which is nice to see. Nvidia's up 1.4. Tesla's up 3.7. Google's green. Meta's green. Microsoft's green. Apple's green. Amazon is up 1.2. That's green. Any Grab news? No, there's no Grab news. I think on Grab, it's being held down below $5, dude. I genuinely believe that. Because at this point, the earnings were really good, but until they have another consecutive earnings, the market's just not going to give them any more momentum. I mean, the downgrades they got 2 weeks ago from two different firms, Citi and HSBC, I think, that said, hey, the shares are moving too fast. Like, that to me tells me everything I need to know about the price action. Like, it's not going to be moving for a while, but that to me is accumulation phase, in my opinion. As long as they have a good next quarter, I think we healthily make the next leg up. But again, that'll take time. It'll take a couple months, and it's one of those things where it's a slow mover. But I do think it is going to compound very nicely. But no news today on Grab, just kind of flat on the day. Tesla 446, MSTR 346. MSTR falling a little bit from 350 back to 345. Robin at 38.20. Palantir still above $84. Soundhound, where's Soundhound today? That one's down 3.7%. Probably no news on that. That one's probably just general profit taking. American Airlines down 1.5%. Apple 256. Bitcoin just below 97. Rocket Lab is down 1.4. Google right here at 196 right now. Elon followed Palantir on X. Yeah, he followed them on Sunday. So we covered that story in depth yesterday. I do think there is going to be a link between Doge and Palantir. Man, maybe that's another reason people are buying it up at 84. Maybe that is another reason. It is kind of wild, bro. It is really wild. I mean, it's a $190 billion market cap, trading at a 72 times price to sales for doing less than $3 billion in revenue. Like, there's no way I can justify the math on the valuation. I just can't, and I'm not going to try to because there's no way to do it. But again, that doesn't mean it has to come crashing back down to the 30s or 40s. It means it's whatever the market's willing to pay for it, and the market does believe there is some broader theory or momentum or excitement around this name. It's kind of wild though, dude. Like, coming from someone in 2022 that would not see this stock move on the biggest headlines imaginable, moving up 4% on a day after it's already up like 400% year to date. It's kind of surreal. Like, it's very, very surreal. I don't know. A lot of you guys are probably feeling the same thing from those early years. You know who was right about this? You know who was dead right about this? Mr. Chris Camillo. Chris Camillo came on the podcast, or the market open like 3 months ago when Palantir was 35. And we were all like, well, it's an $80 billion market cap. Aren't you scared? And Chris was like, dude, this doesn't matter. He's like, this thing's just like this. They're on a different playing field, and momentum is momentum. Now, I'm going to be curious when Chris sells, because to my knowledge, Chris hasn't sold yet. And I don't think he has any plans of selling, but he explicitly did say he's not in this forever. He's in this for 18 months. So I'm curious in 2025 if he officially says he's out of the play. I think he's already more than doubled on it. But he was right. He was completely right about this. Amit, are you selling Hood? I am not selling Hood. I want to hold on to Hood for the next decade, to be honest. But we are here at 38.15. I like Hood consolidating around 35 to 38. I don't think we have to make the next leg up to 40 yet. I think it can happen as Bitcoin goes up. I also think on earnings, they'll be able to get into that $40 range. But from 35 to 38, I think that's a good spot for Hood to just chill out until earnings and kind of really, really build some solid support at those levels. When is his 18 months over? Probably end of 2025. That would be his 18 months would be done. AMD is going down. Is AMD going down? AMD is, well, it's down a little bit from where it was. It's at 125.46, down about 0.68%, or up 0.68%, but it was up 2%. Hood is still green. Palantir is still green. Tesla, almost 450. We did not hit it yet. We are 10 cents away, 5 cents away. Let me check resistance. In the time I check resistance, let's see if it actually gets there. 450. 450 is how many shares? 53,000 shares. Not a ton of shares, but a little bit of a wall. 53,000 shares to be bought at 450. It's pretty incredible, guys. This is wild. Oh, there we go. There we go. 53,000 shares. Eating like it was no big deal. 450 on Tessie. Again, we hit 487 last week, but it fell to 410, and now it's at 450. And if my math is correct, did you guys hear that? Siri was just like, who do you want to message? Why did Siri say that? 450 minus 410 is $40. Now we're at 451. So nice, healthy gain for Tesla. Right there at 451. Wow, up 5%. Goodness gracious. Where do you check the amount of shares? I use Robinhood's NASDAQ order book flow, order. I don't even know what you call it. The book flow, the order book volumes around the shares that are being held up to be sold at certain prices. You can use a bunch of different websites. I just use Robinhood because I pay for Robinhood Gold and it's already there. It's not perfect. There's a lot of dark pool stuff that it doesn't account for, but it gives you a general understanding of where the resistance and support is on some of these names. Anywhere to check that is free. You know, you got to Google like order book flow. And I think you'll find some websites that are free, but the majority of them, you're going to have to pay a little bit because it's data that they know is like very helpful. So they charge for it. Bitcoin healthily above 97 right here. So Robinhood at $5 a month is, you know, the fastest or the cheapest way for me to get it. Yeah, the NASDAQ level 2 order book flow. That's what you're looking for. Tesla 450. So again, we hit 451, almost hit 452. Nvidia 141, Reddit 171, Hood 3831, and then Palantir still holding above 84 and not really giving it up. Not really giving it up. Ruxit says, question, do you miss not having a Tesla position? Are you thinking of starting one in 2025? So yes, I'll be starting one in 2025. I don't really miss not having one because again, if you know my portfolio this year, I consolidated into 2 names and I could have bought as much Tesla as possible at the bottom with the capital I had. I still wouldn't have outperformed based on the strategy that I used in January with Robinhood and Palantir. So yeah, it's not really FOMO because it's like, if it's about making money at this stage of life, not about being like attached to making money off a certain name, then outside of Palantir, because that one, there's a little bit of an emotional attachment, just a little bit. Someone yesterday on Twitter, they're like, you're too emotional. I was like, okay. I was like, well, first of all, I think I'm pretty damn objective about it. Okay. I think I'm pretty objective, but second of all, it's like, yeah, I'm a little emotional. Like it is what it is. But the strategy this year was to make money by any means necessary. And that was the strategy I used to consolidate with basically 2 names in 2025. So they're real, like Nvidia, Tesla. If Robinhood and Palantir had not performed, I would have a ton of FOMO because if you go one direction and then the other direction is way better than the direction you went down, and you really don't have a choice to get access to any of that direction because all your money's tied up in the other direction, then yeah, you're gonna probably hate the fact that you're missing out on gains. And I think a lot of people that were stuck in SoFi felt that during the year. Thankfully, SoFi towards the end of the year started performing, but for the far majority of the year, SoFi was stuck at $7 while everything was running. But that just wasn't the case this year. This year it was, you know, we picked the right stocks, which did well. But I want Tesla. So 2025, that is a big priority. I think on the bots alone, Tesla's got to be the name that we start allocating to. And on Tesla, I really don't care about valuation. I will sell puts. I don't want to be buying it like after a big run. I don't care about Tesla here at 450. I wouldn't buy Tesla at 450, not because I think the valuation's expensive. I wouldn't buy it at 450 because it's already had a ton of strength, and I would just like wait for it to cool down a little bit. And so if I had money, I would have been a buyer at 410 or 420. I would have at least nibbled in. I definitely would have sold puts at like 390 at those levels because I would have been happy to like start allocating as it takes a breather. I wouldn't be buying into this much strength because I think there's so much strength and the company is so big, 1.5 trillion, that eventually cools down a little bit and then you get better entry points. And that would be my strategy for 2025. But that doesn't need to happen. Tesla could run all the way to 500 and chill out there. It's just a question of how they begin executing in 2025. Lilium's up 354%. So Lilium Yeah, the Lilium is now on the OTC markets, to my understanding. Lilium F is the ones we're looking at. That's up 134%. I think it was up 350 at one point. Lilium, the company itself, is not listed anymore on the stock exchange. So I remember that news a couple months ago. Lilium was delisted, so the OTC version of it is probably up, but the actual company is not listed anymore. At least not on the Nasdaq or the NYSE. Tesla will come back to 200. I don't think so, bro. Maybe if it does, I'll be a buyer, but I don't think so. I think Tesla's in a new. I think the narrative changed on Tesla, just like the narrative changed on Palantir. This is why when the bears are saying Palantir's coming back to 30, I'm like, look, I think Palantir could come down. I think it could definitely come back to 70, 65. I think that's possible to see that. I don't think 30 is possible. I think Tesla could come back to 380, 375, 390. I don't think 200 is possible. That's a narrative for a different market where those names were in. Because again, you got to think about how many people would be willing to buy on the way down for that dip. And something fundamental. Also, all the analysts have upgraded Palantir. All the analysts have upgraded Tesla. Like, they're all on the story. They're all in the 450s, 500s in price targets. Even that longtime bear, Craig Irwin, went from 50 to 350 on his price target. So when you got the street on your side, I think it's hard to get that big of a collapse back to 200. Tesla's been repriced. Exactly. As Sean says, that's the wording I was looking for. Tesla's been repriced. Prashant, thank you for the the $20 super chat. Yo, Amit, I tagged you on X saying I owe you for all the Palantir help. I'm a man of my word. Thanks, Prashant. You do not owe me for anything. I appreciate you keeping up with the content. Same thing for everybody else here. But thank you for the super chat. It means a lot. $20 is a lot of money. $20 is not a small amount of money. I'll probably be using that to eventually buy some more Palantir. So thank you, Prashant. Really appreciate that. Thank you for being here. And thank you all of you guys for showing the love that you guys have shown. I mean, there's a lot of DMs of just people. Again, I told you that DM yesterday, or I told you guys about that the guy who told his parents to put their retirement in Palantir at $8. I'm like, that's risky, bro. That's crazy to do. But then again, at $8, if you really believed in it, which a lot of us did, it wasn't that crazy. It was more so just like, hey, this is pretty obvious right here. And a lot of people have done very well. So it's really, really cool. I can't imagine how Karp and the company feels for doing what they've done for individual shareholders. I know Karp loves it when he told me how much he loves that individual shareholders are making money off this. So it is really cool to kind of see all this happening. Remember when $20 would be 3 shares of Palantir? Yeah, dude. Could you imagine that, dude? When remember $20 were 3 shares of Palantir? Dude, I remember when I was going to the chiropractor back in 2021, when I was having some back issues, and I would just be at the chiropractor waiting, and I would be buying like 50 shares randomly at $7.40, and I'd be like, all right, well, here's another $350. Let's just put it in. Those days were so long ago, but it feels like it was yesterday for Palantir. Where are we at on Palantir? 84.50. Robin at 38.43. Not bad on Hood. That's up about 2%. 84.60 right here on Palantir. Not bad. Not bad at all. Down to the 7s. Yep, down to the 7s. 85 soon. I mean, look, we got about 50,000 shares waiting at 85. It looks like it's possible. It looks like it's possible. For all those that are just joining that are saying this is crazy, yeah, we've been saying this is crazy for like 20 minutes. This is this is wild, dude. And again, going back to Prashant's comment again, like dude, it feels really good because obviously my humble Indian prince brother. Thank you, Prashant. I appreciate that. It feels really good because it's just, it's regular people made money off Palantir. Regular people made money off this name. It's one of those stories, bro, where there's got to be a movie on it or something. Everyone hated it. It's the opposite of GameStop. GameStop was a thing that was supposed to make the regular people make money against the hedge funds, but GameStop was nothing. GameStop, unfortunately, right? GameStop was just like this vehicle that had a short squeeze on it. Palantir is a real company that normal people that had regular 9-to-5s at $7 saw some value in, whether it was in Karp or whether it was in a YouTube video they saw or the ontology, whatever it was. And those are the people being rewarded. And that's why it's so cool. That's why it is so freaking cool. JJ, thank you for the $20 super chat. Merry Christmas, you filthy animal. Thank you for doing this daily and doing the DD for people like me. JJ, thank you for being part of the stream. Thank you, everybody, for being here. And thank you for the $20 super chat. Deeply, deeply appreciated. I'm Beneficial. Thank you for being a channel member as well. Merry Christmas. Happy holidays, everyone. Cheers to a great year and amazing community. Cheers to you, sir. Thank you for being here every single day. Hopefully you've enjoyed this year as well. And we're going to keep it going in 2025. Eric says, Matt Money must have bought more Rocket Lab. He's moving the market. Where is Rocket Lab? Well, it was up a little bit, but now it's down. Rocket Lab down a little bit. Matt did buy Rocket Lab, I think, a week ago or a couple days ago. I think he bought like another 500 shares or something like that of Rocket Lab. So he's still buying at these levels. Or maybe he bought it when it went to like 22. Rocket Lab's another one on the DCA list of 2025. So Rocket Lab and Tesla definitely are on that list. Matt says, I want some of the royalties if they ask to use some of the Palantir weekly footage for the documentary. That'd be wild, bro. I don't think there would be like an actual documentary on it, but maybe like there would be like a fan made. Like if I hired a crew to make a documentary on it, maybe there would be something like that. But who knows? I think Palantir's got to go to $1 trillion. I think then you'll have like Bloomberg actually want to make a documentary on it. We got to get to $1 trillion. So it'll take another 10 years. At this rate, maybe it'll take another 10 days or something. But I think eventually they're going to want to know more about it. This is wild, bro. This is wild. Rest in peace, Couch Investor. Yeah, I love Couch, but Couch joins the list of people that sold and the thing keeps going up. And I have no problem with Couch selling. I mean, he was up like 3-4x on the position. He deserves to sell, take profits. I think he's in Belgium. You don't pay any capital gains tax, so that's awesome. So he got some nice juicy profits, but he's just like Alex Karp or Peter Thiel. They sell and this thing just keeps going up. It's quite incredible. Everyone who has taken profits along the way, objectively, it's been the wrong thing to do. Again, it's the right thing to do on your personal situation, but it's like the stock keeps going up. It's like if you just wait a little bit more, you could get a better price. It's pretty incredible. Kathy sold a little bit yesterday. She sold like 12,000 shares. She was just rebouncing. She sold some Tesla as well, but she sold a bulk of her position before AIPCon in September. I remember because I landed from the airplane. It was 8 p.m. I got the notification, and I was like, 30 minutes away from going to AIPCon, and then I see Kathy Wood sold 300,000 shares or whatever. And I was like, wow, okay. So at 35, she's taking profits, and this thing it is completely blown all expectations, which is amazing. Now, again, in the same face, I still want to level down the euphoria, which I think I do a good job of, hopefully, and I don't sound too crazy bullish. This valuation is up there. I don't want to sound like a broken record, but $192 billion, adding $10 billion today for no reason. Again, it's based on the market wants to be part of the story. It's not based on anything fundamental. That can be a little dangerous sometimes, and I think we have to remember that. But I think the far majority of you are not really buying at these levels, which makes me feel better, because if there is a nasty pullback, I know a lot of you probably are not holding the bag because you guys bought in years ago. But at this point, anyone who's holding the bag, I think it's going to be more so institutional investors that are holding it, and they don't want to hold it back. So they're going to try their hardest to make sure that this thing does not become a bag for them, which is good for all of us. And I think that is important as well. We are 30 cents away from hopefully seeing 85. Den Sorbit, thank you for the 20, I think, Singapore dollars, SGD. Yeah, it is. Yeah, you're from Singapore. I love it. Thanks for your coverage. A follower from Singapore since 2021. Here's some money for your grab ride if you ever come. I think I'll be in Singapore sooner than later, and so I will definitely test out Grab. Thank you, Dens, for the $20 super chat. Really appreciate it, and thank you for following all the way from Singapore. Nick, thanks for the $10 super chat. Appreciate you, Nick. Sarub, thank you for the $10 super chat as well. Love the channel. Thank you for being here, sir, and thank you for watching. Rob, thank you for the $10 super chat. I'm calling it now. Palantir will be $1 trillion in 4 years. I mean, it might as well happen in 4 days at this point. This thing is, look, I think to 2030, 2032-ish is when I think $1 trillion could be possible. Maybe that's a little bit too far away. Maybe that's being too optimistic, but I don't know. I don't think it happens this decade. I think 2030s is when we see $1 trillion. But then again, who thought we would see 200 billion this decade either? Or forget this decade, but in 2024. So I think all of our conventional understandings of how the market would interpret Palantir have just changed. All of it's just changed. NVIDIA's pumping. Where's NVIDIA? NVIDIA 141.83. NVIDIA, it was a good dip at 126, a great dip at 130. If you bought last week, congrats. AMD is up 1.4%, not moving as much as NVIDIA, but NVIDIA still getting the bulk of demand right here, back to being a $3.47 trillion company. We just need to wait and see for the contracts from Doge. Yeah, I agree. I definitely think those contracts will be a tailwind. It's just going to be how the market interprets us getting those contracts as well. I'm beneficial. Thank you for the $10 super chat. You don't have to send these super chats, brother. Appreciate you being part of the show every day, but thank you for the super chat. One time for the progress for you and your channel. Empire also 2025 has been incredible. Proud of you and your hustle and grind. I appreciate you, man. Really, really appreciate you, especially for the OGs that show up every day, dude. That means a lot. For those that show up every single day, it's super, super cool. There's a, it's like, you're having me as part of your daily routine, which I am incredibly humbled for. I mean, to be part of someone's life every day and to be in the background, and while you guys are helping your kids or just, drinking your coffee and having me part of the show. You know what was crazy to me, guys? When I was at the theater for the freaking Lion King, there were 1,700 people in the theater. And, the market opens, we're getting close to 3,000 every day. And it's just kind of wild because I imagined, what if all of you guys were there in person, right? Like, what if everyone was there in person? It'd be wild, right? I was just thinking of that. Like it put it in perspective. It was kind of one of those moments where I was like, these lions are dancing in front of 1,700 people. And I guess I'm basically a lion dancing in front of 3,000 people every morning. Hopefully a more intellectual lion that is kind of funny. But it's kind of wild when you put it in perspective, bro. It's kind of wild just to think like that. That is, the level of impact and the distribution and reach that it could be having. Eventually, we got to do it in person. Hopefully, that'll be crazy. But it is amazing. It's been an incredible year. It's been awesome. And I'm just so grateful for everyone that's that's actually had me into their life every single day. Dancing Lion Market Show. Yes, we'll be dancing with a freaking cowbell every single day. That's the show. Qs are up 527. Hood 3842. That's up 2%. Marathon 20. That's up 4%. PayPal 8746. Honeything not stopping it. Grinder 1777. Apple 2256.85. And then SoFi getting to 16 would make this day awesome. Let's see if we can get there. We got a nice Santa Claus rally happening, folks. It is indeed happening. SoFi right there at 1585 right now. 3,000 people from all over the world. Yeah, that's the other cool thing about this, dude. You guys are all over the world. So it's like, it's just really cool, bro. It's really, really cool every single day. It's just, and I kind of get it because it's part of your, now I think it's more of a responsibility now. Now, if I'm not going to lie, dude, my throat was hurting a lot last night. And last night before I went to sleep, I was like, dude, I hope I wake up to do the market open because I don't think I'm sick, but I don't know if you guys can feel it or hear it in my throat, but it's definitely there. And it would be so easy to just be like, all right, I'm just, taking this morning off. But then I'm like, but there's actually people that don't want you to take the morning off, right? Like they actually want, the show. They want to make sure that they get the information, the content, all that stuff. And just knowing that there are people that actually care about it every day. As a creator, that's all you could ask for, right? And you want to continue to maintain that trust with your audience and make the show better and better and better so that they continue to come back. But it's very humbling that people actually enjoyed enough to the point where they would be upset if you didn't show up, And that's another thing that keeps it going every single day. Bitcoin 97.3. I love it. Bitcoin 97.3 right here. Of course, the throat jokes are going to be, go ahead with the throat jokes. Goodness gracious. You can't even say it. You can't even say you're feeling a little sick without the jokes happening. But no, I do. I feel it in my throat, dude. There's I don't know if there's a little infection or something, but it's like, I don't know if it's the beginning of a fever, but hopefully it goes away soon. But I felt it last night and I was like, all right, I got to wake up and yell in the morning and say good morning. I got to be able to get through this. But then as soon as I start the market open, as soon as I press go live, it's like the energy, the adrenaline, it comes from somewhere. It's from you guys. It's all from you guys. Cactus Jack, thank you for the $20 super chat. You put in the work this year. Keep shining the community you created. Help me get through a tough year health-wise. Always grateful. Yeah, dude, I appreciate you being here. Someone else said that as well. Someone said that someone emailed me yesterday. Where's Palantir? Palantir 8414. And they said their wife had a schizophrenic meltdown. They had some schizophrenia, and their wife was unable to go to work, and they had to stay home and take care of their wife. And part of the way they were able to do that was to get a little bit of financial freedom from the stock market, which is like, when real life shit happens and you can't go to work because you got to take care of a loved one, and the markets can replace some of that income. I mean, that's the reason we do this, right? The reason we do this is to find alternative sources of income outside of our 9-to-5s, and the stock market is one of those paths to freedom, hopefully long term. So super, super, super important as we all try to navigate how the equities work. Wall says, whenever Mid is not streaming, I get a little confused and upset as to which other TV or YouTube to tune into at 9 a.m. and 3:45 p.m. Now, true story. Yeah, I think once it becomes part of people's routines, which I've noticed for myself with other streamers as well. Once it's part of your routine, you just want to keep one thing as part of your routine. That's the cool thing about content creation as well. Once you get people and they actually care about your content and they're in your routine, like most of the time people just don't, they have something consistent every day. And same thing for me. And I think that's going to happen for, a lot of people as they consume content. All right, let's get to this news, guys. We got the big banks that are actually suing the Fed. This headline broke last night, but we have some more updates on it. It's kind of crazy, but all the banks have come together and they're suing JPOW based on the bank stress tests. So let's listen to a little bit about this and then we'll keep going from there.
Report to the White House failing to reach a consensus on mortgage apps are suing the Federal Reserve over the stress tests. They're doing this via the BPI, the Bank Policy Institute, U.S. Chamber of Commerce, and a number of other business groups representing big banks like JP Morgan, Goldman Sachs, Citigroup, and others. They are questioning the legality of the Federal Reserve's stress tests. These are the tests that they have to go through to prove that they can be resilient in very tough economic scenarios. It came out of Dodd-Frank post-financial crisis, and the big banks have had problems for years with what they call the opacity, lack of transparency, secretive process and methodology that the Fed uses to conduct the stress tests. They've objected.
Wow. So for those that don't know what the stress test is, the stress test is this like esoteric, enigmatic, weird process the Fed engages in to prove that Bank of America, JP Morgan, Citi, Wells Fargo, etc., are well capitalized through any economic environment. And based on passing or failing the stress tests, banks are able to determine how many share buybacks they can do, what their CET1 ratios are going to be capitalized at, and then what their dividends will look like. In 2024, all the banks passed the stress test. The problem is the banks don't believe that the Federal Reserve is accurately deploying this test. And now that Trump's in office, I think the banks feel they have the freedom to actually sue the Fed, and Trump might actually support them because Trump doesn't love the Fed either. And that's what we're seeing currently right now.
To that. And the fact they say that the Fed did not require public comment, for instance, before implementing the stress test, something they have said is not legal. Now, interestingly, the Federal Reserve was onto this yesterday. They put out a statement saying that they do intend to make changes to the stress test to increase transparency and open for public comment. However, for the banks, I'm told too little, too late. Also, the banks want to ensure that these changes actually go through. So they are filing suit in the 6th District to try to ensure that the process of the stress test changes. It's unusual for many reasons. One, it's the banks suing their own regulator. Usually these things get discussed. They get hammered out between the regulators who have an open dialogue with the banks, but it was just so many years of frustration and issues on this, and it was running up against the statute of limitations, and so they made their move and they're suing.
But you just said that
I think this is only happening because Trump got elected. I think the banks would not do this if a Democrat was in office, because the Democrats or at least the Biden administration was more supportive of JPOW in some respects. I think they already know that Trump is not the biggest fan of JPOW. And I think they're taking advantage of the hostility between the White House and the Fed by trying to convince Trump that we need to deregulate the way the Fed is conducting these stress tests. I don't know if that's good or bad. I haven't done enough research on that. I'm just thinking they're trying to capitalize off the new regulatory environment, because if you can lower regulations on the stress test from the Fed, the banks don't need to be as well capitalized, one could argue, when going through the stress test, because they're not going to need to have that much money in the reserves or whatever reasons that they're happy that they can avoid a really stressful, ironically, stress test, right? So I think this is a play on Trump being in office. And the question is going to be if this lawsuit actually results in the Fed meaningfully changing their stress test approach. Bank of America right here is at $44. That's up a little bit. Palantir is still above 84 as well. But that's why I think they're doing it. Robin at 38.61. That's up about 3% here today as well. It's an interesting strategy. I don't know if it's going to play out, but I think they're doing it because of the current administration. I think that's the reason. Is SoFi part of this lawsuit? I actually don't know the banks that are part of this lawsuit, but SoFi does benefit if the stress test rules start to go down. SoFi 1584. Again, if the stress test requires you to have, I'm just making up a number. Let's say you're a bank that has 100 billion in assets and you have to have 26 billion in this particular reserve that the Fed is looking at. If that goes down to 22 billion because the stress test regulations go down and you have an extra 4 billion to go loan out and make money off of, that should be increasing the earnings for the banks theoretically. Now, the downside to this is that, what if you have another Silicon Valley Bank crisis where the Fed or the banks just like are super reckless with their money? And then everyone's going to be looking like, well, why don't we regulate them? And it'll come back to, well, the banks sued the Fed and the administration didn't really care about them suing. So and then the downside is that deregulation leads to a 2008 scenario. The upside is that we have way too much regulation right now. You decrease a little bit of it and the banks can start making more money. So I think that's what we're going to have to see in 2025 in terms of how that plays out. Chickens Worth, thank you for the $50 super chat. Really appreciate it. My favorite financial streamer from his mom's basement. Even though you eat your steaks wrong, you've helped me build conviction in Palantir since $7. Keep up the good work and thanks for all you do. All the best. Thank you, Chickens Worth, for the $50 super chat. It's not mom's basement. It's bedroom inside of mom's house. But I love that. I love that the origin story of my YouTube life is in my parents' house. It's literally that struggling rapper in his mom's basement, right? Who's like making music videos, trying to like break out. That's basically what we did, except in the basement, it's in my own room. But I appreciate you, man. Thank you so much. Hopefully next year we are out of the basement. And I think more likely than not, I'll be moving out next year. So that'll be a whole journey in and of itself. Maybe the bricks are gone next year, guys. Maybe the bricks are gone. Maybe the bricks are gone. We're gonna have a different background, so we'll see. Just Paul, thank you for the $7 super chat. Amit, appreciate your dedication and authenticity. Thanks for the analysis, consistent entertainment, and pragmatism during times of uncertainty. Thank you for being here, Just Paul. Thank you for being part of the chat every day. And the biggest word in that super chat is authenticity. I just want to maintain that for the rest of my life as I do the show. So thank you for being here and thank you for caring about the content. Out of the basement and out of the closet. Oh my gosh. Would you guys be mad if we changed the bricks? Would you guys be mad if we didn't have the bricks anymore? If we had a different background and it wasn't the bricks? Rocket Lab up 1%. Palantir still holding 84, baby. 84.50. Not letting go of 84. Where's Tesla? Are we still above 450? Tesla 447. Tesla 447. See, all you guys make fun of the bricks, but now all you guys made fun of the freaking bell. Now you make fun of the bricks, but you can't imagine a world without it. You can't imagine a world without it. Lee says, how much would you estimate your Figure AI stake has gone up? Okay, so I have a number in my head for what I think Figure is worth. I don't know if that's the case, but I think it's up like 25x. I think. Just based on my understanding of the market, based on where I think the company is, where I think they're going, based on how much money they're going to have to raise to be able to manufacture robots. They just announced last Friday they started making their first dollars of revenue. So like this is not a startup anymore. This is a company that's actually generating revenue. I think it's up a decent amount. But it's not on paper and it's not liquid. So I have no idea. So whatever I'm thinking in my head, doesn't really matter. But I think it's up there. And hopefully that does well over the long term. Figure could still fail too, right? So that's the risk to being in these investments. My uncle right here in the chat says bricks and bells are part of the show. At this point, I feel like we have to recreate the set, even if we get a new area. Greg says absolutely, I'm here for the bricks. If they're gone, I'm gone. 50 billion. I think Figure is worth 50 to 70 billion right now. I think they are. Again, I have no inside knowledge on this. I haven't talked to the company. I don't know anything about their deals. I just assume, based on the momentum that I'm seeing they're having from Brett's Twitter posts, based on the value that the street's giving to Optimus, S&P 500 almost at 6,000, based on Google partnering with Aptronic, I think Figure is closer to 50 to 70 billion. And again, they're going to have to be at that valuation because they're going to need to raise a ton of money to start mass manufacturing robots. If they have the demand, which based on Brett's Twitter post, it looks like they have a ton of demand, now they're going to need to raise money to like build a ton of factories. And that means the valuation's got to go up. So I do think it'll be up there. Derek actually posted about this as well. Another reason I'm confident in them is because Derek, who again got me into the deal, he is very excited about Figure, and he knows a lot more than Figure about me than I know about Figure. This is what he said. And you guys might think this is crazy, but here's what he said. Happy holidays, everyone. He tweeted this a couple days ago, representing Figure at the airport. Bookmark this post. I predict over the next 24 to 36 months, Figure will surpass SpaceX as the most valuable private company in the world. So Derek thinks in 3 years, Figure is going to be at 350 billion, which is really good for Tesla. Because if Figure goes to 350 billion, then Tesla, I think, is going to be well beyond 2 trillion, because that means the street has officially figured out what's happening with Optimus. So if that's the case, maybe some of you guys think he's crazy. Derek doesn't tweet a lot. He puts out like one tweet every 6 months. So when he puts out a tweet, he like is genuinely believing in something. That is his argument. And I know a lot of people, a lot of the Tesla bros can't understand that Figure is going to win and succeed. I think it's a stupid rivalry because if Figure wins, Tesla's going to win. But if you understand, if you are bullish humanoid robots and you're bullish Tesla optimist, you can't not be bullish Figure unless you don't believe in Brett. And if that's the case, then you have a vendetta against the CEO, and that's a different reason. But you can't be bullish on Optimus and the $450 trillion market potential of humanoid robots and not be bullish Figure, because Figure is like the premier name outside of Tesla that's in the space. And so I feel like you kind of got to be bullish on both. If you hate Brett, then that's another question. But Brett's given a lot of reasons to be excited about his execution this year. So I do think they will continue to do well. Figure is a private company. For those that don't know, Figure is a private company. It's a private humanoid robotic startup. It's not a public company, but they operate in the robot space, and Tesla is kind of the proxy for robots publicly. Tesla right here, 445, getting a little bit of a red candle right there. And I think both will do well. All right, are we still above 84 on Palantir? Are we still holding above 84? Let's see, 83.50. All right, so entire market getting a little bit of a hit. We're all still really green today, but we are going a little red, given Palantir, or given some of these stocks are getting hit from the top levels that they are at. We are still green on the day. 1030, well, we're at 1021. Yeah, so maybe the 1030 slam is coming up a little bit. Amid same thesis for Rocket Lab owners and SpaceX. Yeah, I agree. If you're bullish SpaceX, you have to be bullish Rocket Lab unless you think the company is a piece of crap. And I think the company's not a piece of crap. And if they're in the same sector, a rising tide is going to lift all boats, and Rocket Lab will be higher if SpaceX goes higher. And I think the same thing's going to happen with Figure and Tesla, and it's going to be a pretty wild decade for the robot startups. So robots definitely make sense. Dean Rojas, thank you for the $20 super chat. Amit, so glad I found your channel. Thank you for everything you do. I can't start or end my day without tuning in. I'm learning so much from you and your guests you have on your show. Can't wait for your podcast. Merry Christmas. Deneen, thank you for being part of the show. Really appreciate you being here. Hopefully you guys are enjoying the guests that we're having every day. 2025, we're going to take the guests to the next level. We're going to have a lot more guests, diversify a lot of the show every single day. And hopefully that's going to, make it even more exciting as we get different guests from different perspectives. But thank you for being here every single day. Jel Van Lith, thank you for the 50 euros. I hope to God that's right. Thank you for the 50 euros. I appreciate it. It's got to be euros. There's no way those are pounds, dude. There's no way those are pounds. Those better not be pounds, bro. Thank you for the 50 euros. Appreciate it. Thanks for the content. Best wishes. Thank you for being part of the show. Appreciate you being here every single day and being part of the show here. Archer is up right here. Thank you for the super chat. Appreciate you, brother. Archer, wow, Archer's up 9%. Holy crap. Archer's up. Archer's up 10%. Archer's had a hell of a run as well from $3, dude, a month ago or 2 months ago at $10 freaking dollars. Absolutely incredible. I was right. It's a euro. Okay, perfect. I'm learning at least a little bit something. Okay, let me show you guys this clip. So my uncle shared this video with me earlier this morning. It's a 2-minute video. I want to show you guys this. So he said that, well, let me show you the video and then I want to get your perspective on this. So remember I was talking about INQQ yesterday, which is the India Internet ETF. That is the ETF I'm looking at. Here is someone on CNBC a couple days ago actually talking about India's internet tech scene. There's a couple minutes. We'll take a listen to this, and then I want to get your guys' thoughts on where India internet ETFs potentially could go.
They were booming in the restaurant supply market with their HyperPure offering. But there's another business model that they have deployed that is absolutely exploding in India, which is quick commerce, which is basically 10-minute delivery of anything. And they have a
when
brand
you say anything.
Blinkit,
It's not just food. It's not just food delivery. I mean, anything like an Amazon kind of thing.
Yeah, basically, like at Amazon. And the way it works is they set up a micro warehouse, a dark store, every couple. What you need for this to work is dense populations and low-cost labor on two-wheeled vehicles. And I've seen this firsthand in Bogota, where this business model really got perfected by a Latin American startup called Rappi. But so you got dense populations, you've got low-cost labor on scooters and bicycles and motorcycles, and you put in a dark store, and it's right on the street with the other stores, but it's not for retail people to walk into. and then it's all app based. And so if you want toothbrush or some mangoes or a half a gallon of milk, you push the button, it will arrive in 10 minutes or less.
He's talking about Zomato. And what's really interesting right there is that these are the types of companies that he's talking about in that clip that are in INQQ. And that's why I'm starting to warm up to this ETF a little bit more, down a little bit on the day. The platform companies that are taking advantage of the billions of people that are getting online, those are the companies that are getting more and more exciting to me in the context of India. We got 8363 right here on Palantir. So I think in the next couple of days, I'm going to try to get my uncle on the show. He'll make another appearance since October. And we'll get his perspective on some of these Indian companies. I think you guys would enjoy that. I think I would definitely enjoy learning a little bit more. And it's been a while since we had him on the show, but I would want to know if INQQ is a serious ETF that we want to explore on this channel. Then the companies that are in that ETF, which are like the Zomatos of the world, the Ubers of the India, or Uber Eats of the India, those are the companies I want to be invested in because they're taking advantage of the platform network effects and the overall growth. So I think hopefully in the next couple of days we'll have him on the show. He says right here, Amit got 10-minute deliveries in India 5 times a day, so he knows how cool it is. Yeah, dude, I was ordering anything in India. I just wanted to see how fast it would come to the house. And I was giving some fat tips, dude. I would order something for like $3 and I would give like a $15 tip. I was just splurging. I was just giving away all the money. But the people that delivered, they were like, "Are you sure?" I was like, "Yeah, bro, just keep it." Like, I can't believe you got here in freaking 2 minutes. Tesla right there, back to 450. Not bad on Tesla. So yeah, I think we definitely got to explore some of these other Indian internet plays because those are the ones I want to be invested in, dude. I really, over the next 10 years, I think this is the time to pick small cap Indian names that have legit enterprise platform marketplaces as their core business, like dual-sided marketplaces, the YouTubes, Ubers, DoorDashes of the world, and then lean into those because their valuations should be incredibly cheaper than the American versions of it. Tesla just at 450, a little bit below, 83.42 on Palantir, Nvidia 140, AMD 125, S&P 598, Meta 605, MSTR is up 6%, Grabs up a little bit right here. Apple, new all-time high on Apple, 257. SoFi trying to get past 16. Let me check 16 resistance on SoFi. It's been stuck at 1587 for a bit. SoFi 16 is how many shares? We are looking at 38,000 shares. That's not a lot. If we get the demand, we should bust through 16 pretty easily. But you got SoFi getting a little bit of a boost, and then Tesla right here at 450. Tesla right here at 450. Amit, you are late. The last 2 years were a super bull run in the Indian market. You're correct about that. The last 2 years were a huge bull run in the Indian market, which is why people are saying, why aren't you investing? Because it's expensive. India is expensive, just like the US is expensive. But the difference is I actually want to buy an ETF that I go long on. So I'm not looking for gains next year or 2 years from now. I'm looking for gains a decade from now. B, India is one of the only economies that's growing 7% GDP. America's growing at a little bit under 3%. If we're lucky, we get to maybe 3.5% over the next couple of years. So when I'm looking at international growth, if every market's expensive and we're not going to have some great financial crisis that reprices equities back down 50%, everything's going to be expensive. The least expensive out of things that are expensive are emerging markets because they have so much room to grow. Like Facebook, it's not going to be that easy for Facebook to find the next billion users because they already have everyone using it. Even though I don't know how many people use the Facebook app anymore. I mean, a lot of people still use it, even if I don't use it. But like, the WhatsApp, Instagram, they have 4 billion people. Everyone uses Facebook, or at least has a Facebook account. But Zomato, for them to find the next 300 million people over the next decade should be relatively easy because they're expanding their network effects. So I think as those networks get built, that's what makes them more exciting. Blinkit delivers anything and everything. My wife ordered a last-minute kurta for the boys for a party. Came in minutes. Yeah, Blinkit was one of the ones I was using in India as well. It was just super quick, dude. It was incredible to think that there's that many people that are willing to handle that demand. NVIDIA 140, Rocket Lab 2623. Rocket Lab's up 2.5. Not bad. RGTI, let's look at some of the quantum names. They're all green. Rigidity's up 7%. Google's up a little bit. IONQ's up 6%. QBTS is up 3%, and then QUBT is down 5%, but the rest of the quantum names are currently up here right now. Palantir still holding above 83, trying to get back to 84. I think we get back to 84 because we were holding 84 for like the past hour. So any dips below 84 are not really getting rejected at 84. It's just like people taking some profit. So I think we can get right back to those levels. Is the market open on Thursday? Yes. After Christmas, the market is open. So Thursday, Friday, we got that plus next Monday next week, and then we're done for the rest of the year. And that's it. Three more trading days left. ASDS, thank you for the €10 super chat. Dear Amit, thank you so much for your great work in preaching the Palantir verb so eloquently. Wishing you and your family, your physical and digital here, happy holidays and an amazing 2025. ASD, thank you for being here as well. Thank you for the $10. Appreciate you. And yeah, we'll keep preaching the Palantir verb, as you call it. Thank you for being part of the chat. It means the world. And thank you for being here as well. Lee, thank you for the $14.98 Singapore dollars. Appreciate you, Mitt. Would have done this sooner, but was locked out of my YouTube account. Appreciate you, Lee. Thank you as well for being part of the channel and for watching from all over the world. My uncle here says platform companies have a huge TAM and everything is moving digital. India is expensive, but you have to think about investing for 3 to 5 years. Yeah, I agree. There's dude, we've seen what have happened with Uber and DoorDash and YouTube and Meta, Instagram, like all these platform companies that benefit off massive network effects. They have become the biggest companies in the world because of network effects, because they had a growing population and they were able to monetize the network. So I think it's one of those things where if you can get early into the network effects, it's going to be hard to find the next Instagram because Instagram has all the users. So you have to find what's the next vertical that can grow to 1 billion users. And it's got to be in a place that has 1 billion people willing to actually use the services. And that seems like to me out of pretty much all the other companies that are out there. Okay, let's get an update on this. So I don't know how much you guys have kept up with Nissan and Honda doing a merger. Let's get a little bit of analysis on that. I do think that's bullish Tesla because we're seeing some consolidation, but the fact that these companies are coming together now just means they're acknowledging they probably really can't compete against Tesla.
This is from Beirut, Lebanon, where he has been now almost 5 years to the date since escaping Japan in dramatic fashion. Carlos, it's good to have you. Welcome.
Thank you, Sarah.
So what do you think of this potential merger?
I think it's going to be a tough deal if it happens, because you know that there are a lot of conditions for the deal to proceed. I understand that the CEO of Honda said that the deal will proceed only if Nissan is able to reposition itself and to be successful in their little turnaround plan that they have been announcing, which means if it is not successful, maybe the deal will not take place. Now, if it takes place, obviously Honda is in the driver's seat, it's obvious. And it's going to be very tough because the two companies are a complete duplication one of the other. There is very, very little complementarity between them. And these are two very strong engineering companies. And, you know, the pride of engineers, particularly in Japan, is very high, something to deal with for management. So a lot of conflicts, a lot of arbitrage going to be necessary.
I don't know if this thing is going to happen. Honda had their best day in years when the news was announced for this stock based on the merger. Look, I think we're going to see a lot more consolidation as Tesla gains momentum. One of the articles that came out from Nikkei Asia is that both insiders at the company are realizing from the sources in the article that the ability to actually mass manufacture EVs, if they work together, would give them the potential to compete against the Tesla EV model across the world. Otherwise, if they had these fragmented EV industries, it would be really hard to compete. And so I think that's another reason we're seeing some of that consolidation happen. But will it go through? Will the merger actually happen? And will it, actually be good or bad for Tesla? I think 2025, we're going to have to see. Someone says they're too late. Yeah, I mean, there's definitely an argument that Tesla's running away with this, and it's going to be hard for them to catch up, especially after having my own Tesla. Like, I couldn't imagine any other EV. Archer right here up 15%, pretty incredible for Archer. But like, I don't think any other EV could compare. Now, granted, I haven't tried a lot of other EVs, so I'm definitely ignorant to that. But the experience of a Tesla, dude, is different. It's just different. I would imagine that's how people feel using Palantir software, right? They couldn't imagine using anything else. That's what we saw from that UBS report when they were talking to clients. And it's the same thing for Tesla. When you use the product, it's just hard to leave. Soundhound right here, it's up a little bit. Oklow's up 7%. Another energy play. That one's getting a little bit of love. 7.4%. Meta 606. That's up 1%. Palantir still holding 83. Tesla 449. SoFi 1582. Where is Hood? Hood at 3852, up 2.72% currently right now. Archer passing $10 IPO resistance is huge. Yeah, Archer. I mean, I don't know what's controlling Archer anymore. This thing's on a different level. And if you bought in the threes, I mean, you're doing very well, up 12% right here. There's a real thesis behind Archer, and their announcements they made with Anduril and the defense side of the business also, I think, gives it a real thesis as well. Someone said, why would you do India over China next year? I think there's no problem with China if you believe in their stimulus. If you believe that they will have stimulus, but they will also still be very authoritarian in how they conduct business, then I just would rather trust India, even if it's more expensive and less asymmetric than China. But look, I think China probably has to catch up next year, so China should do well. It's just, again, I'm not willing to sleep at night knowing that my money's in China. But India, I just feel like I understand a little bit more about the way they operate their democracy, the way they operate business. You know, like no one's going to go to the Zomato CEO and tap him on the shoulder if he says something bad about Modi. At least I don't think so. Whereas you say something bad about Xi Jinping, you're gonna get a couple guys knocking on your door. So it's just an entirely different landscape there. Young Lee, thank you for the $20 super chat. Amit, thank you for everything you do for this community. I really enjoy it every day. Happy holidays. Happy holidays to you as well, Young Lee. Thank you for being part of the show. And thank you for enjoying the show every single day. And hopefully you continue to enjoy it further going into 2025. So thank you for the super chat, and thank you for being here. Someone said, are you Tom Lee's child? Oh my gosh. Does Tom Lee have kids? I don't think he has kids. I don't think Tom Lee's married. I saw a picture of him once with a girl, and he was like holding her by the waist. So I think he has a girlfriend. I could be wrong. I have no clue. One day we got to get him on the podcast. We got to get the juicy stuff out of Mr. Tom Lee. Okay, let's get an update on Apple. We saw this morning that Apple is now venturing into the smart home systems. Here's what the street is thinking about valuations when it comes to Apple.
Apple hitting a new all-time high in trading yesterday as it approaches the $4 trillion market cap. Joining us to discuss the outlook from here is Maxim Group Managing Director Tom Forte, who currently has a hold rating on the stock with a price target of $215. Why the recent run-up, besides the fact that we are just seeing mega cap tech working overall here, end of year?
Sure. So happy holidays, Sarah. I think what you're seeing here is a continuation of an AI-fueled rally for Apple on the expectation that AI is going to result in a major upgrade cycle for the iPhone. What's remarkable is we're talking about a $4 trillion market cap, and essentially 1 trillion, 2 trillion, 3 trillion, and now potentially 4 trillion are all on the back of the iPhone.
So why are you still on hold?
If you look at the valuation, it's trading well north of 30 times on a PE basis, which is at or above its peers who are also taking advantage of this AI-fueled rally. And when you look at the next couple of years for Apple on what looks to be a very slow developing upgrade cycle, if there is a major upgrade cycle, you're looking at mid to high single digit EPS growth. So north of 30 times PE, mid single digit, high single digit EPS growth. I think it's, an expensive stock.
You say if, as if you're skeptical that there's going to be an upgrade cycle. It may not be immediate, but if it's rolling, so to speak, isn't that the same thing?
I say if because on a near-term basis, you had a major disconnect between the timing of the hardware and the software. So they rolled out the iPhone 16 lineup in September, and they're rolling out the software, which is really the more exciting part, the AI-related software, on a piecemeal basis into December. And then if you're talking about Europe, potentially April next year. So I think you're going to see a lot of consumers who may want to buy the latest iPhone for the AI related, wait for the 17 for next year. And it's still not clear to me. I think you're seeing a lot of education going on between Google with Gemini and Apple as far as what are the benefits as it pertains to smartphones for AI. And I'm not yet sold that there's going to be an upgrade cycle.
This guy talks slow, man. This guy talks slow. Why do people talk so slow, bro? Oh my gosh. But I agree with him. We got to figure out if this damn upgrade cycle is happening because of the AI capability. I still haven't got Apple Intelligence. I have like the beta version of it. I still don't I don't know. I don't get a lot of value from it yet. But eventually, hopefully it gets better. Amid his default 2x speed, yes, that's correct. Kohl's is up 5% due to 5,000 shirt sales. KSS, huh? This one's been in the doghouse this year. That one's up a little bit currently right now. Robin at 38.53. Palantir still holding above 83. We are green amid stop ignoring SMCI. What's SMCI at? I said, wow, 7%. Look, I don't hate SMCI. I don't trust them, but I don't hate it. If you got in at 17 and you're riding it, it was a good trade. And you went against the grain, which is kind of the purpose of asymmetric investing. You got to kind of find what everyone hates and find a reason to not hate it. So if you got in on the lows, congrats. This one up 7% right here, 34.61. And it's done a good job holding the double since 17. It's more than doubled at one point, but then it came down from 50. It's been doing a good job holding it at these levels. You should give away flower shirts at the meetups. That would be kind of cool. I don't wear them too much, but I wouldn't mind wearing more flower shirts next year. I will have a gift for everyone that we do a meetup with. If you come to the meetup, you will get a gift from me. It'll be a cool gift. I don't want to say what it is. A lot of you guys already know what it probably will be. But it will be, yes, it'll be a brick. It'll be a brick for everybody. No, you guys will get a gift. It'll be super cool. Even if there's like 100 people at the meetup, I'll have 100 of them. And, I think you guys will enjoy it. You guys will be able to use it every day. Let's just say that. You'll be able to use it every day. Zach, thank you for the $10 Singapore dollar super chat. Sending more love from Singapore. Merry Christmas and happy holidays to all. Looking forward to your visit. Zach, thank you. Appreciate you, brother. We got a lot of people from Singapore in the chat, man. Appreciate it. Singapore is I guess the algorithm on YouTube is recommending content more to Singapore. So appreciate you, Zach. Thank you for being here. Thank you for the super chat. And looking forward to a meetup one day in Singapore. It is not a Palantir hat. It is not a DVD for High School Musical, but that would be hilarious. It is not a Grindr subscription. It's cooler than all of those things. I'm not going to say what it is, even though you guys probably already know what it is. Grab right here up 1.3% as well. Robin it up 2.7. But you guys will be able to use it every day. Every day. Again, details for the meetups will come next week. I'm working on all the details. We're going to get it worked out. I'm going to send it to you guys soon. New York will be in January. Still trying to find a date. I think it'll be the last weekend. Very tentative. I'm trying to figure it out. Bay Area will be in February. Most likely the Palo Alto area, Berkeley area, etc. And then March, we'll figure out what we're doing in March. Maybe Texas in March, but definitely New York and the Bay Area for January and February. Amit started talking about Grab, now getting all the algorithms pushing him to Singapore. Nice play. That's probably what's happening. That's probably what's happening. YouTube's like, all right, let's get the Singapore people to seeing it. We should organize Singapore meet without Amit and get Amit on video. That'd be hilarious. That'd be so fun. I got a taxi in here in Panama yesterday. The driver was listening to salsa in every minute. And so the DJ said, DJ Danilito is the effing best. Yeah, a lot of you people are watching as well from traveling across the world. Temu cowbells. Goodness gracious. We can use it every day, but it's not a Grindr subscription. I'm stumped. It will be good. You guys will use it every day. You guys will potentially use it every day during the market open. That's another hint. You guys will use it every day during the market open. So we'll see. We'll see. Don't use Grindr to set up the meetup. Oh my gosh. Dude, our inside jokes are the best. They're so good. Earplugs. Yes, that'll be the gift. Earplugs. I'm not going to say what it is, even though you guys in the chat are guessing. I'm not going to confirm nor deny, but it is what it is. Did you guys see the UNH Luigi guy yesterday plead not guilty? That was wild, bro. That was wild. He was laughing and smiling, and he was like, yeah, I plead not guilty. Like, we all know he did it. Like, it's kind of obvious he did it. I mean, it's pretty damn obvious. Obviously, assumed innocent till guilty in America, but like the evidence is pretty there, bro. He looks kind of guilty. Now, what's really interesting about the case is that the judge in the case is married to a pharmaceutical executive, and the judge has hundreds of thousands of dollars in pharmaceutical stocks, including Pfizer. So this is actually going to be really interesting because my gut feeling tells me there's not going to be a conflict of interest. If there's a ton of evidence, then that guy's going to jail or maybe getting the death penalty. Like, I don't think it's going to be pretty for him, but you never know, bro. You never know. It's going to be pretty wild to see how that case plays out. So we're going to see. We are going to see how that plays out. Josh Fahrenheit, thank you for the $2 super chat. Mayo Christmas, everyone. All right. Should have said Merry Christmas. I get why you did the mayo there, but thank you, Josh. Appreciate you. And thank you for you being part of the show. I heard his lawyer is also a significant other of the Diddy's lawyer, IDK Truth. No, that's correct. Diddy's lawyer is also a significant other of his lawyer, and he's staying at the same cell as Diddy. It's kind of wild, bro. The whole situation is just insane. I remember finding out the news when we were on the way to New York, literally for Robinhood's Investor Day, and me and Roy were in the train, and I'm like, United Healthcare CEO shot. I'm like, what? Like, that is wild, bro. Absolutely wild. SoFi right here, 1588. But that is going to be one of the biggest cases of 2025. MSTR 351. That's up. SMCI is up 8%. Yeah, SMCI getting some love. Amid, who are your top 5 analysts of 2025? That's a good question. I think we got to put Dan Ives up there. We got to put Tom Lee up there. I'm definitely going with Gabriela Santos, 100%. Gabriela Santos, she's up there for me. Josh Brown. Got to give Josh Brown the nod. So Josh Brown's up there. And then I need one more, right? Someone I like listening to. I don't know. Gabriela, Dan Ives, Tom Lee, Josh Brown. I would say Bryn. What's her last name? Bryn on CNBC? I forgot. Is her name? What is her name, dude? Bryn. She's awesome, dude. She's like super. Bryn Talkington. I love that woman. She is amazing. Her analysis she's just super rational, in my opinion. She doesn't get overly excited, overly emotional. And I love listening to her. So Bryn Talkington is up there. She's up there for me. Chris Patel. Yeah, well, Chris is an analyst on my show. I'm thinking of like the Suits on CNBC, but Chris is also another one of my favorite analysts. We got Paper Gains right here in the chat. Paper, I showed them your MSTR tweet. You're triggering a bunch of people, and I love it. He texted me this morning. He was like, do you think this is going to be too bad to post? I'm like, dude, if you're ready for the backlash, just do it. And don't care. Dude, people get too emotional about Saylor on Twitter, bro. People it's like you're allowed to criticize the strategy. It's not that big of a deal. So look at that. He's already getting all these people in his comments coming at him around Bitcoin and MicroStrategy. But yeah, I would say my favorite 3 YouTube analysts are Jason, Chris Patel, and I got to give it to Mr. Stephen Fiorillo. Steve's up there. I talk to him pretty often. We got Matt Money in the chat. Matt's up there as well for YouTube analysts. Who would be my top 5? Matt, Steve, Chris, Jason. Is there another analyst I talk to? Strongman? Yeah, Strongman personal. I love Strongman. Strongman is great. Oh, Jose. That rounds up my top 5. There you go. Those are my top 5. Those are people that actually come on the show frequently. Jose, Matt, Chris, Steve, and who's the other person? Jose, Matt, Chris, Steve. Who's the other person I said? Who's the last one? I forgot. Oh, Paper, Jason, and Jason as well. Those are my YouTube top 5. Amir mainly talks about Palantir Weekly. I mean, he doesn't come on the show too often. But next year, I got to get more of these guys come on the show. Like Arnie, I got to get them on the show more. It's just Amir and Arnie are in Europe, dude. So it's totally a different, they would have to stay up super late just to do the show. And that's annoying for them. They want to go to sleep. They don't want to be up just for a 10-minute segment. So that's the only problem with them internationally. But if they were local, dude, if Arnie was in the States, he'd be on the show every other day. They would be so easy to have him on the show. And I know he loves doing the show. It's just tough. You forgot Meet Kevin. Meet Kevin is probably not up there in terms of my top 5 analysts this year. Maybe next year. But this year he had a little bit more of a bearish spin on the market that didn't necessarily come to fruition. So it's not up there for me. Not this year. Juju B, thank you for the $20 super chat. Thank you, Amit, for sharing your knowledge. Merry Christmas to you and your family. Juju B, thank you for being here, a part of the show. Deeply appreciate it. And for being part of the content and enjoying it every day. And Avkar Agrawal, thank you as well for the $20 super chat. Merry Christmas. Appreciate you, Avkar. Thank you for being here. And thank you for being part of the show. Omorphy, I'm sorry if I'm saying that name wrong. Thank you for the 38 Hong Kong dollars. I love you, Amit. Can't start my day without your market open and end my day with your market close. Thanks a lot for everyday content. Appreciate it a lot. Thank you, Omorphy.
for being part of the show every single day as well. Appreciate all you guys. It really, really deeply means a lot. And it's super cool, dude. Super cool. We were doing the show with 40 people in 2022 every night. Late night stock talks. Robin right here, 3871, Tesla 451. Tesla breaking above 451. And now obviously it's different, you know? It's really cool. I think the cool thing about this journey has been like the growing up in front of you guys too. You know, that's the cool thing. And like we're just getting started with the process of growing up. I plan to do this for a long time. So, you know, you guys will see me turn 30. You guys will see me get married one day. You guys will probably see me have a kid one day. Like, I do think this is a long game. I think we're going to be doing this for a while. I was thinking about this last night. I was like, am I really going to be doing this for the next 10 years? And then I thought about it. I'm like, well, I care about the markets. I care about analyzing them every day. Like, I don't know why I wouldn't do this. Like, I would be kind of bored if I was not streaming right now and covering the markets. I would be talking to myself about the markets. All I'm doing is having a camera in front of me. So I feel like we're going to be doing it for a long time. Dude, these grinder jokes, I'm never going to escape them. Dude, I will have a full-on wife on the stream one day, and you guys are going to be like, so is she a front for your actual grinder relationship? Like, that's going to be the jokes. And she's going to be confused. She's going to be like, why are these guys keep saying you're gay? And I'm like, honey, I don't know. This is just, they're going to double down on the thesis now. They're going to double down. Kenom, thank you for the $20 super chat. Hi, Mid. Merry Christmas and Happy New Year. Thank you for your hard work. Been watching your show from day one. I love it. Thank you for being here. Appreciate you, Kenom. Thank you for the $20 super chat. You guys don't have to send the super chats. I really appreciate it. So thank you for being here today. And appreciate you being part of the show. Where is Palantir? We're still above 83, holding 83. SoFi 1588, Bank of America 44, Nvidia 140. Again, markets are still pretty damn green. We're not red yet. We're past 1030. Bitcoin is 97,800. Bitcoin may be getting above to that 98,000 level, which would be super exciting for Bitcoin. But we are definitely above that 92 low that we were at yesterday as well. You did have a beard before. Oh my goodness. Goodness, bro. Paper's not helping. Paper's not helping with the grinder jokes. Will the girlfriend be on with you? Well, yeah, I mean, look, I'm saying one day I'll have a full-on wife, but I don't know if I'll ever bring her on stream, dude. I feel like there's a certain level of privacy you want to protect in your life. And, you know, a girlfriend, a wife, these are things. But then again, I don't know, dude. You guys are so part of my life. Like, I feel like she's going to want to meet you guys. But I think it would be one of the, you know what I would hate for it to be is when you pimp out your relationship for content. I've seen, like, I'm pretty sure everyone has seen like the YouTube couples that do that. And like, it turns into a shit show and a disaster because like then the content becomes more important than the relationship. And I think you have to be very intentional if you're going to be a public figure with a significant other to not do that. Cause like that can get really sour really fast. So I think she'd be interested to like meet you guys and stuff, but I don't think she would be like a person on the show every single day. Like it's just, you know, because then it becomes a whole different ecosystem on navigating it. Some things need to be separated. 100% agreed. Some things just need to be separated. But I imagine one day she'll be calling in and I'll put her on speakerphone and she'll be like, pick up your clothes or something. That would be hilarious. And that's one of my mom's biggest things, dude. My mom is like, you need to make sure that your wife doesn't complain. Like I'll leave I won't put my shoes in the closet. I'll leave my shoes just like on the floor when I walk in the house, or my jacket. And my mom will be like your wife's gonna kill you. Like you need to put your jacket in the closet. Like she's not gonna tolerate this. I'm like, is she really gonna care if my shoes are out? Is she really gonna? She's like, yes, she will care. I'm like, maybe you care, Mom. I don't know if she's gonna care. But yeah, those are things we definitely have to make sure we do well. Bionic says, don't screw around with these family plans. Maybe take it every bit as serious as your life savings, as investing your life savings. Yeah, I agree, dude. It's getting to that point in life where you got to start thinking about the future. And, you know, I want to have a big family. So definitely got to get to that point. I feel like I'm young, but I'm also not young. At 27, you know, I know that's young, but if you want to like really start a life and have kids and all that stuff, I mean, it's coming up. It's coming up in the next 4 or 5 years. Like that process is going to have to start. So we're going to have to get ready for that. Joe says, Mick, can you just rant until the close? How many hours till the close? Till 1 p.m.? Oh boy, dude. I don't know if we're going to stay live till 1 p.m. That's going to be a lot. Boeing's at 180. We're green on Boeing. Apple's green as well. Hood is green. The market's kind of, I mean, I wouldn't say boring because everything's green, but it's not like anything crazy is happening. And there's no headlines I'm seeing in the market. So nothing too crazy happening when it comes to the market open. Tom Lee will be on at 1 p.m. for the closing bell. All right, so we'll have Tom Lee on today. How many shares of Grab do you want to own? I would like to have 10,000 shares, and that would be the position. And if it dips all the way back into the low fours, I would double down on that. But if not, my average is like 518 on Grab right now. So a little bit underwater on it, but I would want to have 10,000 shares in that 510 to 520 range. Tesla 450, it's holding up. That is correct. Tesla 450 is indeed holding up. Bought one MicroStrategy today, 2.5% crypto allocation now. What do you think? Look, I don't hate MicroStrategy. I think my favorite crypto play is Robinhood. I've been saying that since January. And I honestly, dude, I think it's been the best crypto play. Obviously, MicroStrategy has been a better crypto play in terms of pure returns, but you've had to be in the right moment and you've had to deal with the volatility. For a low volatility, low compared to MSTR and the Bitcoin miners, but still massive upside from Bitcoin, I think Robinhood's been like the obvious answer. It's been better than Coinbase, it's been better than all those guys. And I think it's still cheap at these levels because it's a real business. So MSTR is cool, but you're buying MSTR up 400% year to date, and it's not a real business. It's a Bitcoin treasury. That's the only thing you have to remember when you think about MSTR. Versus Hood, it's a real business, and Bitcoin is a broader catalyst for them. Amit, what is a better investment in 2025, Zomato or Grab? Well, you can't buy Zomato if you're not in India. So I think Grab is a better investment, but you can buy Zomato through Indian ETFs like INQQ. But I don't know which one will do better. I just know you can't buy Zomato because you're not in India. And in general, I don't know which one's going to outperform, but we kind of don't have access to the other one. Wow, Tesla 452. Holy crap, dude. Tesla is not stopping. Not stopping at all. 452.52 is where it got rejected at. Now it's at 451.70. Tesla is not slowing down. Bought some Grab since I use that service when I'm in the Philippines. Convenient to order food at night while you're in a hotel or restaurant through Grab Foods. Yeah. Dude, they have 42 million transacting monthly active users. That number is going up. Like the Grab thesis is pretty simple. Unless they mess up earnings, which it's possible they can mess up earnings. But if they don't mess up earnings, every metric is going up and to the right. So this is one of those that conviction's pretty high because it's kind of obvious to me. And not a lot of people are talking about it. It's not obvious enough to the point where everyone's on the bandwagon yet, which is what you kind of need if you're buying something that you think can double or triple from here. Gerald, thank you for becoming a channel member. Appreciate it, brother. Thank you for becoming a channel member here. Sudhir, thank you for the $10 super chat. Thanks for sharing your knowledge and your efforts, Amit. Hope you become a multi-millionaire soon. Appreciate it, Sudhir. We are on the pathway, hopefully, for becoming a multi-millionaire. And hopefully everyone else is on that trajectory as well. Dude, it would make me no happier than in 2030 if all of us, or a good chunk of us, are sitting in that 7-figure net worth range. I think it's possible. That's what, 7 years from now? I think 7 years from now, or 5 years from now, I think, first of all, a decent amount of you. I mean, if anyone wants to say it in the chat, you can say if you're in the 7-figure status. But I'm sure out of the 2,400 people here, there's a decent amount of you that are in 7 figures. And I think for the rest of us that are growing, hopefully in the next 5 years, just by expanding our skill sets, investing in markets, there is a shot we get there. Casey said getting close. Edward's there. Georgie is there. Jimbo says not even close, but hopeful. I would imagine there's a decent amount of you that are at least up there. And a lot of that is because a lot of you guys are older. You've had time to compound your money. You've saved money. And so in general, just through the macro data, Fidelity has more millionaires on their platform than ever before based on this bull market. And as long as this bull market doesn't collapse, then I think that, that's not going away anytime soon. And with all the verticals opening up in 2025, there's a really good opportunity the next 5 years for this to legit be the roaring 20s and for people to make some life-changing amounts of money and go on with their lives. Doug says the first 100K is the hardest. That is a fact. Paper says no, MicroStrategy is the possible destruction of crypto. I legit couldn't sleep. Well, Paper, if you're right on your short, you're going to make a lot of money. And you're going to piss off a lot of the MSTR bros on Twitter as well. I think the first 100K is the hardest I think the first 100K is harder than the first million, in my opinion. I think the first 100K is harder than the first million because to get to 100K, you're going from 0 to 100K, right? Like, it's tough. You got to save up. You got to deal with, you're probably new to the market, so you're going to invest in some stupid biotech that you think is going to cure every cancer out there like I did, and you're going to lose 20,000 out of that initial 100,000. Like, you just got to go through those initial mistakes to get to the first 100K. And then getting to a million is a 10X, which is hard, but it compounds more aggressively than getting to that first 100K, I feel. So I do think over the long term, it is easier to get to a million once you get that 100K. A million too. I think over time, a million's not going to be that big of a deal. Like, a million is still a big deal in our culture, but as A, inflation goes up, and B, technology improves, a million is going to be something that is going to be a milestone, but it's not going to be like, oh my God, like you're a millionaire, because I think more people will be millionaires. More people will be invested in equities that will give them the opportunity to increase their net worth. Inflation in general is going to devalue what $1 million was from 2025 to 2030. And then if Bitcoin goes to the moon, hopefully we got a ton of Bitcoin millionaires as well. So there are definitely a lot of avenues to get there. Nate says 5 million will be the new 1 million in 10 years. Yeah, that's definitely going to be the case. SoFi 1590. SoFi 1590. Yeah, I do think 5 million will be the new 1 million. Eric says the first 100K should mostly come from your day job. I agree. My first 100K came primarily from me having one of my larger consulting clients. It's kind of wild to think back on it, dude. From 2021 to 2022, actually, sorry, from 2019 to 2022, so let's call it 3 years. I didn't have a 9 to 5, but I had a client in my public speaking consulting firm, which that's how I paid for my bills and all that stuff when I was younger. That I had a client that basically felt like a 9 to 5. So it wasn't a 9 to 5, but it was a client that I had to drive to 5 days a week. And it basically felt like a 9 to 5, even though it wasn't a 9 to 5. But my hours were like 3 p.m. to 11 p.m. But I had to leave at 2 p.m. because it's an hour-long commute. And so I had to leave at 10 p.m. And so I would get home at 11. So I'd basically gone from 2 to 11 the whole day. I would literally not see my parents for those 3 years every single day. And I think I was making like 50 grand a year. So it was not a ton of money. And I had expenses and all that stuff, and I was paying for college, but it was a ton of traveling and work. And I just remember every day, like, there was a long freaking commute, and you'd get there and you're tired and you don't have time for lunch. And like, it was part of that struggle, but that's what got me that first 100K. And sometimes I forget, I was working pretty hard to save up that initial 100K. Like, sometimes I forget, like it's a distant part of my life right now, but dude, I would wake up on Saturdays at 7 a.m. because they had me working Saturdays. They gave me off on Mondays and they had me working Saturdays. And so, like, what are you going to do, right? If they're paying you on Saturdays and not Mondays, then you got to show up to work. And I remember I'd be up at 7:30 on a Saturday, and it would suck to wake up that early, and I'd be in the car and I'd be off my way driving half asleep. But you just had to do what you had to do to get that first 100K. You had to grind, and you had to enjoy that grind. And I never complained about it ever. I never complained about it. I just told myself I'm not going to be in this job forever. I'm not going to be in this position. This is a temporary means to get somewhere. It's paying the bills right now. Got to get through it. And eventually we'll move on. Robin it right here, 38.83. And then you discover the equity markets, and freaking what you made in a year, you're up in 1 month. And you're like, holy crap, what is this? Like, you could make $50,000 in a month. Obviously, that'd be hyperbolic here, but you get my point, right? Like, you could make $500 in a day when it would take a week to make $500. Like, it is just such a different world. And the approach to the markets on making that $500 a day or $50,000 a month is not through gambling, not through, let me just buy the stock and hopefully it YOLOs, but through something that I think is a lot more legit, which is selling options. Now, it takes a lot of money to sell those options because you need to have a lot of collateral. But if you can save up the money, getting 1 to 2% a month on 400 or 500 grand, if you can save up to that, that's a game changer, dude. You get 3% on 300K, quick maths, that's 9K a month. 9K a month is amazing. Like 9,000, well, it's more like 6,000 after taxes, right? But still, that's not bad. And that's why I think that's one of the big wins of 2024 has been this community figuring out what wheeling is. And we've got TJ really to thank for that, because TJ really made it a priority to help us understand it. Tesla right here, 450. But once you find out you have 100K and you could get 2% a month and you could get 2,000 from that 100K. Now, there's risks associated with that. But if you're being relatively conservative, let's go 1.5. Let's not even do 2%. 1.5. $1,500 a month. That's 18% a year. When you discover that is a potential strategy in the equity markets, it changes your whole outlook on exchanging time for money when it comes to the labor market, because you're not compounding money aggressively based on getting an ROI. You're giving up your time, which is the most precious asset we all have because we don't get more of it, in exchange for money. But you got to go through those initial phases to get to the point where you can actually have 100K to wheel for options. Jimbo says, I don't think I'll ever understand it, but I'm happy for y'all. I'm going to make sure in 2025 people understand it. I know options are still a little complicated, and obviously people should take their time with learning it. But I think we will do even more breakdowns next year to really get it, because I think it's life changing, dude. I think it's life changing. I think when people understand how to sell options, it is literally life changing. And I think like 500 of you guys messaged me for the wheel spreadsheet. So a lot of you guys obviously have recognized the potential benefits it has for your own personal incomes. It's real, dude. And I talk to a lot of option sellers outside of just TJ. There's a bunch of them on Twitter that I DM with, and I'm like, dude, like, does your family know about this? Does your friends know about this? Like, do they know you're taking 150,000 and you're making 3,000 a month? And they're like, dude, I try talking about them. They don't care. They don't care. They're like, I try telling my friends about this when we're at a bar, and they're just like, oh, here, this guy and his stock market stuff. And it's like, I resonate with that. And I'm sure a lot of you guys resonate with that as well. You think like you would introduce it, because when you bring an opportunity to your friends and it's about money, they're already so skeptical, right? And they think it's a scam or whatever. And it's like, a lot of times it is a scam. But there are some moments where like, no, there's a legit thing in equities with financial derivatives that can yield life-changing returns at a very conservative rate. But you got to be able to put in the time to learn about it. Otherwise, it's tough. Angel says people care more about the Kardashians than the stock market. Yeah. People care more about the Kardashians than the stock market. Adam says right here, going to take it very seriously, 2025, keeping a full spreadsheet for options and dividends. Maybe I come on your show and we do an update for people retirement living. Yes, Adam, that is a great strategy, or a great idea. I think we should do that. Adam, again, you guys know, Adam has said publicly he was in MicroStrategy. He's made some good money this year. So now he's focused on taking that money and wheeling it. And when you have a lot of money, dude, even 1% a month is, because that's what, 12% a year. That's still beating the S&P, not for the past 3 years, but on average, it's beating the S&P. That's if you're just worried about protecting your money and getting some return, 1 to 2% on a big base, that's enough to live off. That's enough to be pretty happy living off as well. 82.47 on Palantir. We're down from 84.80, but we're up 2.2%. Currently here right now. Uncle says, I have finished 2 books on options the last 2 months and are now rolling options and selling both puts and covered calls without fear. Thank you, Amit, for teaching us in India. Yeah, dude, my uncle is a prime example. My uncle is a prime example of someone who, dude, my uncle's been investing for 10 years. And like, yeah, it was actually really funny. Chris, I see you in the chat. I'll call you in a second, Chris. It was so funny because one night we just sat down, and my uncle's got a good amount of money, right? He's been working for the past 20 years. He's got money saved up. And I'm like, you could do this with the money and get a return. And my uncle, he's very money focused, money minded. And so instead of shutting off the idea, he was like, all right, what are you talking about? And I was like, so there's this thing called cash secured puts, and you can collateralize the money. And if you are correct around the direction of the stock, the worst case scenario is you buy the stock. But if you like the stock, blah, blah, we went into the whole spiel. And he didn't believe it at first. He was like, what are you talking about? It was like, this is not real. It was like, this. I was like, no, this is real. He's like, this is bullshit. I was like, no. What's bullshit is buying options and hoping that the stock goes up and then making a ton of money. You've got to be really right on the movement of the stock at that point. And you got to have an asymmetric move. What's not bullshit is selling the options to all the gamblers that want to buy them and just being able to risk mitigate if the gamblers actually win against the house, which they will win sometimes, but the majority of the time the house wins. And once we broke it down, he was very, very excited, and then just like started using the piles of cash he has to make some returns. So the reason I brought this up is because, again, for anyone who's in a 9-to-5 or who has lived the 9-to-5 life, when you experience that life versus understanding what you can do in the equity markets, if you just put some time and effort to dedicate, because 99% of the world isn't doing that, it's just a game changer in terms of how the markets can return. Okay, Chris, I'm calling you. Let's get you on the show. Hopefully your service is good today. Try to get Chris's thesis as well about PayPal and see if he still thinks it's a short. I think we got him. Kris, one sec. Let me get you off my Bluetooth. All right, what's up? Good morning. How are you?
Good, man. I was just listening. I was me and the wife. We were driving home from the cabin.
Yeah, everyone said your wife snatched the phone from you yesterday when you tried to get on the show.
No. It's just the mountains. Like, you don't get a lot of great reception, and the cabin doesn't, like, the cabin that we were staying at didn't have Starlink or anything. So it was a little bit, hard to communicate. So yeah.
Can we start off with this PayPal thesis? Do you still think that there's an issue with PayPal?
I'm starting to lose faith in it, but we'll see what happens. It's something that I'm going to keep an eye on, but I didn't see it gain nearly as much notoriety as I thought it would, and it hasn't gotten as much press coverage as I originally had thought. But I always have a backup for this, and I already know that like January, February, we could see a pullback, in which case, unload the puts that I bought and just call it a day. I'm already down like 20% on those puts, but I didn't buy very much relative to my portfolio. So it's not like, oh my God, like I'm, going all in on going negative on PayPal. It was more of a quick in and out trade, hoping that the news and the sentiment would get bad enough to the point where people would dump, so.
Yeah, I mean, my thing is just like, I don't know how bad the news would get, but that video did go viral on YouTube, right? About the scam around the affiliate links, and I guess it just needs to go really viral for it to affect PayPal.
Yeah, I mean, I think the key is, how is PayPal going to deal with the fallout of this? Because they spent about $4 billion to acquire Honey. And if this whole thing ends up being a flop, then they'll have to write off the entire investment, So we'll see what happens. Like I said, right now, I don't think a single content creator is going to want to affiliate themselves with Honey, which means the new members are definitely out of the question, which means that now the only members that you'll have are ones that are going to naturally like bleed off via attrition. So once again, that's a business that's not going to do very well for it. So like I said, the one thing that I just don't know is what the total impact of this is going to be on PayPal. And a lot of people that I've spoken to said, it's a nothing burger. It doesn't even register that much on PayPal's overall revenue. So it's not like the biggest thing. Now, if they do have to take a write-off on it, like, it's probably not anytime soon, but if they do have to take a write-off on it, that's going to be something big. The other more challenging thing is, could there be a class action lawsuit that could theoretically get into the news and the headlines, in which case now you have to deal with the fallout of that press. So,
dude, I forgot they even owned Honey. When I saw the headline, I was like, oh yeah, they did pay for this shit. I forgot that was a thing.
Yeah.
All right. So what are your kind of thoughts as we end out the year 2024 going into 2025? We got 3 days left of the trading year. How do you think 2024 has been? And what are you kind of looking forward to for the markets next year?
Well, before we do that, let me just say, I know you guys are trying to learn about wheeling and dealing and all that jazz, but in the long term, wheeling, in my opinion, is not something that 99% of people should be doing. All right, as a viable investment option. The amount of money that you end up ultimately like making off of it, it's not nearly the amount that's justified based on the risk that you're taking by doing the selling. Because from a risk reward adjusted point of view, you're basically competing against Wall Street doing their part. And a lot of the options pricing, as it gets closer and closer to the date that you're in, it's actually not very good in terms of risk to reward. Like even TJ's portfolio, like all the wheeling and dealing that he's done, he has not made that much money doing the wheel strategy. Most of his returns for the year have actually come from his SoFi naked calls, from what I can tell. Because I don't watch his show religiously, but from what I could tell, majority of his total returns have come from that, right? Or have they come from the wheeling?
No, you're right. So I think there's nuance to this. Number one, I just disagree on wheeling not being the right strategy. And the reason I disagree on that is because, yes, like if you buy naked call options, which he did on the SoFi $15 leaps, and SoFi goes to 17 or whatever, and he bought them at 7, they're always going to outperform 100%, right? Like if you You buy them at 77 cents and they're trading for $8, you're going to make a better return. The thing I like about wheeling is if you have a SoFi position and you want to buy more shares, but you don't want to buy them at 15, you want to buy them at 13, I don't see any problem with putting up collateral, getting paid to wait, and then if you have to buy, you buy it at 13, and if it goes up, then you get more shares for capital appreciation. Now, the part where I think you can get your hand stuck in the cookie jar, as TJ says, is the covered calls, which, yeah, I mean, if you had covered calls on Palantir or SoFi, NVIDIA this year, that is definitely capped returns. But in terms of as a hedge to the downside, which a covered call can be, or as a way to enter, like, I don't want to buy Tesla at 450, but at 385, I don't mind buying it. And if it doesn't get there, I am happy to take that return. I think that as a strategy is not the craziest idea. If you manage
right. Well, the thing is, like, remember, the goal of wheeling and dealing is not to buy something at a price that you like. It's to basically keep generating income by buying and selling constantly.
Well, no, I disagree with that. I disagree with that. It should be a price you like. The problem with wheelers is they buy bullshit stocks and they pay a price they don't like, but they like the premium, like MSTX, MSTR, juicy premiums.
Yeah, and that's naturally how you end up. That's one of the challenges with wheel strategy is that your greed centers. I mean, everyone's got a monkey brain, right? We're always like drawn to greed. What ends up happening is you end up wanting that premium, and the companies that typically give you the most premium are the ones that are most high volatile stocks. So what ends up happening is now you're always like looking for the more riskier thing, right? So it's like, oh well, I could buy a covered, like I could sell a covered call on a company like Google, but I'm not getting a lot of premium because
Yeah, but Chris, if Google stays flat, you are making money off of gamblers that are buying calls on Google. That's the benefit.
What I'm trying to tell you is that naturally what ends up happening is over time, you're going to be like, well, you know what, maybe I should sell covered calls on MSTX instead, right? And that could blow your portfolio up. So that's what I'm trying to say.
But Chris, you got to admit, that's a problem with individual people, not the concept of wheeling. I agree with you.
Right.
But that's a problem with people that get too greedy.
But that's what I'm trying to tell you, that's why 99% of people don't make money trying to do wheeling, because 99% of people can't control their greed centers like that. Okay. Well, I mean, and especially at the average person level, definitely. I mean, how many of our friends right now are stuck with calls that they've been rolling on Palantir? I'm not going to mention names, but you know who for the last.
Well, no, years. obviously, Steve is. But there's two nuances to this, Chris. Number one, Palantir. No one expected Palantir to do the run that it did, so I don't think we can blame people. Or it's like that. That's just.
I'm not blaming people. I'm just saying from a risk-adjusted standpoint, this is one of the challenges that you run into with trying to wheel things, which is you don't know what the market is going to end up doing, and you could be caught off sides on a certain position, right? And the thing is, you're basically when you're selling an option, you're literally taking on risk, okay? Whether that be to the upside or to the downside, you're absorbing risk. You're basically an insurance seller. You're trying to basically outperform the market, but at the same time, people are like, oh, someone's going to give me, someone's going to take away the risk and let me capture the upside. Sure, I'll do it all day. Like think about it from another perspective. Okay. You've done very well being what? You've been a much better returner by betting on the upside of things, right? And using an option strategy that lets you magnify your total returns by doing that from both a capital appreciation standpoint and from a tax efficiency standpoint. You can't do that with wheeling. Even if right now you made $1 million in wheeling, Uncle Sam's going to collect half of that. There's no long-term capital gains benefit either, because you're always going to be wheeling short-term stuff. You know?
I mean, look, obviously the tax part is inevitable. You have to pay taxes, but I think I disagree here on this premise. I got very lucky finding Robinhood at an asymmetric price and buying call options on it, doing the call debit strategy that you've taught me and a lot of other people. And that's worked out really well. Life-changing returns. But I was gambling. Like, make no mistake about it. I was gambling, and I was hoping to God Robinhood would go from 8 to 20. And thank goodness, I'm very grateful it's at 40. But like the far majority of the time, unless you're the best stock picker in the world, which you're up there, so you can go through this. Most people cannot find a stock that is undervalued and have a massive 700-800% return over the course of 2 years in leap debit spreads. But most people can appropriately say, hey, Rocket Lab at $18 is a deal. I can get 1 or 2% on collateralizing 1,800 to make $100. I'm gonna take that bet. And if I have to buy Rocket Lab, I don't hate it because Matt Money tells me Rocket Lab is going to the moon, right? Like most people can do that.
I'm in total agreement with you, but the thing is, remember, when it comes to what I showed you, right? You're basically taking $1 to make 5. Okay, you're risking $1 to make 5. When you're selling cash secured puts or selling calls, you're literally doing the opposite.
No, but
okay?
Chris, this is the
this
is the difference. That $1 could go to zero.
Right,
on my side, on the wheeling side, that money doesn't go to zero. It might decrease, but then I just own underlying equity that has zero time to expire.
But that's what I'm trying to tell you. You're taking that $5 and saying, I'm going to risk this $5 for the possibility of making this $1.
No, but that's the point. Your risk is limited because it's easy to get.
No, your risk is magnified. Why would you? Okay, right now, let's go to the casino and I tell you, okay, if you put your money on this one thing, right, the most you're going to lose is $1, but you could make $5. Okay, versus another thing, put your money on one thing that cost you $5 and the only return you're getting is $1. Which one makes more sense from a risk to reward?
You're not losing 5 though. That's my point.
Who says you're not losing 5? You're
because
taking risk with 5.
Well, if you buy puts at or sell puts at SoFi at 13 and it's at 14, and SoFi goes to 13, or it hits your break-even price, and then you have to buy those shares, you haven't lost any money.
$1, but what if it goes to $1?
But what if? Hold on, but what if you buy a call debit spread on SoFi and it also goes to $1? Then you lose everything. Then you don't even have the stock.
Right, but that's why you don't go all in and buy everything with that one risk thing. You don't do that. That's what I'm trying to tell you.
No, but Chris, you're not making sense here. You're like, or at least I'm not getting it. If you buy an option, a call option on a stock, the stock has to have a dramatic move for that 1 to turn into 5. And if it doesn't happen, that 1 goes to 0. You lose the premium you paid as the call buyer. If you sell a put on a stock and the stock, and let's say it's 20% out of the money, the stock falls 20%, which is a substantial decline in any stock for it to fall 20%. And then you have to be the proud owner of 100 shares of SoFi. You haven't lost any money. B, if SoFi keeps falling, you will lose money, but you're not on an expiration date because SoFi, if they're not going bankrupt, you have the shares forever. C, if you're only risking 5 to get 1, but you're happy with that 1 because the downside is that you don't lose the 5 unless SoFi goes to 0, whereas your option could go to 0. That's way more risk perverse to me.
But that's what I'm trying to tell you. It could go to 0, and now you have to lose that entire $5. Bro.
Wait, but Chris, your call debit spread could also go to 0 as well. What's the difference then?
Right, but you're only risking 1 to make 5. Just dude, do the math.
No. But so we shouldn't assume it's going to 0 then, because no. This is how we should interpret it. The call debit spread has an expiration date, which legitimately will go to 0 in a year, 3 months, whatever your expiration is. The stock, unless it goes bankrupt, is not going to 0. So your argument that, it could go to 0, well, if you assume you're selling puts on the shittiest companies in the world, then sure. But if you're selling it on a company that's not going to 0,
let me just say something, okay? Even the greatest companies on the planet, okay, can go down 80%. Meta went down 80%. Google went down 50%.
Yeah, no one's denying that. No one's denying that.
But the market can never be in a position where you can say, the markets can't go this low or can't go.
But Chris, if we bought options on Meta at 88 and Meta goes to 0, your options are done. You lost all the premium. If Meta goes to, let's not say 0, let's say $10, right? Your options are cooked. They're done. If you bought it at 88 and Meta goes to 10 and you're bag holding, you still own the stock. That's the difference. And you can hold the stock forever unless Meta goes out of business.
Amit, that's what I'm trying to tell you, man. Like right now, what you're saying right now, you really have to pen and paper it out. You'll understand what I mean by risk to reward if you do it like that. So let's say with Meta, you're not gonna go out there and say, let me take my entire portfolio and buy Meta call options.
I agree.
Okay, that's you don't do that. But you also don't be like, okay, let me go full port Meta and start selling cash covered calls. And let's say you did start selling covered calls. Meta could go up to 500, and the only money that you're gonna make is that premium that you got.
But Chris, you're being disingenuous here. What if Meta stays flat? What if it doesn't go to 600? What if it goes 10% lower, and then you print money on the covered call because some gambler thought it was going to $607 by the end of next week.
But Amit,
which is more likely to happen that it doesn't get to that level, actually.
That's what I'm trying to tell you. No one can really tell what's going to happen in either way, but from a risk to reward standpoint on what you're trying to, what you can get as a total return, wheeling versus what you can do by just buying the underlying stock or buying a long-term call option is really, really different. Like, first of all, I don't want to compare two different option strategies. It's probably not.
But that's what you've been doing. You've been comparing two different option strategies, and
what I'm trying
you're trying to make an analysis that one is a expiration. One is something that expires worthless. The other one is something where the worst case is you have to either sell your stock for a profit or own the underlying shares. I don't see how that version is more risky than the one that could expire worthless.
Oh man, all I'm just saying is, I'm telling you, look at it from a risk to reward standpoint. And I'm telling you, when you're trying to wheel, especially short and medium term options, trust me, if this was something that worked really, really well and everyone, if it could be done, the algo traders do this all day in the background. Like, there's literally advanced computers that are in the background that are basically setting these prices for you to fail based on the probability over a long time. Like, literally, you do not want
Chris, you do not have to beat the algos. If you like Robinhood at $35 and you are comfortable owning it, I don't give a fuck what Citadel thinks about Robinhood. If I want to own it at 35 and someone's willing to pay me 2% to wait a month to get it at 35, if it comes to 35, I buy. I'm happy. If it doesn't and I keep that money, I'm good.
That's what I'm trying to tell you, that the shit could go to $70 tomorrow, and the only thing that you got was that little premium that you collected. You took on a lot of risk,
but Chris,
down, but the only reward you got was a very limited upside.
Yeah, but Chris, but no, I 1000% understand it. What I don't understand is how you can say, but it could go to 70 tomorrow. What if it doesn't? What if it goes to $39.70, which is more likely than 70?
Brother, I'm just trying to explain risk to reward to you. That's all I'm trying to do right now.
I still look, my interpretation of what you're saying is, and we've disagreed on this for the better part of the year. I don't get where you're coming from. Your argument is buy options on the stock goes up, you make astronomical returns. My problem is, if the stock doesn't make the move you want it to make, like all the people who bought options in MicroStrategy, it's not moving anymore to the upside they needed to move, or CleanSpark options, Bitcoin's not moving, so you're kind of screwed. But if you sold puts on CleanSpark at $7, like TJ did, he's printing money on that, because it's not at 7, it's at 10. If it goes to 7, he thinks it's a good deal. And the worst case is CleanSpark goes bankrupt and then he loses all of his money. If that doesn't happen and you're bag holding shares, A, you can sell covered calls against those shares. B, you can hold those shares for a long time, hopefully until the stock recovers. If the stock goes significantly lower, maybe not to zero, on a call option, you're fucked. The call option goes to zero, right? You don't have enough time for it to recover. But if it goes to 100, you make 1,000%. I'm just saying most people don't make 1,000%.
But Amit, that's what I'm trying to explain to you. That look, you don't have to put up so much collateral to get that kind of. All right, you know what? If you think wheeling works, you think wheeling works. I'm not going to debate the whole thing with you. Everyone just needs to understand the risk to reward scenario, the risk to reward when it comes to buying and like selling options. Okay, not buying, selling options. It's a lot more difficult than people think. I know sometimes people feel like, you know what, I can turn this into a full-time job where I can take a portfolio and then turn it into just, okay, I have 100 shares of X, 100 shares of Y bar. I can just start selling options against it. My thing with that is that over the long term, you will definitely lose, because what ends up happening is either the stock is going to go up way beyond what your potential return was, very similar to how TJ bought a lot of Palantir, and what happened? It blew past his strike, right? If he had just held on to those shares, he would have been much better off, right? That's what I'm trying to say.
Yeah, but again, that Chris, my point is that your argument only makes sense if the stock has a big move, which I guess you're assuming every stock's going to have a big move eventually. But if it doesn't, if it's flat for years like Tesla was, I mean, selling puts on Tesla has been one of the greatest strategies past 3 years because it's been flat. And like, there's a lot of volatility there that you can make money off of a really good company that just happens to be flat. So,
yes, but you're all, once again, brother, you're taking on a lot of risk to do that. You're putting on.
I think we have different definitions. No, you're correct. Let me say you're correct. And by the way, the chat is 50-50 on this, so this is a good debate. We got a bunch of opinions. You're correct. I'm taking on more.
I don't think so. I think you should do a poll on seeing who's actually correct. Hopefully, I'm hoping that the chat can can at least.
Well, I'll do a poll in a second, but I agree. You are correct on you're taking more risk. My definition of risk outside of like conventionally defining it is my risk where that $1 goes to zero, or is my risk where the $10 I put up to make $1 doesn't go to zero, maybe it goes to 8, but I'm holding shares of a company I like. That's just a different interpretation of how I think about it. But you're right that you are taking more risk. We do have a special guest joining the show right here.
Whoa! That was fast, man. That was fast. I couldn't help it. Chris, I love you, man. I absolutely love you, Chris.
Who is that? I don't know who that
Jason.
is.
It's Jason.
It's paper,
Hey,
dude.
what's up, Jason? How's it going?
I actually came to argue your case, brother. To be fair, but I think it's so funny, dude. I think Chris is talking about everybody's first or like early experience. I don't know. I mean, have you had that experience yet of a negative gamma situation where you sell? Let's say you sold a $17 put on CleanSpark for 30 cents, and you proceeded to watch it go to $5, $6, $7.
Thankfully, no, I've not had that tough of a situation yet.
It sounds to me like Chris has. So he's probably speaking.
I have
from
not
experience.
had that happen. I have not had. That hasn't happened to me on that. I've done it with bonds, which is even worse. But I'm not going to go into it. The thing is, for me, my asymmetric response. I'll tell you right now, my portfolio got blown up by a what is that they call? By a bond that I bought on an oil company in 2015, right? So basically it was trading at way below par. And I thought, well, you know what? Eventually oil is going to recover. And when oil recovers, boom, I'm going to end up getting this asymmetric return. Didn't exactly happen that way, but that's beside the point.
No, I get it. It was fun. I lost.
Okay, so Jason, let's get your thoughts on this. I mean, here's my perspective.
Oh, is it real? I just do honestly, dude. I'm watching the market. It looks cool. Everything's fun. It's Christmas Eve. I hear my boys talking, yapping, having a good time.
Gotta get a good little debate, dude. We got and guys, me and Chris
wanted to come in and hang, man. I was like, I'm sitting in the office by my lonesome. I got the chat up, but you know, it's different.
This is how we might end up going till market close. This is how we. By the way, guys, this poll is 50-50. It's 52-48 in 51-49 in favor of Chris. So we got. I would call it basically 50-50. Let me just spell out. Let me spell out my take, and then I want to see your interpretation, Chris's interpretation. Chris is right. You're risking more to get a little, but definitionally, he's correct. The way I understand wheeling is if you do it on the stock that you like and you are not in the negative gamma situation where the stock goes from 10 to 1 and you're left holding a really big bag. If it goes down 20 or 30, no, hold on. That you have a good point. That is what happens. I agree with you. If you buy puts or if you sell puts on, we'll just keep using SoFi. It's at 16. You sell puts conservatively at $12 and you get 1.5%. And you are happy to buy SoFi at 12. I am confused where the downside is and where the pain of that strategy comes from versus buying a call option at SoFi when it's 16, hoping it gets to 25, and then SoFi just ends up going to 18. You're definitely going to print on the put, and if you buy the shares, the shares will go up in terms of appreciation, but the call option will be worthless. That is the way I'm defining risk. What is your interpretation of that, and how do you think that pans out long term? Jason.
Oh. What is my, so I think you're speaking to, so I do sell cash secured puts exactly in your situation that you're talking about when I intend to buy the actual underlying. I've been in a situation, so what TJ does, I think he's been doing this for a while, and honestly, I don't know anybody that wheels better than TJ. To his credit, but size matters, right? So if you're just looking at it as a cash grab and you sell more than you're actually able to acquire, that is a problem. And you can get into a situation where you are forced liquidated at a heavy loss. And I've been in that situation, and I'll tell you, it's no fun. So that's the biggest issue is number one, sizing, and if you're not doing it as a way to enter into an investment. there's
well, okay, hold on. Let's get specific. Would you rather buy the SoFi call at 15 or sell the SoFi put? How do you interpret that?
Call.
As a trader. Okay, so you would buy the call because you want an outsized return, I would imagine.
So selling options and buying options, number one, is kind of like a religious issue in the option world, right? Some people are like, I'd rather just sell, and it's always been like a religious debate. I look at it objectively in terms of like what's going to give me the better return, if that makes sense. So synthetically, they're the same. Selling a put and buying a call is synthetically the same position. Whether or not you want to get paid and you think that the downside is more or less baked in, or you think that the stock is ready to make a move, that's an outsized move. So you know me, I'm a technical guy, so I will if I see the setup, I will take the trade. But also I'm the same guy where it's like I know how to sell. Right? Like I know how to exit a position where a lot of people don't. And I think that's, most people that buy options, I honestly believe that they all make money at some point. Like they're probably green at some point. The difference between a profitable person and an unprofitable trader is that they don't know how to sell, right? Or take profits. Maybe they want it a little bit more or something like that. But
so hold on. This is a good point. And Kris, I want to get your take on this. So Chris's take was that if you sell puts, you're going to start becoming super greedy and go for things like MSTX. But your point is, Jason, if you start buying options, you're not going to sell once you get your double because you think you can get a triple. Kris, how do you interpret those two types of risk profiles associated with buyers or sellers of options?
I mean, that's where you got to know your own personal risk tolerances, what you're willing to accept and what you're willing to not accept. I mean, isn't that the whole thing that we had when it came to Robinhood earlier in October, where you were up so much, right? And I was like, look, maybe this is the time you take some of that money, put it to the side, and don't get greedy and wait right till expiration, because anything could happen within the next 90 days, right? Same thing with when we had that discussion with SoFi, when we both got into the calls on SoFi in the summertime. I sold out of my position. You didn't, and your SoFi calls went with zero, right?
Yeah, but Kris, so this is funny. This is really funny because notice the difference here. This is why I'm not following your line of thinking. It was wrong to roll the Robinhood options when you told me to, because Robinhood went to 40. I would have made a lot more money holding those options. It was right to sell the SoFi options when you told me in July. This is why I don't think there is a consistent strategy here, because you don't know if SoFi is going to tank 50%. You don't know if Robinhood is going to tank 50%. It's literally kind of just luck.
But so to Chris's point, though.
Jason, let's get Kris' response. Go ahead.
Well, so to Chris's point.
Go ahead, Kris. Go ahead.
No,
Jason, go.
So to Chris's point, he's arguing about risk versus reward, right? And if, let's say in that exact scenario, SoFi, let's say you bought the SoFi call. How much was SoFi trading at? Let's say it was like $15. $11?
It was $11.
Let's say it was trading at $11 and you're in a, I don't know, $14 call. You pay XYZ dollars. You pay $100 for the call. You buy 10 of them. That's $1,000 outlay. That's one side of that trade. The same trade, you sell $12, or what did you sell? You sell $10 puts, $9 puts. You sell $9 puts. You collect 100. Let's call it $100. You sell 10 of them, right? You put up $9,000 in my $9,000. Yeah, $9,000 in collateral. You collect $1,000. So your outlay is $8,000. That's your risk, $8,000. In the other example, when you bought 10 calls for $1,000 each, your risk is $1,000. So the risk buying calls in that scenario is $1,000 versus the risk of selling puts in that scenario is $8,000. Does that make sense?
Yes, but this is my problem. My SoFi options went to zero because I was stupid and I didn't sell. And that
that's your problem.
This is actually another one of my points, which is that this can't be a universal philosophy. It's definitely based on individual people. But the point is, if I had sold puts on SoFi, I would have probably got assigned at like $8-9 because that's where it was trading at the time. I would be up way more on those shares because now SoFi's doubled versus the option premium. I lost all of it. That is my point.
It's only if you had the temperament to hold through that, because in this scenario, if you sold the what was it, $9 puts and SoFi for $1, and SoFi then proceeded to go to, what was it, $6 or something, your puts would have been down probably before expiration. They would have been down more than $300. They would have been down negative 400%. And you would have been sitting there. And this is where most people panic sell and take that loss. And most people right then and there would sell the legit lows and they wouldn't have the patience, and they would look at it as this is a massive opportunity cost. And that, in that one scenario, if you did that, you would have taken a bigger loss than you would have just taken a loss from selling the calls.
This is my point,
letting
Chris.
the calls expire.
Chris, I want to get your take on this. If you didn't do that, if you had the puts at 9 versus the options at 11, because the options, as from my history in July 2023, went to 0. Let's say I got the shares at 9 and then I'm underwater if I get them at 6. As Jed says right here, if I want to own SoFi, even if I'm bag holding my $9 shares at 6, now SoFi's at 15, I'm more green 1 year later on SoFi than I am by buying the option. That's my point. What's your take on that, Chris?
You could synthetically do that with just a call option, and you're risking a lot less. What Jason just told you, you are putting up a lot more collateral to get a lot less return. That's the point that I'm trying to make. Whereas, let's say right now, you could say, you know what, instead of putting up $8,000, I could just put up $1,000. And if this thing goes to $20, I'm going to get a huge amount of return, versus if it goes down below my strike, all I'm going to lose is $1,000.
Yeah, but no, you're right. I'm acknowledging you guys are right on the you're risking 8 to make 1 versus risking 1 to make 10. But the 8 that turns into 3, you can hold it and it can go back up to 15. The 1 that you lose, you've lost forever. And yes, you're right. You've only lost 1.
But if you really wanted, you could take that other $7,000 and buy the stock at $6 now, because it's already went down so much, way below your strike. You do understand that part, right? That you save all that money by not having to put it into the mix of that position. The only time where it really makes sense to sell options when IV goes through the roof. And now, in which case you can buy something and the likelihood of that volatility dropping is what's going to give you the total return that you're looking for. But most of the time, all of that stuff gets baked in, and the algos in the background will never, but the chances of making a profit are, from a risk-adjusted standpoint, become a lot less. The other thing is, when you're getting closer and closer to expiration, you have to take risk to reward into consideration, because you're literally burning time. Anything happens in between that time, you're basically going to lose everything. So if you're up a good portion already, taking a bit of it out, especially initial principal, and then letting the rest do their thing is better risk reward management. So a lot of this stuff, is the reason why I even brought this up in the first place is I don't want to have people think that wheeling is an easy thing that everyone can do.
Well, nothing's easy. Nothing's
path
easy.
to financial freedom, right? And that's the path to financial freedom, because it's not. Trust me. And Jason could explain this too. The chances of making money trying to wheel, especially with like $100,000 portfolio, or even a $500,000 portfolio, you are not going to get that retirement level ability at that stage. The only people that I know that can successfully survive off of a wheel strategy, where they're basically able to offset all of their costs and stuff, is if you have a huge portfolio, and you're basically selling crazy out of the money options, or you're basically picking up pennies. Those are the only people that I've ever seen successfully create a living standard out of it. But my thing is, you don't even need to do that. You could just buy certain stocks and then literally let the capital appreciation do the work for you. Or you could even be in fixed income and you don't have to play
Chris, then your strategy then is not a strategy. You're just saying buy stocks and hold them. That's what I'm getting from this.
99% of people should just do that.
Well, I know, I agree. I agree with that. But if you are trying to generate some side income off 100K, I don't think you're painting this to get 1.5%, so 1,500 off that 100K. You're acting like that's the hardest thing in the world. I disagree, dude. I mean, I just don't think that's the case. I know too many people in the option selling community that are able to make 1.5% off 100K, and it's not something they're stressed out about, or or the worst thing in the world is happening. And it's way easier than buying options and hoping that a stock goes up.
Even with 1.5% on it, what is that total to?
That's 18% a year. That beats the S&P.
Right, and then what's that after taxes?
Well, I mean, dude, we got to exclude taxes from it because taxes are taxes. We're all gonna have to pay taxes. Like you're gonna have to pay. Dude, I'm gonna pay a shit ton of taxes on my Robinhood options, even though I have long-term capital gains because it's a lot of money.
Right, but that's what I'm trying to tell you, that if you adjust for risk and the total reward that you're gonna get by giving Uncle Sam his cut, you're basically making 12% a year. Okay, by wheeling options, you can actually go into certain corporate debt and make about 10 to 12% without having to deal with the agita of all this back and forth. All right.
Well,
and
that's
and
fair.
if you pick the right companies, dude, just look at the scenario that you have. Okay, you've made what 700% this year. How many years would it take you to wheel and deal to make 700%?
No, but that's where we always have a disagreement. I am so grateful that I've had the returns I've had this year, but I also got really lucky finding a stock that was deeply undervalued to do it on. I don't think you can do that every year. Maybe you can, Chris, but I don't think everyone can do that every year.
But Amit, that's the point, that if you have 1 year where you make 700%, for the next 80 years, if you just sat on that same money, you would get the same amount of.
Okay, so here's the compromise. The compromise today is do Chris's strategy for 1 year, make a shit ton of money, and then wheel the rest of that money for the next 80 years. That's our compromise.
Like I said, all I'm saying is wheeling is not for everybody. You need to have big enough a bankroll. You need to learn a lot of discipline. Guys like TJ, it works for them because the guy has like the balls of steel when he's doing it. Okay.
Yeah, and I don't have those balls of steel, so I can't be like
that.
Yeah.
And that most investors do not have that capability to be that level of, take on that level of risk. All right. So I would say the only part that I came on to basically comment about when it came to this was just, I hope people understand that wheeling is not something that could be done very lightly. And the few people that try to do it, especially early on, make sure you're not doing it with a giant portfolio position or you're risking like your life savings on it just to make a few bucks on the side. And let me tell you, one of the biggest allures for most investors is, if this works 1 month, if this works 2 months, I can quit my job. And then I could just do this full time.
Oh yeah, that's not the right. But Chris, what you're saying right here about it, you're warning people don't use all your money, because that's basic risk management philosophies that should be applied to any investor, much less someone who's getting into wheeling. So I don't think that's unique to wheeling. That's if you're buying call options, don't put 50% of your portfolio in a call option, right? Like, it's basic stuff. It's just, it depends on how people are able to handle volatility and how willing they are to do the work to learn about an option, a call debit spread or a cash secured put.
The fact that the chat is 50-50, it's gotten crazy too.
Jason, what's your, it's literally 50-50. It's a good debate. There's a good debate on Christmas Eve. Jason, what's your take on all this?
What's my take? Honestly, I think broadly speaking, I'm with Chris, man. Broadly speaking, I think you personally.
No more Technical Tuesday. It's canceled. We're done. Who else was TA? No, I'm just kidding.
If you listened, so the thing is that you have a different personal experience, and you're maybe not acknowledging mentally like what he's actually arguing, the point that he's arguing, and the point that he's arguing is risk versus reward. And
no, but let me clarify this again.
But you're clarifying something that I'm just
you are
reporting.
correct.
Man.
You're risking 8 to make 1 versus 1 to make 8. You are definitionally correct on risk reward. My only point is, if you're risking that 8 to make 1 and you end up having to buy 8,000 versus worth of whatever, if you are okay buying Tesla at 390 because you want to have a Tesla position and Tesla goes to 390 and you get paid to do that, that's not a bad thing. Versus if you buy Tesla and Tesla stays flat, your call option doesn't print, you lose less money, you're right, but you're not really losing money if you have to buy it at 390 unless Tesla goes to like 300, which in that case, the call debit spread loses money, the option loses money, and the selling the put loses money. So if you ride the volatility,
the put sellers lose more money if they sell or
correct.
close.
If they sell, but if you want Tesla, why would you sell? That's my point. If you want SoFi, why would you sell?
And I think to Chris's point, if you really want Tesla that bad, just buy it, right? And hodl, right?
Well,
Which-
I would
and-
disagree with that because I think entry points matter. And, look, if Tesla's going to stay above 450 for the next 2 years and you can keep selling puts under it and make a shit ton of money, and that's what you care about the cash flow, I don't think that's a horrible strategy.
Yeah, entry points matter. I mean, I think I'm here on Tuesdays to help figure out momentum, right? Like what's weird, get this, right? If entry points mattered so much on Palantir, but you missed the $20 entry,
correct.
Your entry point would have gone up every freaking day, week by week, month by month. And that resistance, that support that you were looking for is further and further away, like regularly, right? Like same thing with Robinhood right now. It's like, okay, if I wanted 32, I got 34 for a flash and I just said, screw it, right? Like, fine. Even Amazon, like I wanted 190 and I got 215 recently for a flash.
This is wild. It is literally
you
50.
voted for Kris?
Oh, Kris, I voted for you. I didn't notice I voted for you. That's me basically saying you're right, Kris. That's what I did.
Where's TJ? He's busy doing his own stream.
TJ would be going crazy right now if we had him on
Yeah, one of the things I think Matt put it correctly too is like when you're truly wheeling, you're not just selling cash secured puts, you're also selling covered calls, right? So you're making bets on both sides.
Yeah.
Because like right now, if you look at the TJ thing, and that's the other thing too, when you're selling covered calls, you're basically taking on, once again, a lot of risk because this thing could blow up. And now you're sitting on this and you're like, okay, you know what? It's okay. I can just roll this to the next month. And then next month comes along and you just roll it again and you roll it again and you roll it again. And then before you know it, you're rolling 2 years out and you basically made 0% return.
Well, not 0%, but you definitely didn't qualify for as much as you could have got. That's correct.
Right. But that's what I'm saying, that you end up taking a lot of risk to get a very little reward. You know,
you're right on that, which is why it's also down to mindset. Like TJ cares about cash flow. You care about capital appreciation, Kris, because you're trying to get to that next level. If TJ is just trying to manage that 10 million to get 100,000 a month or whatever, it is also a different question of. So if you have a $100,000 portfolio and you just want 1,500 extra a month, there is an argument. I get your point that you're taking on more risk, but there is an argument that if you can ride the volatility, and that's all you want is that 1,500, then it's not the worst idea.
But to clarify, you agree with Kris?
Yes, I voted for Kris, so I agree with Kris.
He's a troll, you guys.
Like, and believe it or not, TJ, I'm telling you, most of his returns this year have not come from the wheeling part of his portfolio. They've come from his long-term hold the stock or hold a leap. Like he's made so much money on the leaps that I'm surprised that he's even continuing to wheel instead of just buying a leap and saying, you know what, cool. Well, he finds great companies, but then he tries to wheel them, and then just you underperform doing that.
Well, me and TJ have had that debate on the channel many times, and we've had this debate publicly, which is that I think he's very aggressive with selling the covered call. Now that's his strategy, and he gets to do how he manages it. But like on Robinhood, when it was at $20, I was like, dude, I really don't want to sell covered calls. Now he wants to get the premium. So that's a difference in strategy. I've still yet to sell covered calls on all my shares because I'm scared. I think Robinhood could run to $50 and then I would miss out on it. So I think if you are less,
the covered call thing is the roughest piece. Like I had a couple people DM me, I think from your stream too, it'd be like, hey, we're looking for groups, but like I want to do leaps and I want to sell covered calls to protect my capital in the event of a crash. And I'm like, well, the common misconception maybe, but covered calls don't really protect you from that, right? Like it's not protection.
Right.
Yeah, it's not the best hedge, even if it is a hedge.
Yeah. But we do we'll do like when something's kind of at a turning point. Yeah, you can. I've sent this to the group too, like call your stock and stuff like that. But
yeah,
yeah. I mean,
to me, when it comes to options, the way that I think of it is it's just insurance, right? That's the way an options contract is supposed to be. And at least in my brain, I think of it as insurance, which is, look, I'm holding the stock and I don't want to lose my money. Okay, you know what? I've appreciated 100%. I don't want to lose my capital. I want to capture all the upside, but I don't want to deal with all the downside. What do? I shave off a few points at the top, buy some puts on it, and now I can go to sleep happy. The stock goes to the moon, I make a ton of money. If it doesn't go to the moon, it goes down by a significant portion, my puts are covered. If it doesn't do anything and the market just stays flat, whatever, the most I lost was whatever premium I paid for those puts. That's it. On the call side, it's the same thing, but what ends up being is what, I want to buy this. I think this company is going to do really well, but I don't want to risk a lot of capital. What do I do? Okay, you know what? Instead of buying the stock and putting all my giant capital towards it, I think I'm just going to buy some calls and let them ride up. If they go up significantly, I make a huge magnified return. But if they don't, the most I lose is that premium. That's the way that I interpret when it comes to options.
Do you think a call option is also insurance, Kris, to an extent, as a put, or no?
It's an insurance against trying to risk a ton of capital. That's the thing. You're making a bet for return, but what you're essentially doing is saying, you know what, I'm going to keep my cash hoard on the side, or I don't want to liquidate other positions, but I want to take a more outsized position on this one, right? So let's say right now you have a great portfolio, you're doing really good, but you find this one company that could theoretically do really, really good next year, right? Now, the thing is, you don't want to liquidate existing positions because let's say in the short term, you might have to pay a lot more in capital gains taxes. But at the same time, you want to take on, you want to buy the stock. Well, if you buy some call options on it, if the stock goes crazy high, you're not really risking much.
Right.
I mean, you're going to get a lot. But if it goes down and things don't work out, you didn't have to sell all of the other things to basically buy this new stock, right? You could wait out. And I've done this a lot of times where, you know what? I have a position in certain companies, right? But it's in short-term capital gains right now. I've already had a giant capital appreciation for it. So what do? I'll end up buying the puts on it. So I know that I've locked in that price, right? And then at the same time, I can also buy a call for the other stock that I really like, but that's in that time frame where I can sell the other position, right? And basically liquidate it with a long-term capital gain and then buy this one at a lower fixed price than what I had originally planned for.
What I think is the real difference here is if you're wheeling a stock, and I think Jason, you'll agree, you kind of want it to be flat because then your upside and downside is super limited and hopefully you collect some premium in the middle. If you're buying the call options, you're hedging your bets that you don't put all your money into a Palantir at $20, but if you put some of it at $20 and it goes to 80, then you benefit. So you need a lot of volatility to the upside on the call. You need hopefully just flatness on the put or the covered call if you're selling.
And that's where mispricing of options tends to happen. And you can actually take advantage of that. Where what happens is right now, I don't want to give away my proprietary thinking here, but there are times when
Kris, you sound like a dweeb when you say that.
Right.
My proprietary thinking.
No, but I'm saying that's one of the things that I tend to look
I love
for
Kris.
as a person.
It makes Christmas Eve better.
Okay, go ahead.
What I tend to look for is I look for an industry, great industry, has had success in the past, business model works. Short term, something happens which leads to a giant decline in the stock price and the underlying value of it. And it stays there flat for a few years. Now what happens is IV completely drops off and you're basically stuck. You're like, oh my God, look, nothing happens. The options market now, all of a sudden, the IV is so low, it doesn't factor in a recovery. And what ends up happening now is that you can actually buy those call options for super cheap, especially leaps that are 2 and sometimes 2.5 years out into the future. And by the time that 2.5 year comes along, boom, the industry has already recovered. Cash flows are back to normal again. And you've already made a crap ton of money. So this is where you have to apply different strategies. And my bread and butter comes from finding companies that are really good. Their fundamental value is not being appreciated. And because of the flatness in the stock price and lack of capital appreciation, that IV has basically dropped to nothing. Or you find these companies that are super low beta and you can make a ton of money on that because the low beta stocks, they typically, the options prices are mispriced for a leap. And now you can actually, if you do it right, you can get an outsized return doing that.
Yeah, again, it's just hard to get it right, dude. That's what I'm saying. I feel like it's easier to know SoFi probably doesn't go to 11, and if it does, you're okay with it going to 11 versus finding the next stock that's going to go up 50% in 2 years to get a 7x return. That's my only difference on how I think of risk reward. But you are 1000% correct on the actual money that you're risking versus the return you could get from it.
Right, and one of the reasons why you really, really did well on Robinhood and those options that you had is because you saw that Robinhood had been flat for a while, but all their metrics were trending up. The options price didn't make sense. The risk to reward was in your favor. The market hadn't picked up on that. The way that long-term options are priced, and I'm sure, Jason, you can explain, they're not based on anything fundamental. They're all based on freaking Black-Scholes. You know, and Black-Scholes is complete garbage, but people use it to price options. And I'm okay with that because I can use the stupidity of Black-Scholes and buy options and make a ton of money.
Yeah.
So Chris,
I think Chris is on a point though that's probably more advanced than 99.99999% of people understand, but he is 100% accurate. There is a flaw in the options pricing model. And that is that the options assume in the pricing model, it assumes that volatility is a constant. We know it's not, right? And that's a flaw in the Black-Scholes model, which if you know how to take advantage is some serious sauce when it comes to trading options. Most people don't though, but that is an options trader's edge definitively. If you understand when things are underpriced or overpriced.
So, Chris, you would rather spend your time trying to find the next stock to buy spreads on that'll go up like 100% in 2 years versus buy versus spending time finding a stock that you could get out of the money puts on and make a premium on. Basically, you think that's a better risk reward for the time in terms of research.
Yep, absolutely.
See, and that's my only disagreement. I think most people don't have the time to find their Robinhood or their Carnival Cruise Line, or if they do, it's scary for more people because what if they don't go up? Like that's the only thing I have with the average person versus if you like Carnival at 20 and it's at 24 and you sell a put at 20 and it goes to 18, you can hold on to that Carnival Cruise stock forever as long as they don't go out of business. That's where I think for the average person, it makes more sense. Because the odds of finding another Robinhood or Carnival Cruise that go up the way they go up, it's not easy, right? And then to find the right option, the right strike prices, that's also...
It's not easy. It's not easy if you're not Chris Patel, but if you're me, yeah.
Well, that's my point. That's why this conversation started, because I was going off a rant in the morning that anyone can do wheeling. And your point is like, well, everyone shouldn't do wheeling, which is fair. Everyone shouldn't. But if you're saying you're Chris Patel and you have this proprietary model of finding equities to do spreads on, well, no one's going to do that, right? Because no one else is Chris Patel. But people can sell puts. That's my point. 51-49, 833 votes. Chris, looks like you won by 2%. So you are the winner here in this debate.
Yeah.
Can we talk about Bitcoin? Chris, are you still bullish Bitcoin right now?
The one thing, let me just say really quick, the one thing I wish I had done, instead of just selling Palantir, I wish I had sold Palantir and instead of liquidating the position, just bought some freaking debit spreads on Palantir and be like, screw it, whatever. It's a few $1,000s. I already made my money on it because I made double on my
Not too late to buy $100 leaps, Chris.
It's really not. You can buy $100 leaps.
I'm good at this point. I don't believe that. No, I'm good. I've got plenty of other plays that are in mind. And the other thing that we've discussed privately, Amit, is that there are strategies where you can even lower the risk further by applying a different option strategy, where you're not just doing one-sided options, hoping that everything goes in one direction. You can actually make money with IV going flat, right? And basically you're waiting on one of the legs to slowly decay while the other one maintains its intrinsic value. That's the other thing too, And that's what you're learning right now based on your investing in the spreads, right?
Yeah.
Where now you're basically seeing one leg slowly decay while the other leg is staying relatively flat because there's intrinsic value there. And the only thing that's being burned off is the time value in both the options. And the delta between the two is what you're making money on, you know?
Right.
Wait, Amit's doing calendars?
No, I'm not. But Chris and I have talked about iron condors and candors. I've never done them though.
No calendars.
I've done some. I've done some put credit spreads, but they're not as often as selling puts. Chris, you like Bitcoin here at 98? You think we're going to 100?
I don't know, man. Bitcoin is based on, buyers and sellers, and it's not like a cash flow model or anything else that you can use to determine what the price is. The one thing I will say is that right now, the underlying Bitcoin versus, and this is where I have to agree with Jason. This strategy that MSTR is utilizing, this convertible debt strategy, while it seems like it's a surefire winner, the more and more Bitcoin that MSTR consolidates within itself is actually driving up a huge amount of risk to the overall Bitcoin ecosystem. Because now what you're essentially doing is, if anything happens and now that convertible debt gets called and now you have to pay, you're going to have to liquidate all of those Bitcoins that you have on your balance sheet. And if you have a liquidity event, Bitcoin's price is going to get rammed all the
I literally texted Amit at like 2 a.m. my time because I could not sleep. I was just like, oh my God.
And then if Bitcoin starts dropping in value with a huge amount, then what ends up happening is you lose confidence, and people lose confidence in this thing as a store of value. No one is going to want to put their money in a store of value that can lose 80% overnight. This is the kind of logic that you have to apply for this thing. So by being a Bitcoin maxi, I think Saylor does a good job, but then also consolidating all of this Bitcoin into one entity who's taking on a huge amount of risk from the convertible side. Dude, the people who are giving this motherfucker money, bro, they're making a ton of money gamma trading right now. They don't give a shit about Bitcoin. Okay, they could give two shits about Bitcoin. They know Saylor is.
Gotta look at the chat. The MSTR mafia is live and well here.
I'm just saying they know what they're doing. And Saylor's like, well, I'm smarter than them, so I can fucking keep doing this shit until the end of time, right? The problem is Saylor is setting himself up for a major problem if something goes in the other direction. So this is all about risk management, man. And Saylor right now, being a Bitcoin maxi, he's I don't know. I don't even know how to, the strategy, what I'm talking about, right? What these convertible debt guys are doing on it.
Yeah.
He's just greedy, man, is what it is. Like, I honestly, I don't believe that Saylor has any ill intentions or any ill will. I think he's just greedy and he sees a situation in front of him. But like, as someone that's been in the cryptoverse for like probably more than 20 years, like, look, I got in there as like the core group, right? Like, to me, maybe like of the decentralized finance, blah, 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 blah. And I'm looking at this, I'm like, okay, he's not trying to do anything malicious. There's no question to me whether or not he is or isn't. And honestly, even if nothing happens to the debt piece and he gets to hold all this, it's just at its core, the whole idea of somebody owning that much, which not even, by the way, it's not even the idea of somebody owning, it's a publicly traded entity owning that much who's under the scrutiny of the SEC. I'm like, this is like backwards. Like, this is like against, I know he would, it's like, but I'm not calling him dumb. I'm saying like, it's a principle thing, right? It's weird, right? Like,
Jason, in my opinion, he's risking the ecosystem. Okay, by consolidating everything into one and then applying a whole bunch of leverage against it, he's literally asking for something to melt down. And then what if it melts down? People are going to lose confidence in this thing.
Okay, but to play devil's advocate, what if Bitcoin actually does go to 200K and MSTR goes to like 600? Like, what would you guys be saying at that time?
No, I think it's the same. We would probably be saying the same thing as people that are bullish MSTR. If it drops to 200 or 150, they would probably be saying the same, right? It's going higher. And, from a trading perspective, by the way, I'm not saying it's going to implode or anything like that. I'm just like, I'm looking at this. I'm like, dude, this is counterintuitive to the entire reason the original, I guess, like old school crypto people got into it. And it's just, it's a funky situation where it's like, okay, I get it. I see what's going on. Can it work? It's possible. The whole game theory thing. I mean, sure. The dilution, the shares, first of all, is just a request for the shares, but he couldn't buy all the remaining Bitcoin in the world if he wanted to with the amount of money that he's requesting. Not that he's going to issue, but like, it's more than Bitcoin exists unless he's going to buy it at $500,000, which I think he basically would say that he would.
I think the challenge that always comes around with these strategies is that they work until they don't, right? So when a lot of new stuff comes around, it's very novel. When he started doing convertible debt offerings at 0 coupon, and see the other guys are doing this, it makes total sense to do that. Okay, if someone is willing to give you a 0% coupon bond, right? And essentially you can go out there and buy it into the open, buy the underlying asset that you like at 0%. There's definitely value there. The challenge is that if everyone does it, it's not as valuable anymore. And you're actually taking on existential risk. So what's the scenario where basically if one person is doing it, it's great, but if everyone is doing it, it's bad? It's kind of like that.
Yeah. Okay, but here's the thing. Again, you both are still bullish Bitcoin. So again, all of the things you're saying is correct. I agree with them. But if Bitcoin does go to 150, does this conversation even matter at that point? I'm just trying to be practical about if we think it does.
No, it's like Bitcoin. So the cycle is Q2 is typically the top, right? So which is why like from the beginning, it was like through the holiday seasons, Q2 is typically the top. Is Squid Games 2? Oh, is it happening? Hang on. I need to.
Yeah, December 26th. Hold your horses. 2 days.
I missed my entry this morning. Whatever. Man, this market is unbelievable.
Green.
It's still going. Let's say he continues to do what he does. It's quite bullish for Bitcoin. Even if it looks like it's going to fail here, he could save it. Probably single hand. Just, what I meant? Just the filing, if it's like game theory on game theory to like multiplied by 100, just the filing of that he put out last night could be enough of people to try and front run him now in his Bitcoin buys. Just the filing of it. So I'm not, like I said, I'm not selling my Bitcoin, but like it gives me those, like I've been through my fair share of 90% crashes like across the board and hodled through them. And I've sold at the local highs, which ended up being way too low. Look, I sold a lot at 14,000, which, in retrospect is nothing but it did go back to $4,500, after I sold, but I didn't buy again. Right. So like, maybe it goes to $1 million, dude. Maybe it goes to $1 million. What does that put MSTR at specifically, though? I actually don't know because.
But that's the point. If it is inevitably going to $1 million, MSTR goes higher.
Maybe, unless he dilutes MSTR, because that's the other question, right? Because if he does really dilute MSTR, which I think is now you're talking about doing at the money offerings, if approved, we don't know how much. It's just a conversation piece right now. It's all speculative, prognostication. Like we don't know if he does it. That starts to change the thesis of MSTR specifically, but not really Bitcoin, unless there's a credit issue, which isn't an issue today. probably not in this incoming administration, but what about the next administration or the one after that or the one after that? Because I've been in this for decades, right? Like I'm not so short-sighted as to think about the next 4 years.
Kris, do you think are you still bullish Mara and Riot using this Bitcoin treasury strategy or not anymore?
I'm bullish that I can make money off of it because I know what at least I think I know what their defined goalposts are. And basically I can keep selling options against it because the IV is so high, right? So those two goalposts, when it gets to my low level, I'll sell some puts on it and I'll make money on the premiums from that. And then when it goes high, I can sell calls against it and make money on the premiums, you know? So this is the one time where wheeling actually makes a little bit of sense, but it's a very, very small portion of what I'm trying to do overall. It's
So you're wheeling Marathon and it makes sense to you because essentially the volatility is what you like from Marathon right now.
Right. Yeah. And also the strategy that these guys are using, I told you the gamma trading strategy, you can theoretically pick out based on the underlying value of the asset what the targets are, because what ends up happening is they make money on volatility, right? So their incentive is to keep the volatility growing back and forth. So that's where you can actually make some money on it. Now, like right now with Marathon has underlying Bitcoin that now if you calculated the net asset value, there's that dollar amount that's there based on the current price of Bitcoin. What ends up happening is because Marathon's also a Bitcoin miner and doing this convertible debt strategy, there is a net asset value premium that you're getting for Marathon. So anytime that premium goes in excess of the strategy, what ends up happening now is that they do at the money offerings via convertible debt, right? So they'll say, okay, look, the stock has gone to X. I'm going to do a convertible debt offering with the stock price strike at this price. And now what you essentially did was give these guys, you're basically giving Marathon money to buy Bitcoin, right? So it raises the price of Bitcoin, but it also raises the underlying value of Marathon's Bitcoin holdings. So you're covered because you as a credit holder have interest in those Bitcoins that they bought, basically. You're not getting the equity risk. You're not dealing with the equity risk. You're basically getting security for that. And so now what you can do is you can sell covered positions against it, right? And basically make money on the volatility. So now let's say the stock goes up like to $50, $60, whatever. You don't care because you're essentially in a covered position to make money on the convertible debt going above your strike. The goal for them is to not let Marathon go above their strike, but to also not go below their floor and just keep playing with the volatility in between. The ideal strategy for these guys is a gradual rise in Marathon or a flat Marathon with a ton of volatility in between. So if you look at Marathon right now, Marathon has been what? Like if you go year to date, it's down 11.95%, like 12%.
So this is a perfect candidate to wheel, is what you're saying.
Right. So look at it. It's gone multiple times to like 30, and it's come down to like 16 a few times. It's gone to 15 again, and then it went back up to like the almost like 28. This is one of those more ideal candidates that you want to wheel and deal because the IV is so high between the two, between those separate strikes that you can actually make money on it.
Yeah, that's fair. I mean, I think that's a healthy balance as well. The names like this that actually give you the volatility to ride up and down are great for wheeling, but probably not for buying options on.
Like look at the last 6 months. Marathon is literally up 7.82%. But if you had been cash secured puts and call what is that they call selling calls on this thing, you would have made infinitely more money.
Yeah. Here's a question from Rob. Thank you for the super chat. He says, gents, if Bitcoin melts down, then could it affect the overall market? Kris, let's start with you. If Bitcoin does take a drawdown to like, let's say 70K, do you think that could mess up everything else?
I don't think so. I think the Bitcoin, the whole thing is like insulated against. I don't think it's that big of a deal, like compared to like, let's say real estate, which affects the average person. I don't think the average person really owns a lot of Bitcoin, so it's not a big deal. The challenge though that you run into is Now some of these guys are starting to get included in the indexes. And so they could theoretically impact the indexes, but it's not, right now it's not enough to basically impact anything. But let's say MSTR becomes $1 trillion market cap and the underlying is just all Bitcoin, then that's something to be careful of, because then it could be something that's too big to fail, right? So,
Jason, your thoughts? Will Bitcoin take down the whole market?
No, I don't think so. Maybe some high risk stuff, but I mean, if Bitcoin gets to 70, I'm pretty sure a lot of people would probably buy it. It might be a flash crash, right? The Bitcoin does those flash crashes like boom overnight on a Saturday, right? 2 a.m. Whenever you're sleeping, that's when it happens. And you wake up and it's over, or it's recovering already. So I don't know if it actually hits the markets themselves is basically my point. Like it may have, you know, a 20% overnight flash, but by the morning it might only be down sub 10%, which won't be so bad in the open market. Yeah, it's a tough one, man. I think what it would do is it would wreck like your Maras or your Bitcoin proxies, right? I'm just so thankful Hood is not really a Bitcoin proxy, right? Like it is and it isn't. It's just, you know, Hood still has kind of like that free call option piece of it. Everything else crypto related was running, and Hood was just kind of like chilling, taking its time, doing its
And we're
thing.
up 5% today, baby.
Yeah, and I love that, right? We're not like up 10% out of the gate having to digest some crazy, you know, outsized move. But yeah, I mean, of course it'll have some kind of like effect on the broader market or specific underlines like the Squares or you know, maybe your Coinbases for a little bit, but they're all different, right? Like they're gonna be. They have also their own underlying issues. So, I mean, they kind of trend lower. But yeah.
Okay, we got Palantir 82.25, S&P trying to make its way to 6,000. We got
2 cents away on SPY from 600. Oop, there it is.
So the market closed in 40 minutes. I thought we would end the market open, but Chris, thanks to you,
6,000, dude. It's 6,000.
We're keeping it going. Yeah, we're at 6,000. So let's talk a little bit about 2025. Chris, gut feeling, how are you thinking of next year?
I think we are going to get more cuts than what the Fed is currently projecting out. I'm already seeing softness in the real estate market, so that is probably going to help us towards maybe the middle and back half of the year. But that also means that people are going to feel less wealthy. And if you see consumer weakness start to make its way, people are going to be, you know, basically the Fed is going to have to cut, but they're going to have to cut because things are getting bad, right? The way that I best interpret a lot of these rate decisions is when the Fed comes out and says, "Hey, I don't have to like lower my interest rate as much." That's like kind of confidence, right? That's like saying like, "Oh, look, the market's doing okay. Like everyone's doing fine. Unemployment's not really that high. We can survive." But when the Fed starts to say, "You know what, we need to start cutting and we need to start cutting aggressively," that means that there's some underlying weakness that's probably giving them a bit of a pause and a scare. So I don't know. Like I'm of the mind that I'm going to be a little bit more data dependent and just, you know, watch what happens. But the one area that I'm really concerned about is real estate. And if real estate starts to take a downward move, what's going to happen? The other problem is you can't really tell with Trump like what he's going to do, man. Everything that he talks about with these tariffs thing, it brings a lot of uncertainty to the markets, and the markets don't like uncertainty. And so because of that, you can already see post-election, the 10-year treasury has already jumped like 4.7%. Now, there were a lot of companies that were doing well into the year because their capital structures are based on, you know, how much they're going to be able to get in financing. But if the 10-year keeps going up, that means that if these guys have any debt coming due within the next few years, they're going to have to refinance at much higher prices, in which case now the profitability is going to have to shrink down, or it's probably going to shrink down to make up for that. So this is the time where I'm a little bit kind of, I don't know, a little bit cautious. And then you look at the equity premiums. while there are people that say, oh, look, the S&P 500 is trading at a XPE. And I'm like, well, what percentage of the S&P 500 right now is concentrated in Mag 7? Because it's almost close to 40%. And then you have some some positions within the S&P 500 that are super overweight, that are trading at 100 PE like Tesla. So that could be dragging the S&P 500 probably 1 to 2 points. So if you look at the performance of the S&P 500 market weight versus the S&P 500 equal weight, you can see that the valuation is not exactly that outstretched, you know? So there's still a possibility that we can have another good year. But I mean by good year, I mean not the 20%, but maybe the 10%. So I'm in probably the Tom Lee camp, where we'll probably see some volatility along the way with policy changes, decisions, and maybe some moves that Trump makes. But overall, we could have a flat to maybe like a low growth year. So that's my current projection, or at least thinking.
Kris, a question for you, Rob. Thanks for the super chat. What is your Palantir price target next year?
I don't have one, bro. I don't care.
Jason says it's going to
Doesn't
120, so we need one from you.
I don't really care, bro. I'm not gonna give one. I don't care, bro. I'm done. Well, Palantir can trade to 200 if they wanted to. I don't care. I just don't.
All right, Jason, you got to unmute yourself. What's your macro outlook for 2025?
I'll take it sector by sector, really. I think there are certain, Kris outlined a lot of stuff. Actually, it's probably boring stuff to most, but Kris is a value investor as far as I can tell. And I am actually also a value investor to an extent, where I can find areas where I think are just overly beaten down. So I kind of like home builders for into the first of the year, into the early new year. I think this might be a bit overdone. And I mean,
Kris,
I think
Kris, do you like the home builders too, or no?
So I was looking at Lennar's earnings. They're still doing a solid. Their margins are like 20%, so they're still doing a solid amount. The problem is new home sales are starting to. They're starting to basically have to do a lot more incentives to get inventory out the door. So I don't know. I have to look at them again. I've never really been a big home builder kind of investor, but they are trading at pretty good PEs. I think it's about 8 PE on Lennar right now. I have to see.
Yeah, Lennar, Pulte. A lot of them they just got recently shellacked, right? Maybe a little bit too much. But it doesn't mean they're going to go up 50% either. I think that this year is going to be a stock picker's year for sure. It's going to probably be choppy with Trump, right? He's going to do the tariff stuff and things are going to go wild. And I can't believe I closed some of these hood options, but I did open my IWMs again, and I'm happy about that. I think the January effect is in full force. Look at Tessie. For the beginning of the year. And then we kind of hash it out at a certain point. Those will taper out, and we probably go back to those core Mag 7 or whatever you call them. Is Palantir in the Mag 7 now?
I mean,
is that almost, at what point do they become part of the Mag 7?
$200 billion market cap. Just saying.
Okay, so they got a ways. Oh man. But yeah, I think
both of you in general are bullish for 2025. There's not a
bullish with some bumps along the way for sure. But to me, it's mostly about like the Trump shenanigans that the market might have some knee-jerk reactions to that could look bad from time to time and ultimately resolve themselves.
Yeah, for me, I agree with Jason when he said that next year is going to be a stock picker's market rather than just buy the index and chill. You know, a lot of the last 3 years have just been buy the indexes and chill, because especially the generals, which is the Mag 7, have basically been propping up everything. So that's kind of been the trade. The question now is, okay, so where are the rest of these companies going to do? Now, the question is, if we get more rate cuts, that's going to help out a lot of the small caps. And so IWM is probably going to do really well. If we don't get as many rate cuts, then maybe not, but I don't know. Like, that's where you have to just have a wait and see what kind of policies like Trump implements. Like, I'm at a point right now where I actually have to go back and read The Art of the Deal again to understand Trump's mindset.
Really? You're gonna get that into it?
Well, the thing is, like, understanding the mindset of the person who's going to be able to dictate and jawbone the market in a certain direction. That's a really fundamental thing you want. But you also have to, like, take into consideration the people that he puts in power in certain areas. Like, one of the areas that I really like is liquefied natural gas exports. Why? Because he's mentioned it more than a few times that he wants America to be the dominant player in LNG. Now, what does that mean? That means that, infrastructure investing is going to be something that he really keeps his ball on, right? Because that one generates a ton of jobs, but then it also generates a ton of revenue that coming into the United States and with a commodity that we have cheap. So he understands as a businessman, look, if I want to basically solidify economic return, that's one of the low-hanging fruits that the last administration's been kind of dumb on, which is letting the environmental groups basically just, roughshod over progress, right? So if he can cut regulations and basically remove that, that means that now you're unleashing an entire industry, which means that more jobs, which means that more economic growth, which means makes them look better, right?
Yeah.
So the psychology of Trump, and this is where I think Tom Lee's mentioned this too, that you have this kind of like this Trump put where he's going to be using the stock market as a benchmark for his personal success. So that means that the stock market's dip, he's not like one of those guys, well, you know what, it's just the market. No, he's going to take that personally, like saying, wait a second, no, the stock market is down 500, the Dow is, let's say, down 10%. I need to figure out a way to economically stimulate to get the Dow back above, So that's where, even right now, when it comes to the Mag 7, I'm starting to see a little bit of sort of a kind of a hands-off approach to the big tech guys, as long as they're getting their marching orders to basically go out there and freaking invest like there's no tomorrow. So that's what Trump is probably saying to Amazon, to Google, to even Elon Musk, saying, look, I want America to be the dominant leader in AI. I don't care what it takes. Spend as much. I won't go after you with antitrust, but I want you guys to make sure that you're spending a lot of money to make sure that the U.S. stays a dominant player, right? So this way, I think big tech could actually become even bigger under the Trump administration, even though, technically speaking, Trump was the one that initiated the breakup of Google. The antitrust portion of Google when he was in charge the first time around.
Yeah.
I mean, you got to send TJ a link. He has
TJ here? Is TJ here? Do we get him on?
We need a proper Christmas send off here, dude. It wouldn't be right without him.
TJ, can you make it, or is he busy? Let's see.
I don't know.
We have like 20 minutes left.
Pinging.
TJ, put in the chat if you can make it. If not, we'll host a proper debate another time. But if you can, we got 20 minutes left. We'll get you on. Get your thoughts on this too. Yeah, dude, it's a green market though. It's really green. I think, Chris, the risks you and Jason are highlighting for next year are super legit. I also think there could be a dump in 2025 in January for the freaking. All right, TJ, I just put in the chat. I put the link in the chat for the freaking tax selling. Because I think people will be taking profits in January. But if tech compounds, then maybe that's a buyable dip. Which is what Dan Ives thinks is going to happen most of next year. It's going to be most buyable dips.
Yeah, I mean, I think that's what I'm going to probably be doing. I'm going to be looking for the times where the market is oversold, find the great companies with great cash flows. Market tends, because of index investing, I feel like there are a lot more opportunities for mispricing. Because what ends up happening is now the market goes down, all the indexes sell, and they sell the great companies with the baby with the bathwater. And basically now you have an opportunity to buy the dip at a better price. And the only reason why all these stupid funds sold is not because the underlying company is doing worse off. It's only because they just need to recalibrate their holdings based on the stupidity of the index portions. That's it. Like it's dumb, but whatever. The more dumb people come around, the better thing it is. Like, what do you think about that? Do you think that there's an index investing bubble, Jason, that we could eventually face, or no?
You know, it probably would have. It probably a bubble. I feel like we should have seen that already in IWM, even though I'm long IWM right now. You know, because if you were to pick an index that is like not the greatest, like that's probably the one in terms of like owning a bunch of shitcoins that you really don't actually want to own. So the fact that it held, I mean, it didn't, it kind of held, but they attempted to dump this for like 3 years straight, unsuccessfully. So I maybe
all right, we got a guest backstage.
Let's go.
Let's bring him on.
What
the
up?
Wheeler himself.
Hey, boom. Merry Christmas, dude.
Dude, real quick, Amit, how many people you have live on the channel right now?
1,800.
I want all of us to wish my beautiful wife a happy birthday.
Oh, dang. Happy birthday.
Birthday to Kris.
I want to thank God that he made her blind, because there's no fucking way she could be my wife, bro. I mean, dude, this shit doesn't even make sense to me either, yo.
Beautiful, man.
But she loves me for some crazy ass reason, dude. It's awesome.
All right, Kris just said to send him a link, so I just sent him the link. So I'll end the phone call.
Oh shit!
This is about to be Royal Rumble, bro. This is about.
Let's go.
So TJ, to give you some backdrop, basically Kris hates wheeling.
They said Kris is talking shit. That's what they were telling me on my channel live a while ago.
Well, he's talking shit about wheeling, and by proxy, he's talking shit about your strategy of wheeling. I'm defending it because I like it. And Jason's kind of on Chris's side, so it's kind of you and me versus Jason.
No, I'm being trying to be not really like devil's advocate, but realist, right? Because I'm not in the. I know it's a religious debate within the options world, buying versus selling. I personally lean towards the net, being a net buyer, but I do my fair share of selling also, right? I just but. I think it's both are simple, neither are easy. I'll just say that.
I think y'all might be surprised with some of my takes on this one now.
Okay, so Kris,
give me
you're on.
So TJ, the
Let's
argument
let's do that.
Yeah,
Kris, take 2 minutes, give your take, what you talked about, and then we'll get TJ's response. Go ahead, Kris.
So the first thing I wanted to address was the rosy picture that Amit was trying to put with wheeling. Like, oh, you can replace your income with this. It's a great strategy. And I'm sitting here, I'm thinking, wait a second. 99% of people should not be wheeling because they don't understand risk. They don't understand the fundamentals behind what they could possibly lose. And they don't have enough of a bankroll in order to survive to fight the next day. Okay. You, TJ, you are a phenom when it comes to using your wheel strategy, but even you have to admit that your biggest gainer this year has been your just regular leaps and holding on to the stock that you have. It hasn't been the wheeling. Wheeling is okay for income, but if you're looking for outsized returns, you're going to have to just basically buy the great companies and hold them. Most people should not try to wheel and deal. Most people should just buy the underlying asset and call it a day. All right. You have to gain a lot of experience. You cannot, the wheeling is not the easy strategy that a lot of people make it out to be. That's what my intention was.
Okay, TJ, your thoughts on that?
There we go. So he's not totally wrong, guys. So here's the one thing that I want to preface this conversation with, because I feel like there is some chatter in this community that Kris and I are like against each other somehow. Kris and I text kind of frequently. I talk to him on the phone. I get hints from him on certain plays that I'm interested in. So Kris and I are not frenemies or foes or anything of the sort. So let's kill that narrative before we start, okay? So I sell options on a handful of stocks. I do it over and over again, because I am playing a very specific game called lowering my adjusted cost basis to zero. I think that for the majority of the population, the best thing that you should do is you should not buy individual stocks. I think that you should invest into an ETF, because you might not have the same temperament that I do. You might not have the same bankroll. Obviously, you don't have the same bankroll in most cases, unless your name's that Derek character that this guy had a couple more zeros than we do. but for the most part, people are just, they're not adequately capitalized to run this strategy at my level, if you will. That being said, I think you have to define your hamburger stand. You have to define, okay, who are you in the market? Who do you want to be in the market? And what is important to you? Can you will for a living? Absolutely. If you need to make about $80,000 to $100,000 a year to live off of, you can do that with about $250,000 a year. And I think that's much better than being a fucking registered nurse, because you would have control of your time. So it's all a matter of perspective.
By the way, which that was my point, because my point is not replace your income. Because if you're going to replace your income in buying options or selling options, you've got to do a shit ton of work. But if you have a little bit of extra income on the side, even with keeping your job, that was my argument for why selling options is productive.
So again, I think it's a matter of objective and it's a matter of perspective, right? Like to wheel at my level, obviously you guys have seen what it takes to wheel at this level. What would be my recommendation for you if you don't want to do at my level, is buy into the fucking hedge fund, because you'll get these types of returns and I do all the fucking work, right? That's the easiest thing to do, in my opinion, to be quite honest with you. But a majority of the gains in the portfolio, you see, there's two categories though. Like we got to be real specific about this. There's realized gains, and then there's paper gains, unrealized gains. And I want to use paper gains there because I see Jason's paper gains there. And we all got to agree that realized gains is a little bit different than unrealized gains. So whenever I sell cash secured puts and cover calls and I realize that win or that loss, that's a definitive. So that's a check. That's a box in the win column for me in most cases, because I win about 90% of those trades. But whenever I'm holding on to a stock and I haven't sold it yet, I can't just go claiming victory, because nothing happens until you go to the pay window. So I think that we have to keep that into perspective as well. And if we think that there potentially might be, and I think some of y'all might be on board, I don't know how Kris feels about it. But I think that there's going to be a little bit of a correction here at some point. You know what I mean? I think Santa Claus is going to come to town, and then he's going to go look at his list again. He's like, hey, some of y'all fuckers have been a little bit naughty. And he's going to take some of those gifts back. You know what I mean? And at some point, a lot of your paper gains might go away. So I can argue that static returns is more predictable, and it is a very sustainable way to make a living. So, in poker, we used to say, if you get pretty good at it, it's a real hard way to make an easy living. And there's a mouthful there to what I just said. But it's a real hard way to make an easy living. For me, wheeling was very, very difficult for about 3 years because I had to find my 5. Now that I found my 5 stocks, and now I expanded that to like 7 and even 10 at times, it's real easy for me to look, okay, which one's going to give me a 30, 40% annualized return? And I can do that over and over and over again. And with my bankroll, I'm like, dude, like I can literally sleepwalk into about $3 million next year. A lot of people can't say that. And I don't give a shit what Palantir does. I don't give a shit what SoFi does. I'm telling you that my premiums are going to yield me $3 million that we can take out of the fucking market and go play with, and the portfolio ain't going to do shit. So to me, it's a matter of perspective. It's a matter of what your objective is. What are your goals? How are you trying to achieve those goals? Are you positioned to do that? It's what kind of business are you running? And is your business positioned to give you what you're asking of it? So I have positioned the portfolio very uniquely so that I'm long a handful of stocks, so I can ride those up to infinity, if you will, because I feel like that is the easiest way to make money in the market. Is just is what Kris is saying. Buy a good company that you believe in, hold it for the long haul. There's about a 100-year track record, a little bit longer, that works. That works. Buying a stock and letting the shit go up and to the right with good fundamentals, that works. You don't have to be trying to time the market and trying to do Jason's whole deal of like looking at these fucking charts and trying to make sense of when it rained and when it's going to rain again. You don't have to do any of that shit. Buy the stock and hold it for 20 fucking years. You should be fine if it's a decent company. That works because people do it in the 401k. Right? Give me a thumbs up, Jason. And I know Chris has a 401k probably with his work. Y'all have 401ks, right? Or IRAs?
Yep.
All converted now, dude. All converted.
Yeah. But what I'm saying is you ain't fucking looking at a MACD over there, motherfucker. You ain't doing any of that shit.
No. Trading is fun money to build the 401k. 100%. There's no question there.
For me right now, a lot of my liquid net worth is literally sitting in index funds. Like, I'm not illiquid funds. Sorry, not liquid, illiquid.
Okay, so Kris, what is your thoughts on what everything TJ just said?
I mean, whatever works for TJ works for TJ. I mean, the one thing I have to disagree with you a little bit, TJ, on is that you have to care what the underlying stock and how they're performing. Like, there's no way that you can't, like, especially if you're doing options, if you're seeing that the company is actually underperforming, what their metrics, their valuations make no sense. You don't want to be in a position where you're taking outsized long or short positions and then fundamentally the companies are weak. I mean, the saying that I live by and I go by is very simple. Okay. Fundamentals tell you what to buy, and technicals tell you when to buy. And it works in the opposite direction as well, right? So it says fundamentals tell you who to sell, and technicals tell you when to sell. So the one thing that I would say comment about that is that buy great companies, and if definitely wheel those companies that you want to, but never take your eye off of the fundamentals, because you could theoretically be wheeling something that is in a secular decline that you're not going to be able to recover from, and then you'll end up having to roll this position till the end of time in order to just get your cost bases out, in which case now you're underperforming the market. So my thing is, you want to wheel and deal, fine, but do it in companies that you can easily track, you understand the business, and it's in which direction it's going to go based on the current sentiments, right? Like if I told you, hey, TJ, why don't you wheel this coal company, you don't want to mess around with no coal company wheeling, right?
Yeah, there's something that I have on the ticker, like a little on the bottom. There's a stream. Is that what it's called? The little ticker on the bottom.
Yeah,
the banner. The tape on my channel.
Ticker tape. Yeah.
Yeah, ticker tape. So the very first thing that I have is pick a stock that you want to own for 3 to 5 years.
Yeah.
But the fundamentals have to make sense. Like the company has to be able to be in business for 3 to 5 years in order for this strategy to work. That's first and foremost. Like you can't, like when I started this, guys, I did it all wrong. I was like, there was a company called Nano Dimension, NNDM, and I was no, but we got to talk about, everybody looks at where I'm at. I'm trying to tell y'all how I got here, right?
No, we're not laughing at you. We're laughing because we've all been there. We've all been there.
I got here by doing it wrong. You know what I mean? I picked a stock that had more money than its market cap. I was like, oh, that can't possibly go against me. Well, it did.
Yeah.
It did. And those fucking technicals, Jason, they didn't help me either.
Oh, dude, they would have if you were with me, man. I'll tell you that much.
This company kept diluting and diluting and diluting. Dude, there was a run up and they dilute this Ed Stern motherfucker or whatever his name is from.
I can't believe you're selling options. The spreads were so wide at the end of that.
Dude, I'm telling you, I was not that good, yo. So there was a company called BNGO.
Yeah.
I did that one too.
One.
And I
super speculative stuff.
I was always the guy waiting on that one freaking number for the blackout card or whatever it's called. Never happened for me. Lost money there. I lost.
Okay, hold on. So let me ask this question, TJ. Let's say you have $100,000. Would you rather try to get 2% off that $100,000 by wheeling 3 to 4 stocks, or would you go Chris's approach, which is spend 3 months trying to find something super undervalued and put $100,000 or put $10,000 into a call debit spread? What would you rather do?
Yeah. So what I would do with $100,000 is I would pick 1 or 2 stocks and I would run the covered strangle. To me, the superior strategy, and I think that's where people really need to follow. If you follow my channel, they know what I really do, because I know I'm not really a wheeler, guys. I run the covered strangle on my favorite stocks. I'm sorry, you were saying, Jason?
No, I think that. So my question was like, if you run that on those companies, do you intend to own it? The underline, right? Like, is it you're doing the cash grabs? Are you doing cash grabs, or are you literally wheeling in and out?
No. So Amit, obviously, he's been helping me with the public portfolio for a while now. So essentially, I own my block of shares. I sell cover calls around it for income. I sell cash secure puts around it for income because I'm trying to lower the net adjusted cost basis to zero. That's the game that I'm playing.
You're right. So you said that in the beginning, yeah.
But then I also have long calls to protect my short calls because I don't want to position myself to bet against my stock. Because selling short calls on stocks that are going parabolic is very painful, and that has probably cost me about $2 million in tuition.
So this is the point.
Can I answer on a company called Meta? I had 3,500 shares, 4,000 shares of Meta at like 92 or 93 bucks. I remember talking about it on Finance Junkies, and fucking I even got a congratulations from Kris Patel. When you get a congratulations from Kris Patel, you know you got a good fucking entry point. And this motherfucker was real long on some calls on Meta at the time as well.
Yeah, but so hold on. Let me make this point here. And Kris, I got to get your take here because this is Chris's point. I think Chris's point is you're buying the long call to protect your covered call getting in the water. Chris's argument is, what if you just buy the long calls in general? So how do you square up on that side of the debate? And Kris, let me give it to you first on explaining that part, and then we'll go to TJ. Kris, you're muted.
When it looks like a company to me is oversold and it's in a position where it's got a lot of legs for a giant recovery, that's not the time where I want to try to limit, my upside, and instead just buy straight up calls and just let it do its job and just go up. And I don't have to worry about anything there. And I usually do it via leaps. Once again, leaps that are mispriced because you have underlying value of the companies not being captured by that option premium, right?
But Kris, if TJ has the long leap to protect his short call,
I think what I could do when it's my turn is I could just show my SoFi position and kind of justify the position of that.
Yeah, we'll do that.
The key is how much collateral are you putting up for that trade? So my thing is when things get really, really value centric, that's when my collateral allocation goes up significantly, right? And when things go up and up and up and the valuation becomes untenable, that's where my collateral gets pulled out because I know that the chances of it not performing that well are starting to kind of diminish over time. So it's just a matter of risk management to the bottom or to the top. I don't look for income. Like I already have a full-time job. I don't need side income for some of this stuff. And the thing is, like, any income that I'm getting from some of my positions on what I'm doing, they just get reinvested back in the portfolio again. If I'm actively using that money, it's a different story. Like, let's say right now, TJ, I'm sure that you have a bank account full of money. That money is what you're using to live off of. You're not using the wheel strategy to basically generate a monthly income that you're paying your mortgage with, right?
You go ahead, TJ. You're muted.
Hello. So, guys, Kris said something very, very nuanced there that maybe a lot of people didn't catch. Kris already has a substantial income. Kris works in the medical field. I don't know how much y'all know about Kris. I'm not going to say much. I know he works in the medical field. And I'm pretty sure working in that field since COVID, those people get paid a lot of money because I know a lot of people working in the medical field. They're extremely understaffed, overworked, still underpaid, in my opinion. So thanks for doing what you do, Kris. And he's also former military, so thanks again on that one. So that being said, guys, I have different needs because I wheel for a living, but I'm also very, very fortunate because I draw a salary for managing the family fund. So I manage my personal finances around that salary, so the portfolio is able to grow without having to deal with a $20,000 or $30,000 monthly deduction to cover living expenses. So again, you have to set up your hamburger stand for your individual needs, goals, objectives, etc. And I think that's where these platforms are so awesome, but they're also so dangerous because they're like, well, I'm just going to copy trade. But TJ's needs are different than Jason's needs. You know what I mean? Like Jason is doing what he needs to do for his families and their goals. And I'm doing what I need to do for my family and our goals and our objectives, if that makes sense. But what I would like to do is just show y'all the SoFi position, if I could, Amit. Let me just get on the right one here. And this is the way that I set this one up. And this is what I do for a living, guys. I don't sell puts, get assigned, sell calls, have the shares get called away, start back at 1. That is wheeling 101, guys. I'm like wheeling 301. Like, that's not what I do. I used to do that, but I found that that was a lot of work to make a little bit. So if that is Kris's argument, I am on that side of the fence. Like doing that and doing like literally the steps 1, 2, 3, and 4, find a stock that you want to sell puts on, do that until you get assigned. And then you're going to sell cover calls until the shares get called away, because you essentially want to always be in cash, because that's what a traditional wheeler was, is somebody who always wanted to be in cash because they're kind of like net kind of bearish on the market. That was like the original wheelers from back in the day. Well, I'm not that. I'm more like net long the market, but I want to sprinkle in some income to lower the adjusted cost basis so that I could also live off of the portfolio eventually as well. And I want to own shares with other people's money. Like, that's the objective that I set out on. And I was like, well, let me figure out how to do that. So I landed on the covered strangle, or my version of it. So let's just look at SoFi as that example. And I got to run because we got to go get the car out of the shop. But essentially, so we got the 150,000 shares of SoFi at 725. So we're up a shitload of those. So we just stopped right there. And what has Kris Patel said? Buy shares of a company that's undervalued with pretty good fundamentals, and you're going to make a lot of money. Can we all agree that that part of the argument, you can't argue with that? He's right. Is that fair?
That's fair. Yeah.
Is that fair, Jason and Kris?
Yeah.
I'm just like, so I think his argument was like, okay, so total return on the shares, is that what we're looking at? 1.3 mil.
Right.
So solid. And then you don't really have a way to show net gain on the cash secured puts or
no, I do. I have a wheel tracker. And we'll get into the weeds.
I mean, so he's saying the comparison.
But I'm saying I'm going to show you all the entire position, because I think what happens is like,
you're right. You have to look at it holistically.
You interview the athlete, and then he says that one little thing, and they run with it on ESPN, and this guy looks like an anti-Semite or something like that. I ain't trying to do that thing. I'm saying I don't want to put myself in that position, so I need to show the whole thing or nothing at all, because that is not what I do.
You have one question when you're done, though. It's a serious question. It's a real question, and really
quick now or after?
Yep.
After.
We'll do it after. But guys, also, we're probably going to run through the bell, so I'm not going to ring the bell because we're having a good discussion right here.
Oh, come on, dude. We got 3 minutes.
Then I'm going to have to interrupt you guys when we're talking. So then we got to wait 3 minutes. We got to wait.
Look at this. Look at this. New highs. Look at Tessie, dude. I had 460 calls this morning, and I just sold them when I got bored. Here we are.
Okay, so TJ, we got Robin at 39.47. Go ahead, TJ, and then in 2 minutes I'll interrupt you, and then we'll.
No worries, dude.
Imagine Robin Hood closing over 40.
So we just stopped here, guys. We did pretty good. Do I have the best entry point on SoFi? Not really, dude. There's a lot of the Josh guy. Is that his name? Josh with the K last name. He got like 5 something. So he's better than I am as far as that goes. But I've got 7 open strategies. So I've got stock collateral 50,000. So what does that mean? I've got a portion of these shares up for sale via covered calls, and you'll see some of them. I've got 400 covered calls at 20. So theoretically, I've got my gains capped there, January of 2025, January 24, 25. If SoFi moons past $20, they could theoretically call 40,000 of those shares if I don't roll the contract. That's fair. Then I've got a serious problem over here, because I've got 50,000 shares that are already in the money at 15 for January of 2026. So there's a lot of people that are like, why do you want to put yourself in that position? Because instead of buying puts, I was like, well, I could get paid money for selling covered calls as a hedge to the downside. That's more advanced wheeling. That's why I say I'm wheeling 301. I don't like to buy puts. It just goes against my DNA. And I bought them before, and it never worked out for me. Kind of like Kris's puts on Palantir. You know what I'm saying? They don't work out for me. It doesn't work out for me. So I'm like, well, I'll just sell cash covered calls that I think are going to get challenged, but I'm okay because I at least got paid money. Take the freaking shares. The position is lopsided anyway. I want to get back into cash eventually. But then I started this is whenever there was an asymmetrical risk. I thought that SoFi was mispriced, and the Jesse Dows of the world. Kris talks about it all the time. When there's opportunities where you feel like the floor is here and the ceiling's way up here, you get more leverage by buying long calls versus than owning the shares outright, like dollar for dollar. This can make you a lot more money. So I started buying long calls, dude. I bought 200 long calls at 7 for January of 2026. I bought another 200 long calls at $5 for 26 January. And then I put the bulk of the position for sale at $20 for January of 2026 because I needed a lot of money to finance those long calls. So that is why I did that. And then I also started positioning myself with the performance stock units of Anthony Noto. So I bought an additional 500 long calls at $10 for January of 2026. And then I wanted to match his June because I think it all has to happen by June.
All right, TJ, I got to stop you there. We'll get back to you in 2 minutes, and then we'll finish out the SoFi discussion. Folks, what a freaking close into the day. Happy Christmas Eve, Tuesday, December 24th. The stock market is now closed. And what a close it is. 462 on Tesla.
That's insane, man.
That's insanity. That's up 7%.
Zoom out, look left,
$31.
and you just crack through the biggest area just now. That's a good one.
SoFi at 16. Robinhood, great day, up 5.5%. Palantir, third day in a row, closing above 80. Nvidia back at 140. You had Rocket Lab with a 4% day. MicroStrategy, great day, up 7.8%. I think Bitcoin just above that 98. Well, we're just below 99, 98,913 right now on Bitcoin. AMD was up about 1.3%. Apple, new all-time high, 258. And then Tesla, I think that's the star of the show, 462. The indices, S&P 500 got to 577 after JPOW did what JPOW did. We're at 601, up 1%, back to 6,000. Diamonds right here. We are green on the day, up about 1%, 432 on the Dow Jones. And then big tech QQQ, 1.36, still below all-time highs, but 529.96, not bad for big tech either. And VIX is below 15.
Yeah.
There you go. All right. That's,
wow, the dollar is still at the highs.
While the dollar is still at the highs. That is all right, TJ, back to you. So final summary on this position, and then we'll finish up.
So then I bought some long calls because I figured I want to sell some very aggressive covered calls because SoFi had been range bound for a while. The premiums were pretty good, but at the same time, I don't want to get in a situation where I'm capping my gains because there is a huge shortcoming with the traditional will strategy, and that's where you cap your gains. And it's kind of silly or even stupid to sell cover calls on a stock that's going to go parabolic on you. So I wanted to position myself to make a very difficult decision, and I'm hoping that I have to make it pretty soon. And that's, I want to position myself with this next round of cover calls or the one after that after earnings, is I want to be in a position to have all of my shares called away. And the only thing that I'm sitting on now is long calls, and I'll run the poor man cover call campaign on that because I'll free up over $1 million over here on share ownership. And then I can turn around and sell that on cash secured puts on the miners of the world, because I could bring in a lot more static returns that way. And then I have less drawdown as well. So that's how I position most of the trade. So it's not just like selling puts, getting assigned, letting the shares get called away via cover calls and making your little 2 to 3% per month. Like I'm doing that in conjunction with trying to grab the bag. So my saying on the channel is always keep in mind over the course of 3 to 5 to 10 years that the premiums are essentially the breadcrumb collection, but the loaf is the capital appreciation. But the breadcrumbs, the premiums allow me to stay in the game long term so that I can see an investment thesis play out. Because if it had not been for the premiums that I received via cash secured puts and cover calls along the way, I might not have been in a position to let the money sit there to realize that 1.3 or position myself to realize that 1.3. Now, if I could just show.
Let's get Chris's take on this. Let's get Chris. So TJ, we don't got to go through all the stuff, TJ.
But real quickly on this right here. So we keep the books, right? So it's like, well, how does it look? You know, all this stuff, right? So the cost basis on the shares is 1.1. The stock P&L is 1.3. Call profit. So I'm down on the cover calls because I've been rolling, but I've made 367,000 on the puts. And then the wheel profit, and then I have the realized stock because I've sold some shares along the way. And then I'm also up a cool $800,000 on the leaps themselves. So it's kind of worked out on all angles. And I think that is the issue with investing is people want to pigeonhole you to like one thing and one way of making money. My thing is, why don't you focus on one ticker and maximize the amount of ways that you can make money off of that menu item? Like, to me, I have a hamburger stand and I have menu items, and my objective is to make as much fucking money as I can ringing the cash register with that SoFi ticker over and over. So I sell puts, I sell calls, I roll when it makes dollars and cents, I buy the long calls when the opportunity is asymmetrical, and then I ride the shares up as best I can. So I don't
All right, let's get Chris to take. Chris, your thoughts on that?
I mean, if it works for TJ, it works for TJ. I'm more of the mind that there are times where stocks go down and they're great time to buy, and then when things go up, they're great times to sell. Take that money, recycle it back into the market, find more opportunities, and that's it. Like, sometimes you can buy like a great company, and you don't have to ever look at it ever again, and just buy it, hold it, whatever. But there's very rare businesses that you don't have to worry about disruption. Like Microsoft is one that you don't ever have to worry about disruption. You can buy it, hold it. It'll always exist, right? Like I don't see anyone even coming for them slightly. Amazon, same thing. But then you have other businesses that are very cyclical, like oil and natural gas companies. If you buy an oil and natural gas company, you best watch the oil and natural gas prices, because if you don't, you could get into severe trouble. So I mean, these are all concepts that I've had to learn with some very, like TJ says, with some very large tuition bills, and hopefully I don't make those same mistakes again. And sometimes
basically the conclusion is do whatever works for you. We went through fucking 3 hours of debating this shit to come down to do whatever.
I think that you have to learn who you are in life, and you got to
I don't
learn
know,
who you
man.
are in the market.
I can come in and I would tweak a couple little things with TJ, and I might double that. I might double those profits with 2 or 3 tweaks.
Jason, reach the fuck out, bro.
I'm trying. This is me right here. I asked a question. It was very simple. Why even own the shares if they don't pay a dividend?
Yeah, and that is exactly what I am leaning towards. And I want to give a shout out to David Jaffe from Best Stock Strategy. I did 2 streams with him, and he was like, dude, I feel like you're doing everything right except one little thing. You don't need to be owning these shares. Just go along the stock, run the poor man cover call campaign.
Exactly.
Your bread and butter is cash secured puts. You'll probably make an extra $1 million or $2 million a year. Yeah, and I've been working towards that. But dude, I'll be honest with you.
I'll help you. It's all about strike. So
there's an emotional component. There's an emotional component in some of your stocks, dude. It's hard, bro.
It's fun. Stocks it's options are more about timing than price in general. It's very weird, right? Strike selection. The Greeks get a little funky, especially with leaps. VIX at sub 15. Yeah. This is a special situation in the market. Honestly. And Chris will tell you too, leaps don't always make sense. More often than not, they don't make sense. But right now, for the last, call it, I'd say year, they have made sense. Maybe 9 months, they actually have made sense. But before that, they did not.
That's a good point. If we get into a little bit of a flat market, leaps are not going to work.
No.
And that's something we have to think. That's when TJ's wheeling is going to make a lot more sense. It's just that leaps have worked so well this year that Chris has been right this year that leaps, like the cover
they don't always work. Most of the time, they don't actually work, because leaps, if you guys don't know, are more sensitive to volatility than they are to price action. You can see that in one little Greek.
Well, that was my point. That's what started this initial debate. I think leaps don't work all the time. Chris's argument is if you find the right stock, it tends to work.
Chris's argument was if you find the scenario where they do make sense, because it's stock to stock, right? Because volatility is not based on a broad market. It's only relative unto itself. So the VIX really has no bearing on anything, right? And each stock has a different volatility. Even if something, and TJ knows, Riot might have a 200 IV, but 200 IV to a random person, they might look at that and be like, oh, that's crazy out of control. But for Riot, quite frankly, that might be run of the mill. That actually might be cheap. So volatility is only relative unto itself and that specific underlying. And Chris's point, I think, is he's able to find the scenarios where those specific underlines are mispriced.
So what we need is Chris and TJ to start a fund. Chris does all the spreads. TJ does all the wheeling. We need to buy into it and let them take us to the moon.
And then I think Jason needs to do the when it's going to rain and how big are the raindrops and all that stuff.
I just honestly, my thing is, dude, I can take any trader that's already good and make them freaking world class. That is what we do best. And I'm telling you, man, you got a lot of it. Small little tweaks, and it's like running.
Chris,
Well, I'm
But
always
I do run. That's funny. I run exactly the same setup in terms of payment. I have everything in a trust, trade in a trust, and just pay a salary, man. So we're similar.
Guys, I got to run the Porsches and the
Appreciate
shop.
you, dude. Merry Christmas, man.
Appreciate you guys. Merry Christmas, happy holidays, Hanukkah, Kwanzaa, whatever you do, it's all good. Appreciate you, Amit.
You'll be back on the channel in 2 weeks. We'll start our January.
You're doing your thing. Chris, appreciate you, brother.
Say it. Take care, man. Start working on your taxes. Get all your paperwork together now. Don't wait until last minute. That's
Just
a
file the
freaking
extension
letter,
already.
a letter
That's the
right
extension,
here,
right?
bro.
That better be the extension.
That's the IRS saying you owe some of that wheeling money, sir.
Oh my God, dude.
You don't got to show it.
Oh man, I'm stressed out.
Next time we see TJ on the channel, it'll be January.
Right there.
Hey, Jason, reach out. Let's talk.
We got some stuff starting soon, so we're coming off like a super busy moment, so we're cooling down. You got to connect.
The one thing I'd say be careful of is if you have money that you owe in taxes, make sure you put that shit to the side. Don't mess around with it. The reason why is because you don't want to be like, oh, you know what? I have to pay the IRS in April, and then you take a giant portfolio. You take the money that you're supposed to use for taxes and you invest it, and the position goes downhill, and now you're scrambling to find money to pay the IRS. Don't do that. So if there's gains that you've already had, like I have right now a good amount of money that's sitting in my bank account, and it burns me. Like every day I look at it, I'm like, I should just take it. I should just invest. And then I have to control myself. Don't do it. That money belongs to Uncle Sam. Make sure you keep that shit to the side. So that's what I've been doing.
I gotta go, guys. Peace out. Appreciate you guys.
See you, DJ. Talk to you next year. And then there were 3.
I talk to you like next year. That's the thing.
Yeah.
So Biddy, I want to see Biddy close, get us over 103, man. If it can really do that.
Dude, guys, we've been streaming for 4 hours and 25 minutes.
That's nothing, bro. We had that election stream. That was like 12 hours, bro.
Yeah, it was long.
But it's Christmas Eve.
Yeah.
It is Christmas Eve, dude. How are 1,700 of you guys just with us? Like you have nothing to do, no family.
Like nobody's working right now.
Dude, everyone's just like, this instead of watching the Grinch, they're watching us just like yap about options.
They're like, there's nothing until freaking Squid Games 2 comes out. So what's the point, right?
No, but in terms of a compromise, Chris, and this will probably be my portfolio next year because Chris knows a lot about like specific moves in my portfolio and all this stuff. I think there's going to be 1 or 2 big call debit spread plays, and the rest of it is going to be stock and then puts and calls on the selling side. And I think that also is not the worst idea.
What I tend to do is I take asymmetric bets. If it works out really well, I take some of that money, put it towards taxes, take another portion of that money, put it into fixed income, and the rest of it I just recycle into other opportunities. And basically now my fixed income portfolio is generating me a 6-digit return. So now I'm kind of chilling, right? The ultimate goal for me when it comes to investing is letting my money make money, but then let it keep compounding on itself and just keep doing more and more and more. And basically over time, basically de-risk, right? The last thing you want to do is be up $10 million and then wake up and you're down to 1 million. Like to make that bankroll back to that $10 million again, it's going to be rough. So I don't know. Everyone's got their own different things. My thing is next year, the market is not going to be rich with opportunities. So you have to be very, very careful.
Yeah, man, Oakland, it's nasty out here. I was sitting in the car coming in the office, like it's boring.
All right, so I'll be on probably for like another 10, 15 minutes just talking to you guys. Jason and Chris, you can stay as well. And I was just going to ask the chat, what are you guys doing for Christmas Eve?
Wait, before you do that, is there one specific stock, Jason or Amit, that you guys are looking at that makes absolute sense next year? Like that you can't find a downside towards?
Well, you've already articulated this.
So there's a difference. Like there's like the moonshots, you're going to find a downside, right? It's the risk reward.
I really like Grab, bro. I really like Grab, but it's not an original idea from me. Sam kind of got us into that. And Chris, I think your thesis is so spot on. I think the spreads you're in make a lot of sense. I like Grab. I think it makes sense.
The only thing I'd be careful with Grab is
The currency exchange.
Currency exchange, yeah.
Yeah.
Currency, like whenever you're dealing with foreign companies, dealing with the currency headwinds can.
But don't you think the dollar has to come down at some point? Like
The dollar is overheated right now.
it's
dude.
very
overheated. I agree, it's super overheated. So
hopefully that's a tailwind, but we just don't know.
yeah. I'd say right now, man, if you're not looking at Google, I don't even know them, bro. Google,
Oh, let's start this debate. Let's start. Christmas Eve just started. Hold on.
The only 2 buys I bought the other day, well, there were 3 buys that were just, 2 were easy no-brainers because I didn't have a huge list. That was Amazon and Robinhood. And then the third, which was a new position, although, I didn't get a whole lot, was Mercado Libre, but like, it wasn't Google, bro.
I like.
Okay. Chris, 2 minutes on the clock. Give me your Google bull case, then we'll get Papers rebuttal. Go ahead.
I'm looking at from the fundamentals of business. I'm just seeing a ton of growth when it comes to their cloud business, and then on top of it, their margins are accelerating with cloud, and they're very well positioned to capture a lot of that AI cloud spend, and their margins are going to be better and better and better. So I'm looking at it from that perspective. And then also the amount of share buybacks doing. Like I love Amazon too, but Amazon is not doing nearly as many buybacks as Google is, right? Google is really investing hardcore, and Google now is stripping costs. Like even though their operating margins have gone up significantly, like the other day, you just announced, what's his name? Sundar's like, yeah, we're laying off a good portion, not a good portion, like a percentage of our management staff because we're a little bit bloated on that side. So it's always efficiency. And now Google's even paying a dividend. Like, so you're going to end up catching all these dividend investors probably jump into Google. So, and among the Mag 7, it's got the lowest forward earnings. So Google to me makes absolute sense. I mean, maybe on the technical side, I have to see like where it is. It definitely was oversold when it was 166. I haven't checked the RSIs lately, but for 1 year out, I don't think it really matters that much. I think Google is one of the most underrated or undervalued companies in the Mag 7, and I think they're going to do really well next year, especially once the earnings estimates get readjusted higher after Q1, Q2, because I think that's what's really going to set the tone up for Google going forward.
Jason, is Google the buy of 2025?
No, I don't. Google is always undervalued, and it has been the most undervalued of the Mag 7 since the Mag 7 was like created. There was a very small period of time when it was outperforming or at least equally performing, but compared to Amazon, it's not. So I guess the bet is that you'd have to believe that all of a sudden Google gets more traction than Amazon, and it's more of a catch-up play than a leader play to me in that regard. So I don't disagree that it would go up. The only thing for me is like, is Amazon here at 230 a better buy than Google at, what is it, 196? And I think that, to your point, maybe there's less downside in Google, but to my point, I think there might be less upside in Google over Amazon. So more upside available on Amazon.
So here's my question to you: what are, and I'm going to just go with straight fundamentals. Okay, so what are some of the fundamental catalysts that Amazon has next year?
I think that next year so everything you said about Google, I think exists to an extent in Amazon, right? But like for me, I've never been a big Amazon bull. I haven't been a big Amazon bull for a very long time because I didn't really want the e-commerce part of the business. And I think next year is the year that actually changes. They are a cloud leader for sure, while Google is a catch-up play in the cloud space. But and Amazon also has kind of like a wild card if they do develop their own silicon. But that aside, I think just on the basis of them potentially getting real traction in the e-commerce piece and generating real profits in that piece of the business, while the whole of cloud spend continues to, tide lifts all boats, continues to grow while keeping like dominance in that sector, I think that Amazon presents a better upside scenario for next year.
Yeah, I guess we'll see right next year what happens. But both the plays are good plays. Like,
yeah,
among
I
The
don't-
answer
I
is
don't
long
think Google-
QQQ next year, no matter
I
what.
think Google's amazing if Sundar's out, right? If Sundar's gone, I'm all in, baby.
No, Chris, we got to defend our fellow Brown. We can't let him talk shit anymore.
What can
We can't-
Brown do for you, right? I mean, yeah.
Like Chris, defend Sundar. You got to defend him.
I mean, I'll just pull up some data, and once you see the data, it's like, okay, there you go. Hold on one second.
I've just been burned too many times. It's like I was way heavier Google all of this year over Amazon and last year, and I think the year before that for just like very basic fundamental. I think you're right. Like I agree. It's the most undervalued, if you will. Like is the cheapest, not undervalued, but it's the cheapest. But you know it's the cheapest for a reason, and it's all year and the year before they just kept fool me once, shame on me, fool me twice with the AI failed launch. It was just too many times. So I think that, and the fact that still happens to an extent is a core management issue of letting that kind of stuff go on, which is why I said what I said.
Yeah. Well, so the main catalyst that I see from from fundamental standpoint, number one is their revenue growth, and I like looking at things on a TTM basis. Right?
Jasper, look, can you highlight that from Jasper? Sundar sucks the fellow Brown, bro.
It's all right. It's all right.
Oh God.
So if you're looking at purely from revenue standpoint, their revenue have actually started to reaccelerate. A lot of that reacceleration is actually coming from some of their, let me just show you 1 second. From one, Google services is doing really well. Okay, there we go. Okay, so you can see here, Google search, let's just strip out Google search. That's their main business. It's doing really well. What I like seeing right now is seeing Google Cloud, right? Which is one of their smaller pieces. Google Cloud literally in 2020 started with $9 billion in total revenue. The thing's gone up to almost 35 to 36 billion in revenue. Okay. Huge.
Oh yeah, but that right there is the whole reason why I owned it during that exact period of time. I owned it through that whole time, and I didn't get that's why I owned it. Expectations are high.
Now, one of the things that I like about them that this time around, that I think next year is really going to catalyze, their operating margins are growing significantly, because look at their operating metrics. If you strip out research and development, look at their operating margins. I mean, their operating expenses. They pretty much flatlined it, and they're actually going down slightly. Okay. So here you can kind of see that not only are they growing their top line, but they're becoming more efficient. And as they're becoming more efficient, they're utilizing all that additional cash flow to buy back shares at an accelerated pace. So where's their share count? Right here, repurchasing of shares. This is what they're doing with their additional cash flow, buying back a crap ton in shares. So if you project out going forward what the earnings is going to be like, probably here in 26 and 25 and 26, their earnings growth is going to actually be accelerating with a huge ROIC already of about 20% year over year. These numbers right here that you're seeing, this is actually under what's likely to happen if they hit all their targets that they're looking for. My bet that I'm making with Google is that, number one, Google right now, the earnings estimates that are out there are actually not capturing the total upside that's actually possible. And then at the same time, if you look on a historical basis, on the forward PE basis, let me just pull that up. On average, where's the best one? Usually metrics. Ratios. Okay. So if you look at on a forward PE basis, you can see Google typically trades at around a 22 to 22 PE. If you just calculate that out for 2026, what the forward earnings is going to be at that time, which is around right now, let's see, forecast. It's going to be about $9.23 according to estimates, right? I think it's going to be closer to 10. They've always been beating their numbers. If this is closer to 10, you're looking at 22 times. That's forward. Sorry. So forward would be right here, which is around. This would probably be 11. So at 11 times 22, that's when you would get 11 times 22 is what? 240, 250.
Hold on, let me do the quick maths. I'm good at this.
Yeah.
11 times 22. That's 242. That was quick maths.
Is that your target for Google?
So my target for Google is around 270, believe it or not. Because the thing is, I'm not looking at these EPS numbers. I think these EPS numbers are BS. I think they're going to re-rate them much higher in the future. So I have to look at my information where I
Kris,
have it.
do you think Tesla outperforms next year or Google?
Google. I mean, fundamentally, you never know with Tesla. Tesla doesn't trade on fundamentals. Tesla trades on.
So Kris is giving Google 35% upside target for next year, right?
Yeah.
That is, dude, Kris, that is aggressive, bro. To compound at 35% on a Mag 7, that's not easy.
Dude, if you're buying back that many shares, your EPS is gonna go. It's literally like a coiled spring for you, you know. And with cash flows right now that they're likely to keep generating forward, right? So let me just right here. So if you look at right now their operating income, right now it's almost $109 billion a year. Look at that monstrous freaking number. Okay. The only thing is right now they're expensing a lot of in what is that thing called? CapEx. So you can see here where's their CapEx spend. Continue operations. I mean, even if you just look at their shares, look at this share count, man. They went from literally 14 billion shares outstanding to now almost like 12.5. And literally the next 2 years, it's just going to be every year buying back more and more shares.
Yeah. Hey, look, it's a fair point. It's if any Mag 7 were to compound next year outside of Tesla, because it doesn't trade on fundamentals, I do think it should be Google because it's cheap.
Even their EBIT margins, look at their EBITDA margins. They're all-time highs right now. I mean, I don't see Google even remotely getting like right now. The biggest challenge is everyone's like, oh, Google's getting disrupted. And I'm like, yeah, I don't see that happening. So ChatGPT and all these guys have been out for the last couple of years, still hasn't impacted them. So their operating margins, like I said, they're improving, and I think they're going to keep improving because of the efficiency that they're gaining. And literally, if you look at their, I don't have everything because this is my laptop, but I have a lot of data points, especially among their cloud. Right now, their cloud segment generates about 11% of operating income. By 2027, they're going to be doing close to like 20, maybe 30, well, between 20 and 30 in operating income from that segment, which is what is in line with AWS and Microsoft Azure. So if they're increasing that portion, it just adds right back into their bottom line. So it's like a high margin business growing another high margin business. And then you got this other bets situation going on with Waymo and all this other stuff. So we'll see what happens with that. So
got a green day. There's the heat map, folks, for the end of the year, for the end of the Christmas Eve. And hopefully Google and a lot of these other guys continue to compound next year. Tesla 7%.
Post that. That's a beautiful heat map, dude.
No, I posted it. Yeah, I posted it. This is green, bro. Kris, I mean, this is like, I didn't expect this much green today.
I mean, this is Santa Claus rally, right? This is like supposed to be the next 7 days of the best years.
The next 7 days.
Was it the last 7 days?
NVIDIA, by the way, did not
last
have,
7 days, yeah.
did not have. Dude, NVIDIA got rugged like towards the end. It's
yeah,
I think they were having some little CNBC bashing, but I don't know. Although I would say my target on Amazon next year is like 350, so that's like 50%.
What? Based on what? Please tell me how Amazon's going to look at 350. I need to know this. Without
it doesn't have to be super rational. It can be irrational, and I would say something like it could have the breakout year.
How? What's your logic,
dude? I just gave you my logic.
No, you just said it could have a breakout year. That's not like, what's your why?
Oh no, like the e-commerce piece. Like there's a whole cohort of investors that haven't been in Amazon, right? And we do believe that cloud's still going, and I do believe they're going to be.
Yeah, but 350 is aggressive. That's like almost 4 trillion.
Yeah. Aggressive.
Chris is at what? Chris, what is your market cap? 3.
I'm not saying it's gonna close there. I'm gonna say at some point. Yeah.
Believe it or not, Amazon and Google are both like neck and neck in terms of market cap. So Google and Amazon right now, they're about 2.4 trillion. With Apple trading at what, like 4 trillion right now?
Basically 4 trillion. Yeah.
And Apple has flat growth, but they've got just shit ton of share buybacks. I'm telling you, man, this people are really underestimating the power of share buybacks. Like super underestimating that.
Should Google put Bitcoin on the balance sheet, Chris?
Hell no. Buy back more shares at Google.
Every time I ask someone about that, they're just like, no. Like, I don't want Robinhood to do it. I don't want Palantir. I don't want anyone to do it. Except MSTR.
Because then you'll end up trading as a proxy, man. Like, you don't want to do that. You don't want to, like, people want to value based on the fundamentals of your business, not based on the underlying assets. You know?
Yeah. All right. Do we end it here, boys? It's been almost 5 hours. Maybe we got to do this every Friday to get a green close. 5 hour.
Bro, I just pray that all of us have the patience to deal with the freaking down years too. Because remember, not every year is that up year. And I think what it is right now we can be all jolly and everyone's happy. But man, when those down years come, this turns from like a celebratory group to like a support group real quick.
Well, I mean, look, the next 2 years, I feel
like you remember, Amit, that time you were up 700%. Like, yeah, man, I remember that was so funny.
Dude, that's why I rolled the Robinhood options before India. I was like, there's no way I'm gonna be in India crying, bro. There's and then I get to India and every day is green. Robinhood's at 27, fucking Palantir's at 42. And I'm like, okay, so I guess we're in a really big bull market. And the question is, does that go away in 2025, or is AI and all this stuff so big that we're underestimating how long we really should be? I think that's going to be the question of 2025.
Goddamn market, yo. I hate that shit.
Hate what?
I wish everything would just go up and to the right all the time. That's it, you know.
Well, then Jason couldn't short MSTR if that happened. So,
are you shorting MSTR, Jason?
Yep, he's short.
I have a little short. I don't really even care, dude. I'm a little short MSTR.
Shorting MSTX. He's doing well on that.
Shorting MSTX. What is
that?
No,
he bought MST. He bought MSTZ, and that's basically a inverse MSTR. And he's getting a lot of shit.
No, the option premium is a little much on that. I don't know that I'd get the same. And I honestly, it's just look. I have a lot of crypto. If I'm short something as a hedge, I'm at least it's here. If some shit goes down. But, you know, I don't really, it's not like that big of a deal to me.
Yeah. All right, guys. I think it's time to go spend some time with our families.
Yes, sir.
Yes. Let's do it.
Merry
5
Christmas,
hours.
Guys. I love you all.
I love you all. First of all, super grateful to you guys. Real quick, let me put Jason's Twitter in the chat. If you want to get more from Mr. Paper Gains, you can follow him on Twitter. I'll put Chris's Twitter as well. To the 1,600 people here, we will not be live streaming tomorrow. Enjoy your Christmas. Enjoy your Christmas Eve. Thank you all for being one of the best communities on the planet when it comes to YouTube finance. I think we got a hell of an argument that this is the best community out there. And it's because of people like Jason and Chris that are willing to spend time out of their day and hang out with us.
Yeah, and if you haven't liked and subscribed, please like and subscribe to this channel because I think Amit does a good job of setting up the StreamYard links. So, you know, you should show appreciation for that.
I appreciate it. And
I appreciate all you guys and you and the guys in the chat, dude. This is crazy to see this many people hanging on Christmas Eve. I'm going to get yelled at, though, because...
Oh, you're going to get yelled at. You've been away from your wife and kids for fucking 5 hours, dude.
I told her it was a half day, too. Luckily, we don't get too...
By the way, everyone who donated and gave a super chat, thank you guys for making my Google position even better. Because pretty much Google just robbed Amit. See, people think that this is all going to Amit. Nah, bro, half of it's going to Google, baby.
This is why Chris wants you to like and subscribe. He just wants YouTube to get bigger. That's it.
That's right. Pump my bags, baby.
So we have.
I love you guys.
I love you guys. We have 1 day off, then we're back on the 26th. 1 day off, then we're back on Thursday. Thank you, everybody. We'll see you guys.
Super sticker. Adios.
Bye, everyone. Merry Christmas. Happy holidays. Have a good one. Good night, guys.